Good morning, everyone, and welcome to the virtual FinTech Forum. Today is our third version of our flagship event, which has been supported by Invest Hong Kong and Start Me Up HK Festival throughout. This year, we are an affiliate event of the Start Me Up HK Festival with support as Platinum partners, AWS as our bronze partners, University of Hong Kong FinTech and SCF FinTech Academy as our premier event partners, along with Hyperglade. I'm very delighted to have all of you join us today as we have an exciting lineup of thought leaders, startup showcases, and discussions lined up from speakers across Asia and beyond. It gives me a great delight to not only welcome somebody who is a champion of startups and fintechs in Hong Kong, but somebody who's been a great support to both myself personally, but also our event throughout. He's a big community support without which I think a lot of Hong Kong's fintech and startups could not have thrived. Mr. Charles Ng, who heads the sector specialist group helping overseas and mainland companies to establish or expand their business presence in Hong Kong. The 9 sector specialist teams grouped under 3 clusters, namely technology, innovation, and entrepreneurship, fintech, financial and professional services, and lifestyle and creative industries, offer a one-stop shop service to help startups, scale-ups, small, medium enterprises, and multinational corporations tap into the opportunities Hong Kong, the GBA, the mainland, and Asia have to offer to grow their business. He has worked for companies in the manufacturing, trading, and financial services and banking sectors in Mauritius, Canada, and Hong Kong. He speaks 6 languages, of which I think I've experienced at least 3 or 4 of them, and dialects, and holds an MBA degree awarded jointly by the Business School of the Hong Kong University of Science and Technology and the Kellogg School of Management of Northwestern University. A distinguished guest, Mr. Charles Ng. I'll now hand it over to him for our keynote speech to kick off VFF 2022. Over to you, Charles. Thank you.
Thank you very much, Mushir. Very good morning to you all, distinguished speakers, distinguished guests, friends of our very diverse ecosystems, ladies and gentlemen. I would like to thank the organizers of the VFF FinTech Forum 2022, especially Mushir and Sherry, who have really amazingly put this program together, gathering experts and industry leaders from across so many sectors. A warm welcome to you all for joining us this morning. And it's quite amazing to see how entrepreneurs like Mushir and Sherry have been able to really demonstrate how they are real entrepreneurs in adapting to the circumstances. As we all know, we have a typhoon this morning, and last night, things would change very quickly, and we're all online today. So kudos to their organizations and the ability to put this program together. I'm sure you, like me, you're all very excited to see the evolution and rapid growth of our fintech ecosystem to what it is today. We actually have come a long way. When we started the Start Me Up Festival in 2013, 2014, and the FinTech Week in 2016, 17, insurance companies, financial institutions, banks, etc., were quite worried about whether fintechs were going to displace their business. And that we're of course delighted to see today that they are not only partnering and embracing the fintech solutions that many fintechs from around the world are coming up with, but also really co-creating solutions with them to come up with some unique business models that could offer a unique customer experience as well as a new business proposition, a unique proposition that would power them into the future and enable them to come up with some unique proposition to their clients. This is year's FinTech Week. We're going to be talking about, as today in this forum, which is very exciting. And I was very pleased when I saw Mushir's program coming up with what you and Sherry have done in bringing in these champions, because the subjects today, from anything from the Industry 4.0 that you'll be hearing this morning from investors, as well as from ESG and also the various adoption of sustainability in fintech. It's I think this is really a testimony of what it is. And where I sit at Invest Hong Kong, when we talk to clients, from different sectors. As Mushir has explained earlier, oversee, we had 9 sector teams, which are clustered in 3 sort of groups. You have the financial services, fintech, family offices, and professional services. And I can tell you, in all 3 of these sectors within this cluster, we see that not only, of course, fintech is driving, but also adoption by not only banks, insurance companies, but also more like asset management and every other sectors nowadays within the financial services area. And I can tell you, we just formed a family office last year. And this is quite amazing to see how interested they are, family offices, when they are investing in portfolios. They are looking at fintech solutions and also all these areas that are going to be discussed today. Of course, ESG, Industry 4.0, reindustrialization, and so on are very, very interesting to all these people. Now, of course, the adoption of fintech nowadays, what we're going to be hearing, the Web 3.0 as well as the NFT, we see that the fintechs are coming up and joining forces with cross-sector, cross-industry, from fashion, where we see chips being embedded in the clothing, and to also the enhancing the customer experience for retail and e-commerce. And the whole evolution in payment that we've seen happening is astounding. And I think we will continue to see that. And the great thing about that is that the consumer, B2C, is really taking off. So this year, we're seeing not only the adoption of fintech by other industries, but also the acceptance of fintech by the general public. And a lot of the B2B and B2C are really exploding in Hong Kong and around the world. So we're very excited to see that. And when we talk about the sectors that I oversee, for example, creative industries, we see also that the people that are in the creative industries like art and culture are also adopting fintech. NFTs, of course, but also in terms of payments and solutions for that. And this is only the beginning of the story. We're so excited at Invest Hong Kong to see the number of projects and companies coming to us and say that, we're really keen in adopting fintech and fintechs in our solutions. So our team at Invest Hong Kong, and you will hear from King Leung later on, is really championing a project where we sort of what we call a sort of global program where we are helping connect the fintechs with all the institutions. And we started with, of course, the financial institutions and the banks, but now we're expanding it to other industries as well, because we see not only the need, but interest, but something which can make a difference, where these industries, as we call them more as a traditional sector, they are really adopting as the technology and fintechs to the next level. So we're extremely excited to see the adoption of fintechs across industries, from transport, and also you'll hear about the Industry 4.0, as well as the various areas in consumer products, tourism, hospitality, as well as the various areas in creative industries. And of course, last but not least, the innovation and technology area, where we see really major adoption of technology enablers, as well as the fintech solutions, which companies from around the world are coming up with. So we're extremely excited to see also how our partners at Science Park and Cyberport are also putting out programs to enable companies in fintechs and also the large companies to co-create solutions and to adopt these solutions as they move forward. And the amount of inquiries we're getting from different people across these different industries, just asking about how can we get into fintech and how can we use fintech to adopt in our industry so that we can create a competitive edge, is really amazing, and also not only very promising, I would say, to all of us as where we speak. And so it's, I know that there are now, the other thing which is extremely important is that the convergence of technology, which is making actually the fintech companies that were already doing a lot of new solutions are coming up again with adopting new methods and new technology for that. So with today, and I'm extremely excited to the various panels of speakers you're going to be listening to, the experts from the areas of the future of payments to also the future of fintech adoption in ESG and sustainability, as well as fintech for Industry 4.0, and also the exciting fintech GBA that we're seeing a lot of synergies there. So with that, I'd like to wish you all a very good forum this morning and hope that you will all enjoy the insightful discussions and also exciting new revelations you will hear from the various panelists and keynote speakers. So with that, of course, I'd like to also invite you all, as we're coming up in the next couple of weeks, we have a few very important key events. The Start Me Up Hong Kong Festival 2022 will be happening in the week of the 5th of September. And we invite you all, it's going to be a hybrid event, and we invite you all to attend and join where you will see a lot of that convergence we talked about happening. That's a whole week long of events that will be happening in the week of the 5th of September. And of course, our FinTech Festival, which will be FinTech Week, the annual FinTech Week 2022 will be happening from the 31st of October and 1st and 2nd of November onwards. During the whole week, we'll hear a lot of very exciting things. So last but not least, I'd like to thank again Mushir for really, and Sherry for championing this event for all these years, and wish you all a very successful discussion and event today. Thank you so much.
Thank you very much, Charles. We're very again honored to have you speak at our forum to kick it off. And we're really looking forward to the rest of the day, but also the Start Me Up HK Festival and Hong Kong FinTech Week. Hong Kong FinTech has remained resolute over the last few years and growing in strength, and we're looking forward to opening to the world very soon. So thanks once again to you, as well as the entire Invest Hong Kong Start Me Up HK Festival team for the support for VFF. Thank you. To the audience, we'll soon be switching to our next panel, which will be our opening panel, which is looking at family offices and private wealth in Greater Bay Area, looking at Wealth Connect and Wealth Tech. So thank you very much, and please hold on for the next panel that will start in 3 minutes at 10:15 Hong Kong time. Thank you. Thank you, Charles.
Thank you.
Hillary, let's maybe go backstage.
Okay, do I need to leave or?
Just go down and press backstage. That's it.
Okay.
Yeah, you can see the button. Yeah. Thank you. Okay, guys, we are live.
Okay. So, good morning to all the participants to attend our VFF events 2022. Today, I have a great pleasure to have 3 heavyweight panels to share with us about the topic opportunities arising from Wealth Tech and Wealth Connect. So we have Helen Leung, is from Mercer Fund Watch Solutions Leaders Asia. And then we have Chiman, the Raffles Family Office, the group CEO and co-founder. And also we have Neil Tang, the FinTech Association of Hong Kong, the chairman. So today we have a good opportunity to chat with each other on those opportunities. So we kickstart from here. So the first things I want to do is let the participant to introduce a little bit of himself or herself. So from a traditional point of view, normally we will let lady first. So let Helen introduce herself. Thank you, Helen.
Sure, thank you, Louis. Yeah, very glad to meet you all and be part of the panel. I lead the Mercer Fund Watch Solutions Asia. So this is a digital delivery platform of Mercer Funds Rating. So we hope that in this following sessions, we'll be able to share more views about how we see the wealth tech and also the digitalizations of product and services. For myself, before Mercer, I work for global asset managers and also work in global banks across different business. Thank you.
Thank you, Helen. So the next, I want to introduce Chiman. So Chiman, would you mind to introduce yourself to all our guests? Yeah, thank you.
Sure, Louis. Hi, everyone. Hi, my name is Chiman. I am the Group CEO and co-founder of Raffles Family Office. We are Pan-Asia multifamily office that has got, I would say, double headquarters in Hong Kong and Singapore, office in Beijing, Shanghai, and Taipei as well. We are really striving towards to be the leading multifamily office in Asia. So covering a wide scope, wide spectrum of services and products and things. And also some of you might know me as the founding chairman of the Family Office Association. So really what we are really trying to achieve is really to promote Hong Kong as a family office hub within Asia. So I think I'm very happy to be involved in this Start Me Up Festival, this VFF event. So happy, we'll be looking forward to share more with you later in the later part of the panel. Thank you.
Thank you, Chiman. So the next one I want to introduce is Neil Tang, is the chairman of the FinTech Association of Hong Kong. Thank you, Neil.
Yes, my name is Neil Tan. I'm the chairman of the FinTech Association Hong Kong. If you haven't heard about FinTech Association, it's one of the largest inside of Asia. We are an ecosystem super connector, basically between 4 different parties. One is obviously traditional banks, insurers, and other financial services. 2 is FinTech firms themselves. 3 is different startup platforms, such as accelerators, incubators, so forth. And 4 is really within the education system of different universities, whether it's inside of FinTech, Web3, blockchain, and so forth. Our key is connecting finance and financial services with technology. So things like general purpose technologies like artificial intelligence, blockchain, cloud computing, and big data are key points. We have a total of 8 different committees inside of the FinTech Association, covering those GPTs, as well as things like green tech and ESG, blockchain, DLT, and wealth tech and insurtech. So thank you very much.
Thank you, Neil. So the first question that I want to ask to the panelists is about wealth tech, so Wealth Connect. So Wealth Connect, we all know that that's launched nearly close to a year now. So we want to let the panelists to share a little bit about your view on the latest progress. So would you mind, Chiman, you can share with us on your view about the Wealth Connect.
Sure. Yeah, I think one of the great story that is coming out of this area is definitely the Greater Bay, GBA story, right? So really is when we consider that, out of the, I think 11 cities that are in GBA area, that, the real economy within GBA is really very formidable size, right? So I mean, if you look at from a many statistical point of view, for example, the GDP and the population here. So Wealth Connect is really about just providing the connectivity of wealth management products and on within this GBA area. But I think that the key is, at the moment, it's still, I would say, it's a very early stage, and at the moment, it's still applicable more to the banks that has got a local, retail bank and maybe fund products. So I think we are still at a very early stage, but I think as we move along, I'm sure that there will be policy and even other initiative and schemes to promote better connectivity. And I'm really looking forward to hope to extend to like independent asset managers, or family offices across Asia. And I'm sure it's coming because there's been a lot of talks within this. There's a lot of forum that I've attended that really want to connect this part of the wealth management industry, because wealth management industry is a very big spectrum. Because how do you manage wealth for somebody who's got $1 million in bank account and somebody with $1 billion in bank account? It's very, very different. The kind of services, the kind of products, the kind of infrastructure that is required is very, very different. So I think I would say that GBA is a big area, and it's not going to start overnight. But I think we are definitely heading in the right directions. That we are trying to connect the so-called wealth industry within GBA area.
Thank you, Jimmy. So also I want to also talk with Helen. What's your view based on like your clients' response or what you see the going forward the trend on the Wealth Connect?
Sure, thanks, Louis. I think we read that as of May 6th, there are a total of 23 Hong Kong banks which can launch and participate the Wealth Connect, and over 1,000 of funds being available for eligible investors under the scheme. These are all shown and listed on their specific GBA web pages. It does create new business opportunities in the 3 places by enabling cross-boundary investment and provide more options of wealth management products. As Chi-Man pointed out, we also think now is a very initial stage, and the product scope under the Wealth Connect now cover relatively simple wealth management products of low to medium risk. Where we expect next stages might have a wider product range and hence will present broader business opportunities and product options for investors and participants. Thank you.
Thank you, Helen. So now I want to also ask Neil, what's your view on that?
Sure, yes. So a little bit of background on myself before becoming the chairman of FinTech Association. I was the co-chair of the Wealth Tech Committee inside of the FinTech Association. So my background is coming from HSBC. I spent roughly around 3 years there as the head of business development for a digital partnerships and innovation team. So I understand the GBA quite well. We worked with various partners inside of this context, and looking at the sort of the aspirations, it's definitely a fantastic opportunity for everyone inside of the space. Obviously, baselining what the original construct was is 150 billion in terms of transaction value going from China on the China side and also on the Hong Kong side total. So 300 billion is the target, right? Ultimately, they're looking at roughly 1 million renminbi going southbound, and then northbound, same number, but in Hong Kong dollars. If we look at the sort of the key statistics, it had a very, it has its challenges in overall because of the pandemic, right? And I think it doesn't matter whether it's any of the connects. I think the global pandemic, it impacted all different types of industries and sectors and so forth. So it was quite tough as far as performance-wise, just because of this. Looking at the initial numbers, it's roughly at the market debut, somewhere around 33 million renminbi. As of April 2022, 940 million RMB in terms of total quota used, right? So you're looking at a total quota of 300 billion, only 940 million was actually utilized. The other part is that the initial target in terms of accounts was roughly around 300,000. As of April is 27,000, right? So you can see a lot of impact that the pandemic has had on this Wealth Management Connect in terms of the performance. So we hope that there's other alternatives or other areas that we can help to improve, but certainly we're moving in the right direction by launching, having some activity as far as account opening, as far as AUM is concerned. How do we facilitate even more of this cross-border activity? Thank you.
Yeah, thank you. I totally agree, because when you see the previous past similar policies like the stock connect, or like recently we have the ETF connect, it's similar. Like the first start maybe a little bit slow, but after that you have to more accelerate growth. coming few years. So now we'll come back to the second question. So after we talk about the Wealth Connect, so we want to ask the panelists, what will the major challenge factors that you think for the Wealth Connect, just after you mentioned you're going forward. So Chima, would you mind to share a little bit about your view on that?
Sure. Wealth Connect is is something that I have a lot to share about. But I think really to us, as a family office, what I think the key here is really about, I think a very common client in our universe is really let's say clients' assets is parked in different banks, different asset class, different financial intermediaries. So one of the key things that we always try to achieve is it's really about consolidating everything under a statement, right? So under one account, I just want to, the client need to see. So in this case, wealth tech is, there's a lot of challenges because, for example, I can give you some example. In the past 4 to 5 years, we have been trying to work with various wealth tech platform to consolidate back clients' private banking statements, which has not even succeeded, So it is really, there's a lot of challenges of banks coming together, and I think the key is really banks, having a standardized data feed to all the wealth tech, because the wealth tech platform is there, right? They are all ready to take in the information and really looking, I wouldn't say integrating, but I would say dissecting, different from different angle and even more information analysis to the end client. So, and that is why it brought us to the next part. As some of you might know, Raffles Family Office, we have announced last year that we will be launching another family office that aim at digital asset, which fundamentally is built on blockchain. I think that is what really the future should be like, because we will officially be launching this brand new digital family office later part this year in October in our annual forum. But the key thing is, before we even launch this part, the dashboard, the integration system is really in place. And by default, from day one, everything is up and running. So it's when I look at the efficiency, I mean, without looking at what the asset class is, what the returns is, what the risk profile and everything, but just the fact that the dashboard is able to take in all this information standardized from any other exchanges, or companies with pretty much a standardized API on the blockchain. I think that really create a lot of efficiency within the wealth tech system. And I truly think that this is how the future is going to be like. And with all this government, all this government coming up with different government-backed stable coin, I think this area is going to accelerate a lot faster than we think. And a lot of it is based on the foundation of blockchain technology.
Thank you, Chima. Thank you, Chima, share about a bit more challenging or trends. Now I want to also ask Helen about what, from your point of view, was your challenging factors for the Wealth Connect, going forward.
Thanks, Louis. I think GBA is a very new regulatory regime. So people, including the eligible investors of Wealth Connect, may need time to explore, understand, accept, and experience. So the pandemic does not help this process. And echoing also what Shiman just mentioned, I think the participating banks and also other service providers would also need time and resources at enabling systems, financial products, market and sales, and customer acquisitions. So across all these different functions, it will take time to get through. Yeah. Thanks.
Thank you, Helen. So now I want to ask you about what's your view on that?
Sure, I think I think critical challenges inside of GBA in general doesn't mean it's Wealth Connect, Stock Connect, Bond Connect, or Insure Connect, ETF Connect. Everyone has similar issues. Is inside of the regulatory and compliance piece, right? If you talk about how to get a uniform code across China, Hong Kong, and Macau, I think it's probably the biggest challenge. And that goes across everything from cross-border payments, data utilization, storage, analysis, so on and so forth, taxation issues, and so forth. inside of the context of Wealth Management Connect is the requirement to have in-person account opening. I think this is obviously with the whole pandemic and the different restrictions, whether it's quarantine and so forth, possibilities of improvement is leveraging wealth tech to do a pure digital play, right? But what Chiman and also Helen mentioned about blockchain is music to my ears because my real job, aside from being the chairman of the FinTech Association, is actually I am the CEO for a company called Neptune Digital, which is a blockchain company. And what we do is we are the only authorized legal and compliant blockchain inside of China on the blockchain-based services network, which is the Chinese government-backed infrastructure for blockchain. So we are actively deploying both B2C inside of NFTs, gaming, metaverse areas, as well as B2B enterprise solutions. And that's everything from supply chain to education to healthcare and so forth. So strongly believe that the leveraging of blockchain inside of a solution set for GBA is key, going across everything from KYC all the way on through to monitoring your portfolios and things like that. So yeah, I think this is definitely the direction that we need to go as far as, and I believe that China is pushing this very actively inside of these markets. So thank you.
Thank you, Neil. So after I listen, few of you, we get a little bit sum up that like for going forward, no matter it's GBA, Wealth Connect or further development, it seems maybe the possible solution for us is wealth tech. But however, when we talk about this term, always say it's too broad. So just I want to ask Jim, what you think, any specifics beyond you say about blockchain, anything that you think is a possible solution, especially for the Wealth Connect, you use particular wealth tech technology that you see will be beyond just, you say, blockchain. Any others you think there will be the possible solution? So let all the participants know that, and they would target how to implement it in the next phase. So yeah. Would you mind to share a little bit, Shiman? Thank you.
I mean, on this part, I think, the way I really see it is, okay, first of all, you got to look at the demand, right? I mean, today, if you look at, people talk about, blockchain or cryptocurrency, then straight away you think about, Bitcoin, you think about Ethereum, you think about all this, but the reality is, so when we set up the so-called the digital family office, are we going after this? The reality, the real answer is not. We are not going after the Bitcoin or the Ethereum, because right now this industry, very broad figure is what? Less than $1 trillion in market cap, right? So maybe half a billion, 500 billion, 600 billion, right? And at some point it was close to 3 trillion, right? But it's not small. But compared to the so-called fiat economy, which could be like 300-400 trillion, it's very small in that scale, right? It's comparable. But the reality is, a lot of government, I mean, it's in the news, Japan, China, Hong Kong, Singapore, we are all exploring launching government or Hong Kong MA or MAS-backed, stable coin. And this is where there will be a change in tide, which means that this 300-400 trillion of fiat economy is going to be denominated in government-backed stable coin, right? And that is when we realize that, oh, actually, our current so-called wealth tech or infrastructure that we have is not capable of accommodating to this part. And this is where I think this is why we believe that we literally have to build something from scratch. So that's why if you look at I mean, I wish I can show you the demo of the dashboard that we have. It's really not rocket science. It's really not rocket science, but really just integrating the custodian, integrating all the different product by different product supplier, and even very standardized product and into one platform. It's almost impossible in the traditional financial world. So really, when you can put this thing together and you have the next step will be to have an AI to really analyze what's happening, because going forward, as we all realize that the billionaire in the future, they are going to be younger, they're going to be smarter, which means that they want to be involved. They want to roll up their sleeve. They want to know what's happening. They want to be your co-pilot in navigating their wealth, right? So when that happens, if you don't even know where you're going, if you don't even know what you have, it's impossible, right? So it will still be constantly, out of the, whole day they are trying to manage their money. 80% of the time they're trying to figure out, okay, what do I have in which bank and what am I doing? Because there are 7 people telling me 7 different stories, right? Which is, in a way, I think in the future it will be unacceptable. So I think really the wealth tech, we got to start looking at, building I would say, almost a brand new ecosystem on the foundation of blockchain. And then we got to understand that, and in future, I mean, it's something that I keep telling my team and people around us is that in future, if a family office that come to us today, if they come with 100 million, it's probably in different currency, in fiat. But tomorrow, which could be in 12 months or 18 months time, they're going to come in 100 million, but 20 million will be in stablecoin. So do we have the custodian? Do we have the product? Or do we have the tools to address to their needs? I think at the moment is no, we don't have it. So really, as an industry, I actually believe that in 6 or 12 or 18 months time, we're going to scramble. A lot of us is going to scramble, but you can see a lot of these big, traditional financial intermediary or companies, firms that are trying to come up with, custodian service, different products, and you can see, every day, every 48 hours, you see some news popping up everywhere. So I'm still very, very bullish and very optimistic that this is going to happen. But it will be some sort of scramble in the beginning. But I think eventually when we get there, the wealth management industry is going to, in the next 5 years, when the amount of change that we're going to see is going to be more than the 30 years. Because if you look at the statement, the kind of statement the banks they give you, and 30 years ago, 20 years ago, and today, there's really not a lot of improvement. But what we're going to see in the next 5 years, based on blockchain foundation, that statement is going to tell you a lot more. So I think really, I'm very excited about this part of the changes that's coming. So really, I think the only possible way or tools that has enabled us to make this happen is really the blockchain technology.
Okay. Thank you, Chiman. So now I want to ask, I've listened to Chiman. So Helen, what you think about what's the wealth tech on your side that you think will be helping those people or those firms that they want to target? Yeah,
sure. Agree that wealth tech is a possible solution to Wealth Connect. And as we agree that need to continue to be creative and innovative to apply technology. So not just on existing solutions, but also to create new solutions. We see the digitalization across platform, distribution, and products will definitely help to address the different challenges we talk about. The digital capabilities has been in fact playing a key role in different business models, proposition, and relationships with client and business partners, especially under the pandemic, and also given the various benefits. So take our business, for example, Mercer FundWatch first launched in 2019 as a fintech proposition to deliver Mercer Funds rating, publicly available for Hong Kong and Singapore users. The platform enables many users like individual investors, financial advisors, wealth management, and platforms to access our manager researched insight very conveniently. So without that, we will not be able to reach out and provide the contents. And we see the number of managers, asset managers signing up the services have been growing, and also the users at our webpage also using the traffic growing as well. So we think the digital capabilities will speed up the business expansions like we just rolled out in Thailand, and we are planning to roll out in Taiwan, and enabling the GBA Wealth Connect users can view the rating as well. Thank you.
thank you, Helen. So Neil, so what's your view on that?
Yeah, I mean, coming from the FinTech Association, I think you know my answer, right? I think so. Obviously, digitalization is the top. When you're talking about transformation, that's top of mind in a lot of the incumbent banks, insurers, and financial services and so forth. I think that's number one. Number two is obviously automation of the whole process. And so ultimately what that's going to go through is everything from client onboarding, KYC, running through, especially inside of the context of wealth, is, the risk questionnaire, product suitability, portfolio matching, so on and so forth. Even portfolio rebalancing and everything is being done these days. So the key here is how do you improve both the user experience as well as the experience for those that are managing money, right? And ultimately what we're trying to do inside of FinTech Association is build up that ecosystem and get access and to help out all of the incumbents. And also a lot of the virtual banks also are leveraging this capability set, right? So if you think about it, these are kind of the areas that we would focus in on. Obviously, underlying all of this is the four major general purpose technologies like AI, ML, cloud, also big data, as well as blockchain, right? So all of these are feeding into each one of these. They're not technologies in of themselves. It's about the use cases inside of there. What I do believe very strongly is Hong Kong's ability, the right to win in this space, especially inside of the wealth tech area. We have very strong fintech ecosystem. We've got a lot of different vendors inside of the space. We also have the virtual banking experience, probably first inside of Asia, with the 8 different virtual banks that are here. Everyone has to have a pure online journey, fully digitized, and that goes from everything from payments to lending to wealth, and ultimately also inside of insurance as well, right? So I think this is also a very key advantage of Hong Kong inside of the context of the GBA area. Thank you.
So thank you, Neil. So for the time constraints, so probably I will ask the last question, and also hope each panelist will take around 2 to 3 minutes to share with our audience about what you think, like Chiman talked about 18 months. I think there's a lot of leaders here. They want to know a little bit longer term, talk about like 3 to 5 years. So, and what they can do now if they want to plan it to become competitive in the coming 3 to 5 years. So, Chiman, so what's your view?
I think my view is that if you talk about 3 to 5 years, my view is that digitalization. I mean, I'm not talking about having an app for your company or it is really about integrating the whole digitalization into the DNA of the company. I think in 3 to 5 years time is not an option anymore. It's about survival, right? You do it, you survive. You don't do it, I'm sorry, you might be obsolete in 5 years from now. So I think it is really a lot more urgent than we think, because you can do nothing and survive in the past 30 years, but if you do nothing in the next 5 years, your company will be way behind by a lot of these. It's going to be overtaken by a lot of these so-called smaller guys, right? Because they will be extremely efficient, So I think for us as a family office, we have to integrate ourselves in a way that to cater to the needs of the future generations, right? The future billionaires, right? One of the key reasons that we are launching a brand new family office that cater to the so-called digital asset billionaire is because it's very clear, when the industry, of market cap of the, digital asset industry double or triple, half of the world's new billionaire will be from digital currency, cryptocurrency. So if you're not ready for it, I'm sorry, by default, you're not invited to half the party, right? So I think it's very clear that we have to evolve ourselves. And obviously, yes, the regulations, the restriction of what we have and what we are operating in the traditional world. And that is why we are launching a brand new family office where we start from a new page, where it's a blank piece of paper, right? We can draw the way we want to draw, and we can operate in different jurisdictions that's favorable. So I think really the key is we have to, it's not an option anymore. It's if you want your firm to survive and really be relevant, I think in 5 years from now, it's not a choice anymore. So I think that's I hope it's something that we get out there. Thank you.
Yeah, thank you, Chiman. So Helen, so what's your recommendation to our audience?
Yeah, I think as Neil and Chiman have also mentioned, the key really is to apply the technology, enhance existing, and create new solutions using AI, data science, and machine learning, and all these different and developing and getting more advanced tools. And in terms of like the wealth management product and services, just make use of the technology to reach out to the clients. And we think that the trend of digitalization will benefit from those in Wealth Connect in China to invest offshore under the Southbound scheme, and also to those invest in China, getting product information, investment insight, payment, and settlement. So this is the way to go. Thank you.
Thank you, Helen. So last time, Neil.
Yeah, so it's no secret what I'm very fond of is fintech, and obviously being wealth tech co-chair is always close to my heart. So I think robo-advisors, I think that's probably one of the key areas that we can explore inside of the context of GBA. You know, obviously the full automation and all the AI and ML that goes into the algos, you know, doing everything from what is right now just pure risk profiling, but going into more goals-based and theme-based portfolios, right? And I think that's what will ultimately come into play, is not so much the body, is more of the brains that go into developing these types of portfolios. I think secondly is when we take a look at it, the expansion beyond the existing sort of plain vanilla products that are going on and more into alternative investments. Things like private equity, venture capital, these types of things. That's kind of the direction of where wealth tech is going on a broader scale. And the key there is really looking at access. How do other smaller investors get better access to these types of deals that would typically require $1 million you know, equity check, right? And you know, having that type of participation there, also having the type of liquidity on these types of digital wealth platforms, because obviously people hold on, they're not necessarily locked in for, you know, 3 to 5 years per se, but this gives them access and their ability to exit and find liquidity there. Of course, last but not least is really in terms of the regulatory and compliance piece. These types of wealth tech platforms that are inside of alternative investments are looking at this regulatory and compliance in very carefully, and ensuring that individuals are fully on the right side, particularly if you're talking about cross-border, whether it's China to Hong Kong or Hong Kong, Macau, Macau to China, so on and so forth. So I think these types of wealth tech platforms will eventually be even available to mass affluent players inside of the market. So thank you very much.
Thank you, Neil. So thank you very much for Jima, Helen, and Neil sharing with us on the Wealth Connect and the Wealth Tech, and also how to, like Jima said, really to survive if you are talking about 3 to 5 years, not only preparing. So hopefully we can give you more insight, and then if you have in the future you want to talk with us, you can also find us in LinkedIn. And finally, thank you very much for the VFF 2022 to invite us to have sharing with all of you. So thank you very much.
Good morning, everybody, and welcome to Virtual FinTech Fair 2022, VFF FinTech Forum, as it's known now, third edition of the forum. My name is Syed Mushir Ahmed. I'm the co-founder of VFF and the founder and MD of FinStep Asia. Right now, we're going to be screening and bringing to you some thought leaders and experts talking about investments and VC investments in particular in the FinTech world in the GBA and Hong Kong. I would like to start off by asking my esteemed panelists to introduce themselves. We'll start with Ms. Winnie Han.
Hello, Michelle. Good morning.
Good morning, Winnie. Could you just give a quick introduction about yourself to the audience, please?
Sure. Thanks. Hello, everyone. My name is Winnie Han. I'm the head of China Issuer Services and the senior vice president of Global Issuer Services in Hong Kong Exchange. My key focus is to lead the China team to promote Hong Kong Exchange as a top listing venue for Greater China companies. I have extensive coverage and works closely with the Chinese government, potential issuers, investors, and associations. So it's my honor to join the panel today. So I look forward to a very fruitful discussion with my fellow panelists. Thank you.
Thank you, Winnie. Danny?
Hi, good morning or good evening, depends on which time zone you are in. This is Danny from Gobi. Gobi is a pan-Asia VC fund. We have been investing in early stage startup for the last 20 years, covering over 300 portfolio companies so far. Myself, I'm covering mostly Greater Bay Area tech startups. Prior to becoming an investor, I'm actually on the other side of the table, working as an early employee joiner for multiple startups based in Singapore and Taiwan and Greater China.
Thank you, Danny. Eric?
Great, thank you. Hello, everyone. My name is Professor Eric Kuhn. I'm an executive vice chair of Association of Family Offices in Asia. I have 28 years of experience in wealth management, asset management, private equity, and VC across Goldman Sachs Asset Management, BlackRock, JP Morgan in New York, Asia, and Canada. Great to be here. Thank you.
Thank you very much. So we're gonna, without further ado, we're gonna dive into our first question, which is addressed to all three speakers. Looking at talking about tech investments in the region, are we seeing more interest in the area in terms of startups, in terms of fintech, and what kind of companies are getting funded? We'll start with Winnie.
Thanks. So our listing regime of 2018 have fundamentally changed the DNA of Hong Kong capital markets. Hong Kong is now plays a very vital role in supporting the capital needs of companies in the new economy and stands as the new economy marketplace of the world. So in the 4 years since our 2018 reforms, information technology, consumer, and healthcare are the top 3 sectors by fundraising and have surpassed more traditional sectors such as financials and utilities. As well as bringing these new economy sectors to the fore, the listing reforms have added diversity, depth, and liquidity to Hong Kong markets by attracting a wide range of specialized and frontier technology providers, including some of the leading players from healthcare and information technology sectors in Greater China. For example, internet platform, e-commerce, cloud services, fintech, semiconductors, precise electronic components, all the very active subsectors in our pipeline and the listed companies. Back to you, Mashir.
Thanks, Winnie. Danny, your views on this?
Yeah, I think it has been a very interesting time. Last year, probably the peak of the investment in the early stage startups or the growth stage startups. Of course, like early this year, in the first 2 quarters, like things have been slowing down a bit in terms of the total volume. But we also see a very interesting trend that like more and more previously focusing in late stage investor, they are now moving also earlier to tap into the early stage startups. I think that's a very great sign that like you now have more diversified financing source, like in terms of startups, like and also you get to know more for longer with your potential next round investor who has the pocket to support you to maybe like in the upcoming late stage round.
Eric, from your perspective, how are you seeing it?
I think it's interesting because if you look at Hong Kong and Singapore, they are getting more and more biotech news, deep tech. I got a family office telling me about how they're going with deep tech. I think he was saying they've grown like 600 times, in terms of the deep tech they're working on. In addition to that, FinTech firm, we look at kind of the firm that I'm with, MicroConnect, to 10 to 20,000 families, SMEs in China. So again, these are very interesting in the next, year. Back to you, Ashen.
Sorry, forgot to unmute. Been on Zoom for 3 years and still getting used to it. It's just going to come back to the following on that conversation. Danny, we mentioned about briefly on Hong Kong and what's happening. How do you see us specifically in terms of the future funding landscape in Greater China and Hong Kong? What are the major trends on the ground at the moment that you're seeing, especially with Gobi? And as a follow-up question would be, what are the kind of investment thesis it was and kind of companies do you look for?
I think like there's very interesting trends happening because of the macro, driven by the macro environment. There's obviously a decoupling of the great powers in the world, like there's tension between US and China, and that lead to a couple of new trends. I feel like domestic substitute by China players has been a major investment thesis for multiple sectors. Like we see this across like semiconductor as well as like medical device. So these continue to play a big role in terms of the VC capital, like into investing into the next generation of local player in China who can be the winner in this like domestic substitute trend. Secondly, I feel like there's also obvious trend for some of the more established player or even new startups based in China, but having the focus from day one, like facing the global market. So we see a true high trend, right? Like companies that may have their R&D team or the founding team based in China, and then like having the end user market like concentrated in other global market, be it Southeast Asia or sometimes even US. Previously, it would be something more on the supply chain advantage, like in this type of like fashion e-commerce cross-border play. But we also see that there's more and more like advanced technology export from China. One of our portfolio company, VLab Group, like they started off in China. They operate as a fintech company, focusing in Hong Kong. Maybe some of you guys use their virtual bank services. But like now they're also expanding their business, investing aggressively in Southeast Asia, particularly in Indonesia, while like a lot of the tech development, the back office, and as well as the risk assessment are actually done maybe outside Indonesia. So this is some trend that we see not just from fintech, but also from other advanced technology like robotic, like we see Git Plus doing very well with the manufacturing or the technology hub setting up in Greater Bay Area in China, but like exporting all over the world. And in terms of Gobi, like we were still very actively investing across the different technology sectors. Some of the things that we just mentioned now are our key focus, but we think that like founders like play a huge role like in the stage of investment that we're looking into. Like at this current moment, I guess like we're also paying extra focus for how agile the company is, like how the founders like see the upcoming trend, and then how fast can he react to this. I guess it's also another element that we are adding on top, given the volatility of the macro market.
Thanks, Danny. That's quite insightful, because we are seeing that change that's taking place a little bit based on the macro markets, right? Winnie, from a Hong Kong exchange perspective, with Chapter 18A listing rules now in place, what kind of developments are you seeing in the broader market, especially when it comes to fundraising with Hong Kong Exchange?
Okay, thanks. So in 2018, we introduced the 3 new listing chapters to attract the innovative companies. So namely Chapter 8A for those with weighted voting rights structures, and Chapter 18A for the pre-revenue biotech companies. Also Chapter 19C for secondary listings of Chinese companies. So these new chapters have opened the door to a wide range of new economy, including biotech companies with both primary and secondary listing. And more fundamentally, as I have mentioned, the listing reforms have transformed the DNA of our market. And now we are a world-leading global IPO venue for new economy companies, as well as healthcare companies. And the listing stories of tech giants such as Alibaba, NetEase, JD.com have established Hong Kong Exchange as a go-to listing venue for regional tech groups. And for 18A healthcare sector in particular, our healthcare listing have become more diverse. So in 2017, our top 10 healthcare listings were all traditional pharma companies. But now top 10 includes 4 biotech and 2 digital healthcare companies. And we have around 40 biotech and healthcare IPO applications in our pipeline. So we are seeing a lot of encouraging things going on. And the impact of these reforms is hard to to overstate, but here are some numbers. We have 217 new economic companies that have listed in Hong Kong since the new listing rules took effect. And those 217 companies have raised over 870 billion Hong Kong dollars and account for about 65% of the IPO fundraised in Hong Kong during the period. And the new economy companies listed since listing reforms now accounts for 24% of Hong Kong's total market capitalization. So these are all the renovations happening, and we are seeing a more diverse and robust pipeline.
Thank you, Vinny. It's good to hear of the robust pipeline that's coming through. The exchange has been a leading player in the region and globally when it comes to listings, and we do hope that this continues to be the momentum. Eric, from your perspective, you've been actively looking at the investment landscape, especially when it comes to private equity, to family offices and HNIs. What stage are HNIs and family offices looking at investing in fintech startups? What stage of development do they look at it? And as a follow-up, do you see a rising trend of HNIs investing in startup companies as an alternative investment strategy?
Yes, absolutely, Michelle. They tend to start maybe with the A round, B round, or some of them getting into a Z round. They call it the friends and family round. That's first point. Second point, they tend to come in as a crowd. So they tend to, if one come in, a couple of them would come in together. So that is a pretty significant thing. To share, for example, the company I'm with called MicroConnect, as founded by Charles Lee, the ex-Hong Kong Stock Exchange CEO. You look at our B round, we done a press release, so these are public info. You got Horizon Venture, you got Sequoia, you also got families such as the Chong's Capital. You had Adrian Cheng from New World, K11. So all that you see is definitely sort of the sweet spot of some of the family is kind of the A round, B round. Obviously, in general, they tend to top up in a C round, and some of them kind of go even further. Third point is that they tend to be the anchor at some point as well, because they pre-IPO, they want to anchor it and then go further. So in addition to the family office, I also want to share that the Hong Kong government has allocated billions and billions of US dollars to kickstart the ecosystem via putting money into the Hong Kong Nexus idea. Again, these are public news, and people can definitely sense that in addition to Cyberport and Science Park, in addition to the family office, the ecosystem as generated by the public sector, namely billions and billions of US dollars pumping into the startup stage, are definitely very, very interesting. Thank you, Michelle.
Thank you, Eric. Coming back to Danny, in terms of Hong Kong, we've heard now Winnie speak. You also mentioned earlier about the funding landscape in general, but narrowing it down to the startup fundraising. Is it a good place for startups to come and raise funds in Hong Kong, both local and international startups that are looking to come over? And in your opinion, what's like the biggest difference between Hong Kong and other tech clusters elsewhere in Asia?
Right. I think like is arguably Hong Kong like is a good hub for startup to operate. Not necessarily like you have all the operation only based in Hong Kong, because maybe you need other regions like support, like in terms of like providing manufacturing talents or as well as like the end user customer base, right? But in terms of fundraising, I think it's definitely one of the top priority hub you could like choose in Asia. Like we thanks to Winnie's and HKEX, like great work. Like it's no doubt that Hong Kong is definitely a financial hub for late stage fundraising, like for you to go IPO, and also there's lots of family office that we just mentioned who has a deep pocket, and also moving up to early stage investment. I think there's a growing diversity of financing choices for startups. Like if we have to compare the Hong Kong versus other tech hubs, say Singapore, right? I believe like the government has been doing lots of great work around the hardware, setting up the incubation program as well as like working space. But in terms of the capital, like at Singapore were doing that a bit earlier, like trying to funnel lots of like capital support into startups. Hong Kong has been a bit slow on that front, but definitely like it has been picking up a lot in the last 2 years. Like we see HKMA's initiative as well as the policy address mentioned last year. It has like giving like more than $10 billion. Like we're expecting that going into early stage startups. That's actually a huge amount of funding that currently maybe like in the market is we're talking about like a few times more than before. And I believe like that will give also alternative like source of funding for startups. And what's interesting is like we also see there's like overseas player who or other like Chinese fund who used to invest more domestically. Now they also shift their attention into looking into the Hong Kong startup as well.
So Dan, just following up on that from a Chinese funds investments, etc. Again, we asked Eric this question, but from a funds perspective, are you also looking at Series C or Series B and beyond? Or is there also an appetite to come in earlier stage? Because when we look at mainland China, right, and we look at historically the fundraising, you had a lot of the Alibabas and Tencents investing significantly at early stage, but also quite a few startups were getting good angel investment. Are you seeing that extend to Hong Kong, or is it still a little more conservative locally from a Chinese fund perspective, where they're looking at Series B or Series C onwards?
Right. I think like all the capital investors, like they are looking for new growth engine, and both in terms of market as well as the alpha, and going early is one of the way that they now can capture like more alpha, as well as like trying to get the allocation of those successful startups at early stage, right? Now that they can do follow-on investment in the later round. And we also like see that like the overseas like investor or Chinese local investor, they're investing into the startups not just from a financial play. It's also they see the opportunity to bring the technology, because now the as we mentioned about the cross-border play, like there's like a new initiative from sometimes sovereign fund from Middle East. They're trying to invest into early stage startup, trying to bring this technology or the operation also to their local market. And I believe this is happening not just like for Hong Kong startup, but around the globe as well.
Thank you, Danny. Vinny, coming back, in terms of Hong Kong Exchange, what are the plans to continue attracting innovative tech companies to list in Hong Kong? We are looking at an exciting stage where markets are stabilizing. There's macro impact that's coming in from challenges from other parts of the world. But from an exchange perspective, what are the innovations or what are the new things that you're looking to do to attract innovative tech companies, especially in the fintech space, to list in Hong Kong?
Okay, thank you, Mashir. So at Hong Kong Exchange, we are constantly looking to build on the unique foundation of Hong Kong as an IFC to enhance our market attractiveness, improve our processes, and strengthen our diversity, breadth, and the depth of our markets. For example, we introduced the Hong Kong SPAC regime, as mentioned by Eric, in January, and as a potential alternative route to the market. Up to now, we have more than 45 SPAC exchange participants who have already registered, and we have a very strong SPAC pipeline. Ever since the regime come into play, we have received 13 SPAC applications, and up to now, 3 SPACs have successfully listed in Hong Kong. We also enacted reforms to our listing regime for overseas issuers in 2022, expanding our secondary listing regime and providing greater flexibility for companies seeking dual primary listings here in Hong Kong. And these reforms support a whole new generation of international and regional issuers seeking a listing status in Hong Kong. And of course, we will continue to work on a range of new initiatives to ensure that the market and the listing franchise remains highly attractive, well-regulated, and internationally competitive. As many of you may have read or noticed from the news, that we are therefore studying how best to cater for the fundraising needs of large-scale advanced technology companies, which are at an early stage of production commercialization. And we will update the market should there be any new developments of this new listing regime. And we are confident that with this new rules coming into play soon in the future, we will be able to have more technology companies, including fintech companies, to better utilize Hong Kong markets to expand their development. Thank you, Mushir.
Thank you. And if I may just extend that very short, Winnie, in terms of foreign companies coming here, what would be the key attractions that you feel they can leverage off from Hong Kong Exchange as foreign companies outside of, say, Greater China?
Okay, sure. I think Hong Kong is the right international financial center in the right place at the right time to connect this unique China and the global mix. And Hong Kong is actually the most international city in China and also the most Chinese city outside the mainland. And Hong Kong offers global investors and issuers a financial environment that is familiar and trusted, from its legal system to its financial infrastructure, regulatory regime, and tax regime, professional services, and talent pool. Similarly, it offers investors and companies from mainland China proximity, cultural alignment, experience, and critically, international connectivity. So we all know that we have a very unique stock connect system that connects us with the A-share markets. So the investors in the mainland market can invest in the Hong Kong stock, and also vice versa. And investors in Hong Kong, they can invest on A-share listed stocks through the Stock Connect regime. So I think the connectivity of Hong Kong and Hong Kong Exchange is quite unique and will sure benefit any institutions and enterprises that would like to leverage this market.
Thanks very much. We really appreciate that. Eric, coming back to you, right? One of the themes that we are seeing increase is different methods of fundraising that startups are looking at, right? In particular, there is a conversation around revenue-based financing that firms are looking at. Do you feel that is beneficial? Is it detrimental to post-revenue startups? And besides this, as a follow-up, we're also having alternative startup funding models coming up, such as equity crowdfunding. So do you think that will take off in the region? So, but you could probably start off with addressing on revenue-based financing.
Absolutely. Thank you so much. That's a wonderful question. I think the revenue-based financing is a wonderful model, and I'll explain to you why. Reason number one, this revenue-based financing does not dilute the entrepreneur's equity share. Number two, equity-based financing does not usually involve interest, unlike a bond, to the entrepreneur. Thirdly, true alignment of interests, because the fact that we all try to do better for the entrepreneur and for the company, basically you just pump money in, get it kick-started, and don't dilute their interests, don't dilute the equity share, and do not charge them interest. So that is much enticing and attractive to the entrepreneur. If it is a fund running this daily revenue financing, it's also good for the LPs, because simply put, you need to connect capital with the entrepreneur. You need a market infrastructure platform to do so. And basically, this daily revenue financing model could scale up. The three S's, right? Simple, scalable, and sustainable. So I think it's a very interesting thing. It started in the US a while back, especially in the SaaS type of platform. In Asia and China, it's relatively new because it's not equity, not bond, 非股非债. So it's definitely something that is very innovative. Some of the company, if they don't look to IPO or startup, especially the micro SMEs, this is a perfect way for them to finance kickstart their franchises. You talk about cloud-based sort of equity cloud funding, Monsieur. I think that's an interesting thing. Obviously, a lot of way to start me up type of thing is generally a bit smaller, because if you go to cloud funding, it's usually individual who chip in a little bit. And then, so that would be for smaller projects. For projects that are a bit more trendy, those would be good. But for the revenue-based financing, tend to be for scalable projects, bigger franchises, and franchises who got a little bit of track record. And if you do it in a country like China, whereby e-payments are very prominent, that would be another great way, because you can capture the revenue on a daily basis at the payment gateway level. So that's another fintech play, wealth play, because a lot of family offices really like this type of interesting thing, because everybody like day one exit, right? When you get cash back every day, essentially is day one exit. The pain point of PGVC is that people got to wait 3, 5, 7, 9, 10, 20 years. However, and the valuation on the exit is a bit uncertain nowadays, isn't it? But on the daily revenue sharing, you basically get back cash on day one, and your velocity of the cash is amazing, because you get the cash back, they could reinvest again. So the IRR would goes up quite quickly. So it's very, very interesting model. I'm learning quite a lot on that, and family offices really like it. It's definitely a great fintech and data play as well. I hope that was interesting.
That definitely was interesting. Just following up, are you seeing more interest in alternative funding models such as equity crowdfunding? Do you think that's going to be quite interesting for HNIs?
Yeah, I think the crowdfunding give a lot of hope for teenagers and youngsters and entrepreneurs who have an interesting concept. It also gives consumers a choice, because they got to vote. I think the participation of the consumer definitely would make this type of crowdfunding work in the future. It might not for all projects, because for very big projects, crowdfunding may be a bit more difficult, but it would be a Kickstarter to get the company going.
Got it. Thanks again. Danny, coming back to you, almost look towards the end of the panel, but from a closing perspective, even though there's been a lot of money, there's been more money in tech investments than ever before, right? We've seen record funding, especially in 2021, where there were multiples, jumping for quite a few unicorns and others. However, we're seeing that in 2022, the trend has changed. with a significant amount of money going into fewer companies, meaning the deals are smaller, even if deal sizes are bigger, and it's getting competitive for startups who are trying to raise. So how would you advise these startups to differentiate themselves to get investment? This basically, as an investor, when you're looking at it, what would attract you or others in your circle or investment circle you think would be attracted by what the startups present to you?
Sure. I think like the reason why we also see like the trend that like you see more and more investment going into Tesla, but like it's also a bit concentrated. One of the factor I believe is also lots of startup are postponing their IPO exit date. So like previously, you don't see mega startup who still private, who stay as a private company, right? But now like you do see like more and more established player, they actually remain as a private company until much more later stage in terms of the valuation. So sometimes you see like, okay, the investment amount is huge, but like a bit more concentrated. I get that play one factor, but no doubt that the uncertainty, the volatility of the macro environment also makes investor much more cautious than before. I think they are still deploying like many of the VC and PE, they have raised plenty of like a dry powder in their pocket now, like they will still pick the right player to invest their capital. But at the same time, given the volatility, I believe like early stage investor or particularly growth stage one, like will be much more cautious on the unit economics and your path to profitability. So in the good time, like maybe like more investor will focus on the upside, the top line growth, while like putting the path to profitability as a secondary priority. But now I think it's as equal, if not more important, like how you illustrate that the sustainability of the company, particularly given that there may not be easily next round fundraising coming up within a short time frame. Secondly is like despite that the macro environment is getting volatile, or there's like anticipation of like a prolonged recession, like I think startups, like if you want to differentiate yourself, there's definitely still lots of sector or markets like within some subsector that like are still growing. One obvious example is like clean tech. Like China has been has putting lots of effort from both the government and also the private companies. They are doing a lot in terms of how do you like achieve the carbon neutral in the upcoming decades, and this type of like a field would be something that I believe lots of investors are actually like trying to double down into. And secondly is like even though you're not let's say clean tech play or you're not a player within those subsector, like there's increasing demand or let's say criteria set up by the investor looking into through the ESG lens. So being a startup doesn't mean that like it's not important to look into the governance as well as like the other ESG factors. And I think like it's also something that it all started from LP as well as the VC, and now like the staff should also highlight this. What are they planning or already done in this front? And lastly, like speaking on behalf of early stage investor team, founder is still one key thing that we are looking into and demonstrating the agility and how they see this, like the company is going to evolve through this volatile environment is still something that we pay lots of attention of, like what their plan be if things like didn't work out as planned. I still think like a lot of great companies like nowadays we're seeing becoming a tech giant actually was born in those recession time, and this time we believe it's the same, that it's a good time to pick the winner and doing this like shuffling of the economic interest again, and the team, like how do they stay agile and be more focused on the unit economics and profitability will be one keynote that we want to share with other fellow founders.
Perfect. Look, that's a great answer, and we do hope that we continue to see investments growing in the startup world. There is a reality check in some senses in terms of not just multiples of users, but you also got to show revenue and show a pathway as it were, right? And we're looking at a whole segment, and as Hong Kong is Asia's financial capital, we do look to see that growth in the startup investments as well. Once again, it's been a delight and pleasure to moderate this panel with three of you. Great insights, expert insights. And on behalf of everyone at VFF, I thank you all for joining us today. We are being seen across the world, and in particular in mainland China, with over 250,000 views at this stage. So very delighted that that audience could get to hear all of you. So once again, thank you all speakers. To the audience, we will now be switching to our startup showcase, where we'll be showcasing 4 startups, which are Hong Kong headquartered startups across different fintech verticals. So they'll showcase what they're doing and a demo of their product potentially. So stay tuned, and we'll be jumping to that right after this. Thank you very much. Thank you.
Thank you.
Hi, my name is Neil Tan, and I'm the CEO of Neptune Digital. We are a joint venture between Kinetic Capital, a venture capital fund, and also CryptoBlock, a blockchain and DLT service provider inside of the sectors of banking, finance, insurance, and Hong Kong government. Neptune Digital is dedicated to the development and commercialization of open permissioned Ethereum, also known as OPE. We have 2 different chains. One is inside of China, a blockchain called OPE, and the second one is called Spartan Ethereum outside of China. Our chains are crypto-free chains and fiat-based chains. Essentially, what we are trying to do is create opportunities for everyone to participate in the Web3 space. Today's presentation, I will focus in on China market and also open permissioned Ethereum. So let's kick it off. Everyone knows that cryptocurrencies and also the public chain inside of China are banned. So all the buy, sell, trade, mining of cryptocurrencies is banned inside of China. Having said that, China is extremely bullish in blockchain technology and its application inside of the spaces of different sectors and industries. They are also very bullish on CBDC, or central bank digital currency, specifically digital renminbi and digital yuan. Inside of that context, on the enterprise side, China has introduced in 15 pilot zones blockchain technology across 15 different cities. They've also identified 160 plus different entities to deploy blockchain technology in specific sectors. Those sectors cross over everything from energy, finance, legal, education, healthcare, and cross-border trade. On the consumer side, specifically NFT and metaverse, China is expected to be the #1 market in the world for metaverse technologies at $8 trillion US. Currently, a number of the big tech players such as Alibaba, Tencent, JD, Ping An, ByteDance, and also Baidu are participating in this space. Inside of NFTs and metaverse, all the currency, all the items are valued in renminbi, are denominated inside of renminbi, and all the transaction fees are also in renminbi. So gas fees are also in renminbi. So in comes Neptune Digital. Essentially, inside of China, they are encouraging the best of breed public chains to deploy inside of China, but under China rules and regulations. The infrastructure there is called the BSN, or Blockchain Based Services Network, and that is a consortium of the State Information Center, SIC, China Mobile, China UnionPay, and a company called Red Date Technologies. We, Neptune Digital, are the Ethereum blockchain on this Chinese infrastructure, and the only legal and compliant way to deploy Ethereum or EVM-based applications inside of China, whether that's NFTs, gaming, metaverse, or other areas. And open permission Ethereum's key is the differences in terms of the permission, proof of authority consensus mechanism, as well as the front end KYC and the back end RMB. All transactions are denominated in renminbi. Hence, all of the, it makes it a lot lower cost, faster time to market, and easy deployment. We are also able to be compatible with other EVM chains such as Polygon, AVAX, Phantom, and BSC. And all the applications are not only B2C, but also B2B. So enterprise use cases are also very key. Thank you very much.
Okay, so my name is Ankit Suri, and I'm from Plantu Limited. So I'm excited to be presenting Plantu to you at today's VFF FinTech Forum 2022. Thank you for taking out time to hearing us today as well. So at Plantu, we are helping financial institutions, fintechs, and businesses achieve sort of data-driven banking, or providing them data-driven banking solutions in context of customer-centric digital transformation. The problem that we see is pretty clear. Existing banking platforms, or most existing banking platforms, are actually extremely transaction-based. And as consumers are shifting from branch-based banking to digital banking, the current platforms are not meeting the needs of the clients, reflecting a drop in key KPIs. Our solutions are enabling data-driven banking solutions that enable banks to give personalized insights and proactive advice to the users, meeting clients' needs, improving their financial outcomes, and ultimately enhancing financial institutions' bottom lines. As I mentioned, digital banking is becoming the main channel for customers to engage with banks. In fact, BCG wrote a report that mentioned that a customer is now accessing their digital banking app 50 to 80 times more than visiting branch for all their banking needs. And in this accelerated growth of digital banking, there is a growing satisfaction among customers. Let's look at the key points that are impacting banks today when it comes to these client needs. Clients realize that these platforms are extremely transactional. They lack good customer experience and do not have the tools to track, manage, and plan their finances. Oftentimes, most digital banking apps are financial products that are simply accessible via digital channels. The other challenge is that when you have a scalable amount of users, a significant amount of users accessing your banking platform, a banking platform cannot afford to be one size fits all, making clients feel like the banks do not understand what their needs currently are. And lastly, as digital banking apps become the main channel for customers to engage with banks, the customers do expect that personalized interaction with the bank through proactive insights and advice to the users. So how we help banks through this process is through an end-to-end transformation journey, helping them realize the customer pain points, helping them build the right kind of prototypes, and then leveraging our technology and our services to help them achieve that customer-centric digital transformation. After that, we do help with ensuring that the key KPIs are met and iteration is done based on what the data is telling us. Plantu, as part of this digital transformation, will provide certain software as a service solutions as well, helping you bring that speed to market and ensuring that your 5-year digital transformation plan can be achieved perhaps in a year or two. Our technologies include everything that helps banks understand their customers, engage their customers, and increase the digital sales that can be their digital banking app. A brief background on Plantu: we were founded in 2018 with the mission of helping businesses and consumers achieve their financial goals. After launching a consumer proposition and gaining significant amount of traction with our consumer proposition, we switched our focus towards enabling banks and fintechs with their technology needs, helping them serve their customers through our learnings, insights, and technologies. Since 2020, we've been serving banks across Hong Kong and have been expanding recently to banks across Asia as well. Our solutions have been recognized by key ecosystem partners. For example, last year, we were part of the FinTech Proof of Concept Subsidy Scheme by FSTB in Hong Kong. And we're also part of key ecosystem partners like Cyberport as well. These are just an overview of some of the clients that we have worked with. As seen, we have worked with financial institutions, both on the retail banking as well as in the SME banking side, digital wealth managers, as well as fintech startups as well. We are backed by investors who believe in our vision, and as a company, we have an incredible amount of ecosystem partners who are helping us spread the product vision that we have aligned on this through the company. So for more information, you can reach out to me, Ankit Suri, at ankit@planto.io for more details. Thank you.
Hi, everyone. Thanks for your time. I'm Ian Wen, the founder of BOEX. BOEX is an art tech-focused metaverse company, also a Cyberport incubator. BOEX is part of the Bank of Asia BVI ecosystem and serve crypto exchanges, corporates, and high net worth individuals from all over the world. So BOEX focuses on three things. We do three things only. One is the NFT marketplace, which I'll share the screen later. Second is the metaverse creation. We've created metaverses for well-known Chinese news weekly, a government-endorsed fashion event, a well-known international artist whose work was auctioned at Christie's and displayed in Louvre, and a Chinese bank for their internal promotion event, and more. And the third thing is crypto off-ramping supported by Bank of Asia BVI. The BOEX NFT marketplace started last July, and one of the more high-profile NFTs sold was the Olympics Happiness NFT, which was sold for 16,000 BUSD to a Cambodian royal family member, Prince Nari Norodom, last August. So I will very quickly share the platform we have. Just a second. I have difficulty sharing, but I'll do a quick full screen share so that we see. This is our landing page with some NFTs that were in the exhibition last year, and then some selected media coverage. But what I wanted to show more is the marketplace that we have right now. This is a marketplace that we own, the tech of which we also own. And there are a variety of different types, different genres of NFTs. Some are related to Chinese art, some to feng shui, some related to very, very famous Chinese artists, and some from Kinobo, from disabled artists as well. And for the metaverse creation that I mentioned, this is what we have. We've created these metaverse. This is for the Juxtaposed Fashion magazine. And you will see right here that we have all these works from Hong Kong fashion artists that are created into NFTs. And what we did was to connect the NFT with the fashion item as well, so you can buy the physical as well. And another one is for quite a famous artist in Hong Kong, Dominic, and we have all these art. And I'll go back to the, I'll go back to my slide. Just a second, I'm trying to find the slide right here. Yeah. And for our team, we are mostly from seasoned professionals from legal, finance, and art background. Andy, Robin, and I are the co-founders. I'm a lawyer, Andy is a CPA accountant, and Robin is an ex-banker from UBS and ANZ. And our legal counsel is from ex-Baker McKenzie background. The advisory board include Prince Ari, business tycoon from Malaysia, and seasoned blockchain experts. And one of them is an ex-CTO from a London-based exchange, Henry Price. So what we are trying to do now, apart from the three things I mentioned, is what we call a one world metaverse vision. Because as we all know, the Chinese is a huge market. But last year, around September, crypto was banned. But now, instead of doing NFTs, they're doing what the Chinese call 数藏, which translates to digital collectibles, and that is fully legal. So what we're trying to do is to work with a public chain called a chain called BSN Chain, which is a blockchain in China that's supported by a consortium of big Chinese corps and funds like China Mobile and Red Date. So what we're trying to do is to integrate BSN network on BOEX so that we tap into the Chinese market as well. And we can trade Chinese style NFTs internationally. We call that 国风 Chinese style NFTs, which is a mega trend right now. So another quick show of our customers, partners, our platforms, case study. We have different NFTs, some of them are Chinese style, etc. We're also trying to build a sustainable metaverse. We have a Harmony token project right now, which is essentially helping the poor by issuing food tokens in exchange for healthy meals. And this is supported by a Chinese investor and patron connected to the UN. So we're building a Harmony meal token. And these are different case studies and marketing exposures.
Good morning, everybody. It's Mark Francis here, co-founder and commercial director of Zettle. Let me just share my screen for you. There we go. So we're Zettle. We are financing the next generation of businesses in APAC. And the first question that we typically get asked is, why Zettle? Look, it comes from to settle your invoices. So it's a bit of a pun there for everybody. But in essence, what we are is a fintech lender using machine learning algorithms and other automation processes and APIs to provide fast, flexible financing to businesses across the region that need access to capital, either for growth capital needs to expand their businesses or working capital needs to address cash flow issues. And I'll give you an example so you can kind of visualize what we're talking about. So one of our customers is a software development firm. They have a number of employees and contractors, and they're providing these services to large MNC end clients, companies such as MasterCard, Amazon Web Services, and BAML. So large blue chip organizations. And the issue that they face is they need to pay their employees and contractors every 30 days. But their customers are only settling after every 60 to 90, and sometimes even longer, 120 days. And this is where Zettle really comes in. We come in and provide funding in the 60 to 90-day funding gap. And we do this using a variety of tools that we have built in-house. But in essence, we are providing products that are forms of receivables-based financing, using the contracted revenue that is signed with these customers to allow this intermediary to pay their staff and ensure that payroll is made every month on time. I'll give you a bit of an example on how that is done here. It's accessing your revenue today and not tomorrow. What that means is Zettle is able to turn your monthly recurring revenues into annual recurring revenues. And as we said with the example above, we look at the contracted revenue that's signed with customers, and we provide bespoke products to these intermediaries so that they're able to obviously pay their staff on time. They may also have to make other working capital arrangements such as rent and other costs, but we find that the vast majority of our customers are using it to make their monthly payroll. And what's interesting about them is many of these organizations tend to be either asset light, or they tend to be services based, or they tend to be technology type companies. And what's interesting is many of these businesses don't have much in the way of maybe hard assets to post as collateral. But what they do have is receivables, and that's what we actually take as our collateral. And we use that to come up with all of these products that obviously suit their business needs. Now, one thing that was really interesting is in the past, we used to use multiple channels to originate business. This could be direct sales, it could be content marketing, and it could be referrals from channel partners. And last year, we really cracked that channel partners is the clearest and fastest way for us to grow and obviously get referred deals in that are already almost pre-vetted. And that's kind of led us to the strategy that we've been now deploying this year, which is embedded lending. Embedded lending is done via our partners. And what it means is we're able to, through APIs, plug in directly with our channel partners, companies such as POS systems, EOR, employer of record firms, payment processors, as well as payroll software companies. We integrate directly with them via APIs. We originate new business, and we get access to data for our underwriting process. The partners, they access new revenue streams, they increase customer retention, and they can provide service differentiation for many of their competitors. What is it that we're providing? KYC assessment, risk management, given that we take a portfolio management approach, capital via our own credit facilities, as well as our own credit fund and other securitization products, licensing in Hong Kong, Singapore, and other markets in the region, collections, which we can now do through our banking partners, for electronic direct debits, virtual accounts, and wallets, and of course, the most important, underwriting, forecasting this with increased accuracy through the data that we have access to. And we, of course, also have our service providers, open banking API companies, banks or other financial institutions, collections, cards, e-sign, and other KYC tools. In terms of the business, we grew 400% last year. We're now sitting on around 80,000 a month and monthly recurring revenue. So at that 1 million in annual recurring revenue figure. Most incredibly, we've only had one non-performing loan in now over 410 deals. So we know what our underwriting process works. And with increased access to data, we believe we can improve this even further, given our machine learning algorithm-based proprietary credit risk model. So here we are, we grew 4 times last year. We're on track for 5 times growth this year, and we expect that growth to continue as we dive into other markets across the region. We also have debt funds committed from an impact investor in Europe for $25 million. With these funds, we will be able to actually 10x our book and take us from where we are somewhere here to $8 million in annual recurring revenue and over 500 customers across the region, which should allow us to see sustained growth as we move into Hong Kong, Singapore, Malaysia, Philippines, Australia, and Japan, with other markets in Southeast Asia in our roadmap. So here we are. We have enough demand for, at the moment, for $8 million annual recurring revenue. We've actually always had too much demand. So we're at a very crucial juncture. We have now got these debt funds committed, which is going to allow us to 10x our revenue from where it is currently. And actually, we've still got close to half of our seed round left from our raise last year. So thanks so much for joining me. And yeah, please get in contact either on LinkedIn or through our website, www.zettle.com, if you would like to have a conversation about any of this further. Thank you.
Hi, everyone. Thank you so much for tuning in this morning. So VFF FinTech Forum 2022. I'd like to thank all the speakers and for their wonderful contribution so far and for the startup showcases. We'll be having a 20-minute break right now. So see you guys after 20 minutes. Thank you. Hi, everyone. Welcome back to the third edition of our flagship event, VFF FinTech Forum 2022. So today we'll be talking about future of payments, CBDC, stablecoin, and crypto adoption for retail payments. We have with us Kat Kukreja, co-chair blockchain committee of FinTech Association of Hong Kong with us as our moderator. And over to you, Kat.
Thank you, Asim. Hi, everyone. Welcome. Good afternoon. Thank you all for tuning in to hear our panelists discuss the future of payments. In 2014, when Overstock.com was the first major merchant to adopt cryptocurrency as payment, this was big news. And in comparison, when you look at the world today, in part due to the impact of COVID-19, businesses and consumers seem to have adapted to digital forms of monetary interactions. And you're now able to purchase everything from your basic Starbucks to your fancy Lamborghini using cryptocurrencies. While some may argue that scalability, accessibility, and operational complexities will continue to pose challenges to the wide-scale adoption and implementation of crypto payments, public and private enterprises are reevaluating their technology infrastructure to incorporate acceptance of crypto payments to take advantage of their various benefits, including real-time settlements, lower transaction fees, and programmability. With us today to discuss the future of retail payments are King Leung, Head of FinTech and Invest Hong Kong, John T.H. Yun, an Assistant Professor at HKU, and Benedict Nolans, Head of the BIS's Innovation Hub Hong Kong Center. Welcome all. Thank you for joining us. Can I ask you all, before we go into the meat of this panel, to introduce yourselves and briefly touch on your work within the payment sector? Benedict, let's start with you.
Thank you very much, Kat, for the introduction. So I'm Benedict Nolans, and I'm the head of the BIS Innovation Hub Hong Kong Center. The BIS is the central bank for the central banks. So we do manage money on behalf of central banks. But also importantly, we are a forum where central banks gather and decide on policy decisions, as well as increasingly on innovation decisions. So within my remit lie topics such as central bank digital currency.
Thank you. John?
Hi, I'm John Yun. I'm an assistant professor from the Department of Computer Science in the University of Hong Kong. I'm currently teaching FinTech, electronic commerce, and blockchain course here in HKU. And my own research interest is in the area of cryptography, cybersecurity, and privacy. So in the area of payment sector, my research work mainly focuses on the design of secure digital wallets and payment mechanism in the blockchain, such as the privacy-preserving payment channel using smart contract. All right, thank you.
Great, thanks so much. And finally, King.
Hello, everyone. King Leung, Head of FinTech Invest Hong Kong. The easiest way to explain my work is that I serve the community. Essentially, when we look at FinTech as an industry, relatively speaking, it's a bit new, albeit has been around for 6-7 years, behind a lot of pushes from HMA, Port, Invest Hong Kong, Science Park, and many other major government institutions and private sector stakeholders. And it's essentially what we do is to try to, number one, bring in international fintech companies to Hong Kong to enrich our ecosystem. At the same time, we work with the financial institutions, the investors, service providers to basically connect them with the fintech ecosystem so that to promote more fintech adoption. At the same time, we work very closely as well with the universities and as well as other stakeholders from research labs like Benedict's team and so on. So it's truly a great pleasure to talk about a very exciting topic of CBDC today. Thank you.
Thank you. Benedict, perhaps you can start us off with a brief explanation of what exactly we're looking at when we look at CBDCs, stablecoins, and crypto. What are the differences between each of them, and what are their respective benefits and risks?
Thank you, Kat. Difficult question. So maybe I'll start. I'll start maybe by explaining central bank digital currency. So central bank digital currency is effectively the same as your currency today, but put into a digital format. And currency today, what you're mostly using for payments is indeed central bank currency, i.e. issued by a central bank, such as, for example, the HKMA or the MAS or the PBC, People's Bank of China. The reason why people use central bank currency for their transactions is because there is a there is an expectation of trust and stability in those currencies that you use. So in some, the large majority of payments globally are in currencies issued by central banks. And typically with the central bank currency, you are doing two types of payments. You may be doing retail payments or you may be doing wholesale payments. Retail payments is, Kat, when I'm paying you for a book you've sold to me, $50. That's, let's say, a retail payment. Wholesale payment is when I'm, for example, a manufacturer and I'm sending widgets offshore and I need to be paid 100 million for that. That would be a wholesale payment. A retail payment typically takes the form of me giving you a bill and increasingly of me making a payment with a QR code. Whereas a 100 million payment normally takes the form of a bank transfer. And so for both of these type of payments, the digital evolution has knocked on the door, which means these payments, whether retail or whether wholesale, they can actually be done in different forms from in the past and with different technologies. And the most commonly researched technology in that regard is blockchain. So that brings me then to stablecoins and cryptos. So cryptos and stablecoins were actually the ones that first piloted the use of blockchain for payments. And the idea, as you rightfully said at the introduction, is that if you use blockchains, you can make these payments instant. That is very important. And you can make them theoretically, not always practically, lower cost. Actually, both instant and lower cost are not always the case. So for example, if you look at Bitcoin, the payment is not instant because people are waiting for confirmations and the confirmation of a block, which takes 10 minutes, I believe. And secondly, they'll wait for several blocks, which could mean up to 30 minutes. And secondly, no cost is also not necessarily the case in cryptocurrency because there are intermediaries who are charging cost in the process. So the theory, nevertheless, was it can be done faster and it can be done lower cost if you use blockchains. So cryptocurrencies are all built on public blockchains. And serve as payment mechanism. What they suffer from is volatility because there is no underlying anchor. As I started with, most payments in the world of today are done in a central bank currency because there is a trust in the central bank and there is a history that the central bank has of keeping its currency relatively stable. Now, for countries who don't have that history, where the currency has been largely fluctuating in wild directions, that would be similar to cryptocurrency. But for the most adopted currencies used for international trade, those are currencies that have a history of a certain level of stability. And so lastly then comes the stablecoin. So the stablecoin tries to exactly mimic that. So what it does is it anchors itself. I mean, the most classic stablecoin, which anchors itself on a central bank currency. So, for example, the US dollar, there are, as you know, about 150 billion worth of stablecoins issued on the US dollar. So how are they distinct from a CBDC? They are the liability of a private company. So theoretically, if that private company goes bankrupt, then theoretically your money is gone. Whereas if a currency is issued by a central bank, the central bank will need to stand in for a failure in its systems. So the security as a user is slightly different between whether the currency is issued by a central bank or whether it's issued by a private company. A second difference is that the stablecoins are issued on public blockchains. And this is very important because that means they're interoperable with public blockchains and with any kinds of applications built on these blockchains. And CBDCs in their current iteration are not interoperable with public blockchains. So I'll leave it at that. I hope that was a solid introduction.
Yeah, that was pretty thorough, Benedict, and it definitely set the tone. So let's now look at the drive for adoption on the part of merchants and businesses. John, can you comment on some of the problems that exist within today's retail sector and from a global, and look at this if you can, from a global, local, regional standpoint? How also do you see CBDCs in crypto alleviating some of this vulnerability?
Thanks, Kat, for this good question. And I think some of the points already mentioned by Benedict just before, like the major advantage, like from the merchant's point of view, is, for example, like clearing and settlement time is shorter for crypto, CBDCs, or stablecoin as compared to the current way, especially when the customer are paying by, for example, credit card. It takes a few days to settle the payment, and also the fees associated with it also. So in the case of crypto, I think Benedict just mentioned that it takes like 10 minutes to finish a transaction, and also in Bitcoin, and also it takes 1 hour to exactly confirm the transaction. And for the case of stablecoin like USDT, the process would take roughly like 10 minutes. So I believe that if the central bank issues CBDC, it would be faster than that because they may do it in a private blockchain. And also in terms of fees, we know that the transaction fees in some blockchain like Ethereum is very expensive nowadays, especially due to the popularity of NFT recently. But there are also solutions to that. For example, by the use of sidechain or payment channel in Bitcoin or Ethereum, it is possible to reduce the transaction fees by using these new technologies. So it may be some of the advantages for the merchant's point of view for using these new payment systems for retail. How about the shopper's point of view? Yeah.
We can go on to that, or we could leave that for a little bit later, John. If you don't mind, maybe we move on to the next question.
Yeah, sure.
Okay, cool. So King, following on from what we've looked at from the retail point of view, now let's look at infrastructure developments. I mean, seeing as you represent InvestHK, what do you think would need to be implemented to encourage uptake of crypto for retail payments by consumers? And what role do you see the industry and government playing in these efforts?
Well, this is a big topic that we are keeping an eye on and try to offer help. I would say that I will answer this question in two quick angles. First, infrastructure side, there's a movement called the UDPN. I think Benedict probably has looked at that already, but it essentially stands for Universal Digital Payment Network. But that's mostly focusing on the wholesale side, in which some banks have been invited to join, and behind it is an organization called BSN, Blockchain Service Network, that's been trying to use blockchain in a way, as Benedict justly pointed out, to help the wholesale side to basically speed up and lower costs on the wholesale payments across border. Now, but then the reason why I start with that is because there have been some infrastructure discussion and pilot POCs going on. From the retail side, it's actually, at least from what we've seen, is a different situation. Because at the end of the day, the retail side, in terms of consumers, they need to be convinced about a change of behavior that they have to go through to do something different from what they're doing today, from using the octopus like Alipay. It's just so convenient. So why would they have to change? So as a result, this is also something that we've been discussing with our colleagues at HMA. And this is why we have launched a program called Global Fast Track Program, in which we have this CBDC track for the first time this year. And in this kind of competition, we've been trying to do crowdsourcing to try to open up to the private sector, extending to banks, fintech companies, tech companies, to invite them to share with us their creative thinking about what will be the commercial use cases for retail usage. So in a way, I guess to answer the question directly, to us, it's really about the use case, whether or not it makes sense to incentivize the consumers to use it, rather than like a technical problem in the form of an infrastructure.
Thanks. That's a really nice way of leading into our next question. So Benedict, you and I have had conversations on possible use cases globally for CBDCs and stablecoins. Where do you see, what do you see as possible use cases? And what do you also see as the hurdles for implementations of these use cases, specifically as it relates to CBDCs and stablecoins? Are we looking at programmability being included in this? Are we looking at ways that government can limit how this money is spent, or use it to benefit society as a whole? Where do you see the future of this?
Yeah, so within the Hong Kong Center, we are concentrating on the wholesale use case primarily because Hong Kong, as you know, is a hub which means that it normally is a hub. It plays a hub role between mainland China and the rest of the world. And it plays a hub role specifically in the context of trade. So the Enbridge platform that we're working on is a wholesale platform, which means that different countries would issue their CBDC on the platform, and banks would connect to the platform and are able to instantly transfer to the other jurisdiction through the use of this currency issued by the central bank directly on the platform. So in some, this can be used for very large payments, as I had indicated in the wholesale space. It can theoretically also be used, though, for smaller payments like remittances. But the core use case is really the large payments, wholesale payments. So the use case there is very clear and basic, is that currently to do these big transfers of money, we need to use the correspondent banking network, and which can take up to a few days to transfer money and to transfer it safely to the other side. Whereas if you put a DLT infrastructure in the middle, using those same features of DLT that were discussed earlier, the transfer can be made instant. So that's the theory or the main use case for wholesale CBDC. It's really for wholesale cross-border payments, and often these payments are in the context of trade. For example, as my example goes, of a manufacturer with 100 million needed for widget payments or semiconductor payments, for example, and it could be settled faster. So I think the wholesale use case in sum is quite clear. Can it technologically be realized? It can be, but still, at the end of the day, you need participation in a system. So I think the latter is where most of the work will be needed, as with any new payment infrastructure. Then on the retail CBDC side, it's more complex question because it is very, very jurisdictional specific. So if you look at Hong Kong, we have very high penetration of even the most basic tool, which is the ATM machine. So you think about it, before all those PSPs, we used the ATM machine. So I've been here 25 years. I used to know where the ATM machines are, and that was my network as to how I function. And on top of that, I have the Octopus card, and I would store my cash at the 7-Eleven on my Octopus card. And frankly, I have enough to get around for a whole week with what I put on my Octopus card. So I had a stored value facility and ATMs, and actually that functioned quite well. If you think about it in the context of many other countries, they don't have a stored value facility like the Octopus. So you would need to go from ATM to a machine to ATM machine, right? And a lot of countries, specifically emerging markets, do not have big ATM networks. So if you're on an island in Indonesia or in the Bahamas, you can't go to the ATM machine. So all you can do is stack up on bills, right? Now, the PSPs have plugged that gap by the QR code-based payment mechanism, you can nearly say, so everything gone digital. But for a lot of jurisdictions, they still view it as necessary to digitize their currency for monetary sovereignty reasons, because they think it's important that people keep an association with that bill, even though that bill's use may be actually going out of business, so to say. And then lastly, on other use cases, as we a little bit pre-discussed, I think that within, again, it's very market dependent. So other than what I just described, the geographic spread or the financial inclusion issue, there definitely are use cases for programmability of money around, for example, social security payments. Currently, social security payments are done, and we don't have them in Hong Kong, so it's certainly not a use case for Hong Kong. But just think about places in the world where social security is part of the system. These payments are being done without limitation to where that money received can be used. So if let's say I'm poor and I'm getting from a government 1,000 X a month, let's say 1,000 USD or 1,000 euro, A programmable payment could be programmed so that I can only, for example, spend it on necessities, or I can only spend it within certain geographic boundaries. These are use cases that are out there, and I don't think they are being looked into yet. Now, if they were looked into, they provide a lot of opportunity, though, to change some of the economic realities that social security systems are facing. The only country that has been piloting some of that programmability, I should say, though, is China. So China has made payments that you could only spend in certain supermarkets, for example. So that's completely feasible. And whether the world will go in that direction is we'll see what the future tells us.
Thanks for that, Benny. Let's look now specifically, because we talked about the HKMA and the EHKD and, putting it into context with our ATM Octopus network. So the HKMA has been looking at the introduction of an e-Hong Kong dollar. They've also started looking at regulations around stable coins and developing a regulatory framework around that, specifically focusing on payment-related stablecoins and SVFs. So John, where do you see the use cases of both of these instruments in Hong Kong, given, as Benedict referenced, the range of payment options that we have currently available to consumers?
Mm-hmm. Yes, if like EHD is made available for retail, then maybe it could allow the HKMA to have a better control of the monetary policy, like the airdrop of money. Like in last 2 years, we have the consumption voucher schemes, where currently the government need to ask for the help from other merchants like the Tap and Go, Alipay, WeChat Pay, etc. And they have to spend millions of dollars for administrative fees. So if the HKMA have their own EHKD, they can issue the money in that way. So it can save the cost for that. And another possible use case would be something like buy now, pay later, which is a kind of short-term financing solution offered by the PAN nowadays. And actually, it can be also offered by a smart contract by using the programmability function of a smart contract. So maybe we can also have other form of new financing option for retail payment as well if we have this programmability in the EHKD. And finally, one also good thing about using that is also related to financial inclusion, like the case of for the elderly or for the young kid who may not have a bank account or credit card to link to their digital wallet. Then maybe the EHKD would also be a possible solution and use case for that. I think that's the things that I can see for now.
Okay, cool. We have a little bit of extra time, so I'm going to throw in a question here on regulations and regulatory oversight. There's obviously been a lot of move on the part of the regulators. We've just looked at the HKMA. We know that the FSB is looking at this. IOSCO, FATF, and we have, I think, quite a global audience. I've been told there's maybe like 400,000 people watching us at this moment in time. So for all of our audience, I know it's a big number, right? So for all of our audience around the world, and given that we have a little bit of extra time, and this is open to anybody here on the panel, where do you see the regulatory winds heading? What do we see as trends in terms of oversight, especially given, the meltdown of Terra Luna, the various other bits of meltdown that's been happening in Singapore, the additional oversight that we're seeing from previously open markets like Singapore, but also the opening of markets in countries like Dubai or the US being a little bit more welcome to looking at legislating around crypto and digital assets. I feel like I should start with Benedict because she maybe has a head start compared to other panelists on knowledge of this. But if King and John, you could add, I would be grateful for your input. So Benedict?
Yeah, so I think, to a certain extent, there was quite a lot of regulators who were holding back on regulation, right? And they were doing that primarily for two reasons. One, because they didn't think it was systemic, and regulators do have a bit of a principle that they also need to prioritize their work. So they will focus on areas that are systemic. And secondly, I would think some regulators thought these systems may not continue or may falter. So what we have now is we have a combination of faltering, and at the same time we have increased systemic nature. So what's going to happen is it's just going to accelerate regulation. And I would have said that if regulation had come 3 years ago, or even 5, 6 years ago, it would have been very negative for the sector, because the sector wouldn't have even been able to grow to this near systemic size that it's getting towards. It wouldn't have been able to come up with all its use cases, including those that we've described on this call, including stable coins, or including any of the applications of DeFi. So in sum, had regulation come too early, it could have killed the baby actually in the cradle. If regulation, however, comes now, it may give more confidence to investors, institutional participants, etc. And that confidence is probably needed at this stage for the sector to continue growing. So I guess we're at a very significant transition phase, and that means that applications in the crypto space that are very largely banking on being illegal or banking on not complying with a lot of rules, I think they will struggle at some stage now. Whereas applications that welcome regulation, stablecoins will need to be one of them to thrive. They will need regulation. Those ones, I think, ultimately will have an opportunity to grow. And so for DeFi, it's often seen as the former, but I don't agree with that. It could also be the latter. There are many DeFi applications that could welcome regulation, for example, institutional lending pools. And once they're at that stage of being regulated within a solid framework that institutional investors can rely on, the sector will grow further.
That's true what you say, Benedict. I mean, it is always this balance when you're looking at regulations between stifling innovation and allowing for consumer protection. So like really great for calling that out. King John, I'm sorry to put you on the spot here, but do you have anything to add?
Yeah, I think I would like to definitely have, I guess, a big shout out to our colleagues at SFC for sticking to the guns. Now, well, when we look at the regulation, in fact, is now being heard at the Legislative Council, the LegCo, is the upcoming VASP law. It stands for Virtual Asset Service Provider. Now, essentially what it is to put around the framework. I think part of it is about the AML piece, but there's one thing I just want to highlight in this sort of regulatory discussion. Now, obviously, the past few months, we've seen quite a lot of volatility in the market, and there have been some, I guess, pretty scary stories, right? Particularly after the Terra Luna incident. It's within a few days that there was another article I read about Coinbase. I think it was on Wall Street Journal, where Coinbase came out and said, well, actually, in case we got into financial trouble, we're going to use some of our clients' assets to somehow pay down the and things like that. So therefore, I was like, wow, that I wonder how the market reacted to it. And then look at the stock price of Coinbase, it dropped like 10% within that announcement, well, right after that announcement. Now, so I think the key point I want to highlight is that in the Hong Kong SFC framework, basically 100% of the client's assets are ring-fenced. And this is this is like super important. This is something that I think for most of us who've been putting money in different online brokerages, this is kind of the norm that most investors expect, right? So my money is my money. Okay, the brokers can do whatever they want, but then don't touch my money. You're only executing the trade for me. So because of that reason, I can see that because of that Hong Kong gold standard of regulation, particularly for the bigger institutional investors, or the professional investors with a bigger sum of money to invest into digital assets, this feature of the Hong Kong regulation is going to really differentiate Hong Kong against some of the other jurisdictions that arguably may be paying catch-up with these recent incidents of several liquidations and blow-ups.
Great, thanks for that, and thanks for bringing it home. John, do you have anything to add, or shall we just move to the last question?
Just a short response. Like we have talked about the regulatory related to the stablecoin, and also the regulatory to the exchange like Coinbase, and also we also may have some of the regulatory issue related to the AML issues related to the transaction itself. So I think this is also a part that needs some technology and also some expertise to work on it to make sure that everything follows the same rules as the existing banking transactions.
Yeah, I mean, that's good to call out, because it's really important that you have that very solid cooperation between public and private partnerships. So, regulators are always on top of what's happening with technological developments, because they don't know what they don't know. So, okay, thank you all for that. Let's move to our last question before we close this session out. So in closing, it seems like this is the way of the future. People need to know it's coming. What one piece of advice would each of you give to retail consumers so that they understand the impact of retail adoption of stablecoins, CBDCs, and crypto, and how this is going to impact them in their daily life? King, let's start with you.
Well, perhaps a quick answer is, first of all, blockchain-based payments has already taken place. I think it was back in 2018 that Alipay launched this blockchain wallet-to-wallet transaction between Hong Kong and Philippines. So I believe that we asked some of our, the helpers in the Filipino community. I suspect there will be a pretty sizable community using that way to transfer money from Hong Kong to Philippines in a much faster way and low cost. So it's already happening. Now, the reason why I use this as an example is because, first of all, the technology in most times will be transparent to the end users. Now, but then I think the one to shout out to the broader audience and the community is that I would highly encourage everybody to embrace all the new fintech innovation. Be it like investment, it can be payments, it can be online insurance. Because basically, with your participation, then all these fintech companies would get the traction, and with the traction, they're able to raise more money to continue to do more innovation and continue to offer better services to the community. So that's why for me, I've been spending more time in recent years to talk to the local media, in a way, in an attempt to try to educate more the community, to have the shout outs to the broader society to embrace fintech.
Great, thank you. John, how about you? What's your one thing that you would give to retail, that one piece of advice?
I think we need more education to the general public, especially relate to the security of the digital wallet, especially when they are dealing with crypto or stablecoin. Because if you lost your key and if you hold your wallet yourself, you lost all your money. So this is quite serious problems. So it is different from resetting your e-banking password or something like this if you do not have a company who's helped you with that. So I think the education of how to secure your wallet is very important.
Yeah, and that I think is an advice for retail in terms of that they need to learn, but also service providers that they need to offer it. It goes both ways there. So yeah. Benedict, do you mind giving us your final thought on this?
Yeah, so thank you very much. I think, Cap, thanks for the very dynamic panel here. So I think we've had a run around the world of three different but very related topics. The relation is blockchain, but as said, the difference is CBDC being a central bank issued currency and liability, whereas stablecoins and crypto are not. And then the difference between stablecoins and crypto being that one if tethered to a central bank currency is stable, whereas the other one is less stable. We've also, I think, touched on passwords, the importance of the segregation of your assets, which is incredibly important. And I think we've touched a set on the fact that there will be more regulation, including that tug of war between privacy and AML. It's really a tug of war because the user may want privacy, but any government authority doesn't want to see, as I always give as an explicit example, another 9/11. That's not what people want. So there needs to be some form of AML controls. And in the end, for the consumer, I think it will mean more choice. Ultimately, you will have more payment mechanisms. As said, if you think about it in historic evolution, I mentioned ATMs. They're still seen as one of the biggest bank innovations. But then we had the SVFs, and then we have had the PSPs, and now you'll see a lot of this move on to, I think, to this new form that blockchain is. maybe a final thought, the consumer doesn't need to know what it runs on, as long as it runs smoothly. So some of our prototypes, if you look at the UI, you have no clue that there's a blockchain in the back, and this is probably how it needs to work.
Great. Thank you, all of you, for your very insightful and, given the way the world is, very timely comments on this important structure, this important topic. There's obviously a lot of information here. I hope everyone in the audience has learned something and taken away something that they can ponder on. And with that, I wish you all a good afternoon. Thanks very much for your time.
Good afternoon, everyone. Welcome to the panel Leveraging InsurTech for Insurance Connect for GBA. This panel is brought to you by AWS, and I'm super delighted to introduce our moderator, Lapman Lee, Professor of Practice, ESG and FinTech, Hong Kong Polytechnic University, and the board member of FinTech Association of Hong Kong, responsible for InsurTech. Lapman, over to you.
Thanks, Azim, for organizing this, and thanks to the organization, including Michelle, for inviting us and having me moderate this exciting panel. Very quick introduction of our panel that will be with us here for the next 35 minutes. We have Lei Yu. Lei Yu is CEO for Hong Kong and North Asia, and also regional head of distribution for QBE, one of the leading insurers. She'll tell more about insurance, her company, about how her company works with InsurTech, and how the company is going to grow in GBA. Peter Tam, we have a lot of old friends here. Peter Tam is Deputy CEO of ComfortGo. He was the former CEO of the Hong Kong Federation of Insurers and knows a lot about the history, development, and hopefully also can provide his view on the future of insurance in relation to GBA and InsurTech. Last but not least, we have Saurabh, also old friend. We share the stage very often. Saurabh is responsible for the insurance sector at AWS, also sponsor of this panel. Thanks for that. And he'll talk about more also about how AWS is working with InsurTech and traditional insurance alike in their journey into the GBA and growing internationally, and also share a bit around use cases, how clients are really working towards that journey. So let me start with Lei yourselves. Can you share? I think the audience is probably interested. I know that there are some of my friends from insurers and InsurTech attending as well. Can you share a bit around QBE's perspective on InsurTech and how traditional insurers are leveraging InsurTech across your insurance value chain? And maybe another question, how you leverage that to grow the GBA in the GBA? I mean, that's a lot of different questions, but great to hear your view and hear more about QBE actually for some of us who don't know QBE that well.
Sure. So first, maybe let me just introduce QBE a little bit. So we are obviously a global general insurance company, and we're headquartered in Australia and listed in the Australian Stock Exchange. So we are the top general insurance company in Australia and the UK markets. But in Asia, I think we're probably not the top. But actually in Asia, particularly in Hong Kong, we have been around for over 100 years. And we are one of the few insurance companies actually have the broadest products under one QBE brand. Meaning is where one entity in Hong Kong can provide from personal line insurance to SME, corporate, commercial insurance, as well as some of the specialty insurance like direct and officers liability, marine health, energy. So in Asia, we actually run an omni-channel model. We don't do much direct business. Probably that's why some of you have not heard our name. And 90% our business and the business premiums are coming from partners, insurance agents, brokers, and intermediaries, banks, and strategic partners. So as a traditional insurance company, and I think our vision is really to provide more innovative and consistent insurance solutions to our partners. And now, especially now, is to modernize our business with the technology and the digital technology particularly. So that's why when we look at the digital technologies, our first strategy is to put our intermediary partners first, and then to adopt the different digital technologies for our different target segments and customer segments. So broadly speaking, we have 3 segments, and then we use 2 types of approach when we look at the digital technology and how we leverage InsurTech or technology in general. So maybe just let me share with you those are 3 different segments and how we use technology to do our business. So the first segment would be the individual consumer segment. And we see the future of the insurance business will be a digital enabled business model and close to 100% end-to-end automation, integration, and from customer acquisition, quotations, our underwriting processes and the payment, how we handle the claims, and also some of the post services as well. So we will be looking at InsurTech, and the technologies really help us to do that. And when we look at the SME segment, and we believe it will be also digitally enabled, but probably not 100% end-to-end, because after all, SMEs probably will still need some of our intermediaries and have some of the advice and sometimes as well. But then when we look at the corporate insurance space, and we see technology and the digital plays more assisting roles, and meaning we want to use digital technology to improve our business efficiencies And maybe it's about obtaining and process information faster and helping our underwriters and making decisions faster and more accurate, as with data analytics and with AI, and service our intermediaries and the customers faster with digital tools such as smart contract, blockchain, or maybe managing our digital workflow as well. So traditionally, when we use we engage technology companies, and it's more about buy and build our own model. So meaning for our core systems, and traditionally we just buy from established technology companies. And for some of the technologies, we like to build our own because we think we are underwriters and we know some of our process. But recent years, actually, we are more looking at other two type of different models. And with all the fintechs and insurtech startups, we're looking at investment and the partnership models. So for example, like you said, we have a corporate venture capital arm called QBE Venture. So they invested in early stage startup companies and potentially can reshape or even disrupt our insurance industry. So we are looking at how we can invest in them, maybe leverage on our QBE market strength and expertise. And the other, that's investment model. And the other partnership model will be really looking at how we can maybe use, to partner with those insurtech and the tech or fintech as part of the ecosystem. Okay, so we are looking at really how those partners can come in and bring more unique experience, and not only just for our customer acquisition, and also to enhance our partnership and the customer journey, and provide some of those kind of value chain activities, for example, maybe like a risk assessment, risk prevention, data recovery for our customers, or maybe provide our partners some data insights and digital marketing, or maybe even payment solutions for us as well. So this is how I see we're going to leverage the insurtechs and all the startup companies to help us on the business.
No, thanks for sharing it. That was very elaborate and useful. I'll probably later on I'll ask you more also about QBE's plans for the GBA, but this is very good to know more about QBE as a company. I didn't know that you were around already for 100 years, but it's good to know you. So your focus, a lot of your premiums are coming from your partnerships. And I understand now more across that you also look at improvements across the value chain. So this is probably good for the insurtechs out there that are tuning into today's session to understand that QBE is actively looking at it and is moving from a buy and build model more towards now also an invest and also partnership model. So thanks for sharing that, Lei. Maybe I'll move to Peter. Peter, yourself, as you've been around, that's probably an understatement in the insurance industry for a while, know many of the insurers, but now you changed seats, being a part of a leading insurtech firm. And congrats! I think there was a big award that CoverGo won recently. Congrats on that. I want to ask, so the topic for today is leveraging insurtech for Insurance Connect GBA. And while I know that there have been some progress a couple of years ago, can you share a little bit maybe for the audience that doesn't know that much about Insurance Connect, what it is and why is it such an important deal for traditional insurers and insurtechs alike? Can you share a little bit 101 background, and maybe also what you think the future will look like, or what is needed to unlock that potential? Because I do think that most of the participants here do agree that there is potential, but how do we unlock it and what is it? Be good to hear your view, Peter.
Oh, thank you so much, Lemon, for this opportunity. First of all, I'd like to thank the organizer that's we're able to gather together to talk about this important topic, InsurTech and GBA. Why we are here? We're here really to make a difference to how people acquire and obtain the benefits of insurance protection. I think at the center of what we do is always how we can create a value. This is important. So what Lei just mentioned about all the things is music to our ears, because in even traditional or modern kind of insurers, they really onto what insurance clients, customers are looking for. They don't want to one size fits all the kind of products. They want to meet insurers at the convenient natural point of sale. They don't want to be even sold the kind of solutions. So that offers a lot of opportunities for insurtech companies, including CoverGo, to offer that kind of support. We talk about co-creation, co-competition. I think now it's into that mindset. It's very important, even for the GBA area when you talk about Insure Connect. It's really about that kind of driving that initiatives, and then that must be led by the government of different markets in that jurisdictions. Of course, we will start something very modest about providing after-sales service and making sure that things are properly processed, and also in terms of even the regulatory compliance. But it's important that in that area that the people are looking for a number of areas like mobility, because when you talk about GBA, it's all about the flow of people, of information, of the kind of capital. So when people move, that also generate a kind of risk that insurance can sort of meet that the requirements. And of course, GBA is also another important element. It's about innovation, also technology. So even for that, there also provide another very unique opportunities when we talk about that one. When we talk about even SMEs, how they can sort of tap into that kind of opportunities, what kind of protection they want to get in order to really enjoy that opportunity. Now, for us, we understand that insurance is what I call understated industry, the value, and because some people always feel that, okay, insurance is kind of necessary evil, somebody even put it that way. And also when they go to the claims, that kind of moment of truth, they don't have the kind of what we call expected experience. So we are going to change it because of technology, not just with technology. We also need to work together with the process. So InsurTech is not just about technology. It's about how we change the things in order to put customers at the center of what we do. So what they're looking for, seamless integration is king. They don't want to really fill out a form and move on another side and talk to different people, and then when do the claims, they go through all sorts of hassles. So remember that this is important. What's driving all this change? That's a golden opportunity for insurers, insurtech companies, all the solution providers to come together. We understand that traditional insurers try to move away from the monolithic IT system to a kind of platform which is modular in architecture, but also being agile and also configurable in how they operate. This is very important. Number two, they also learn that kind of connectivity with all the solution providers, connecting with even the brokers, the agents, AI providers, and also, for instance, in the space of health insurance, health providers, health services providers. So that kind of connectivity is so crucial to making this so powerful, also meaningful for our topic today. And so I'd like to stop here because I think that's the time.
No, sure. No,
I think has a lot to say. Thank you so much.
And that's useful. No, I think that's very useful. I mean, Lei already mentioned before the importance of an omni-channel experience. You also talk about customers being front and center. I fully agree with that. I think if we combine it with the opportunity in GBAs, of course, we see the opportunity and how can insurance as a product help people de-risk and unlock the opportunity by being, let's say, more carefree without any issues, know that you're protected. So I think is both an opportunity, but also obviously insurance as a facilitator for unlocking options outside insurance. So I think there is a big opportunity there. Thanks for sharing. So I'll come back to you on that, and also more on CoverGo and InsurTech, Peter, after. So from your perspective, you've been around in the sector as well for a long time. You work with different insurers and InsurTechs alike. I'm interested to understand, one, how do you work with these InsurTechs and insurers to help them drive their business or improve efficiencies? I think that's interesting. And also maybe specific use cases, how people, and you have seen benefits being unlocked through this partnership? Because I think some keywords are customer experience, ecosystem partnership. Though the topic is technology, I think the partnership part is a big component here. Surep, over to you.
Totally, Lapman. First of all, I'd like to thank VFF Events for inviting me to be part of this such an esteemed panel. So InsurTechs enable innovation, as Lee and Peter already mentioned, right? So they enable this innovation throughout the insurance industry, and more than 80% of the companies and these InsurTech communities globally build their solutions on AWS. So InsurTech love to build their solution on AWS because we provide a secure, compliant, and resilient cloud through which they achieve the speed and scale. They get access to industry experts and the expansive offerings to support their fintech and InsurTech community globally. More than anything else, InsurTech appreciates the fact that AWS is made for builders. With tons of tools available ranging from purpose-built databases to low-code, no-code, AI, ML solutions, builders can experiment with tons of services at little or no cost. How do we support, right? So we have one of our flagship program known as AWS Activate, which provides startup and InsurTechs with a host of benefits, including AWS credits, AWS support plan benefits, architectural guidance to help grow their business. Activate benefits are designed to give them the right mix of tools, resources, and expert support so that they can succeed with AWS while building a secure and compliant solution, optimizing performance, managing risk, and keeping costs under control. Now, based on a recent study, so two risks typically highlighted by the insurance industry analysts globally are lack of digital channels and products, and the need for innovative approaches to identify and price risk. Across the insurance value chain, right from sales to underwriting to customer service to claims to financial management, we observe three broad InsurTech categories that we help who are building their propositions on AWS. The first one is creative carriers who create more of a substantial involvement in the insurance space. They are full stack, meaning complete in terms of code to bind to process for policies throughout the value chain. Some carry risks on their books, while most are reinsured by or underwritten by the incumbents, right? So the second category is the data and analytics suppliers. They focus on data, emerging tech, and building analytics-driven software. These categories include artificial intelligence providers and data providers. The third one is customer experience enablers, right? These help improve the customer user experience. These solutions enable insurance underwriting as part of the sales process, as well as the aggregation portals to compare quotes. Also included are the low code and the no code players providing accelerated application development and agility. Yeah.
Got it. No, thanks for sharing that. I like that. Creative carriers, the data analytics suppliers, the customer experience enablers. I haven't heard about AWS Activate. It's good to hear it at this forum as well.
We also use AWS service as a cloud-based API enable.
I think we're all connected here.
And also when we talk about
Andre,
when you talk about no-code, low-code, we also one of the pioneers, because when people hear about no-code, they always think that it's a strict jacket, which is not the case now, because it's a kind of commercial. CoverGo, we provide a kind of solution, but not providing you a strict jacket. We allowed you to configure the products. So this is important because we are saying that we don't want traditional products to be a kind of one-size-fits-all solutions. Now that with technology, we can really personalize the kind of solutions for our clients and also provide what we call the natural point of sale. And when we talk about embedded insurance, there's something coming to the market. And I understand that a lot of people are sort of have this kind of inspiration that they must work with affinity partners to widen the penetration, to really make the insurance as a kind of something important to bridge the protection gaps and also help solve a lot of problems. And we even talk about climate change when you talk about parametric insurance, that kind of thing that is on a much larger scale. But back to the question about GBA, it's really important because for this area, we talk about close to 80 million people, with the GWP close to over 11% of the national GDP of the entire China. So these 9 municipalities plus the 2 SAR, Hong Kong and Macau, really is a powerhouse for InsurTech with the cloud providers and also insurance companies like QBE to work together, really to make a change, to make an impact. Because there's so many things that insurance can do to help even the governments to meet some of their policy objectives. Because nowadays people really are hungry for that kind of new thing, really thinking outside the box. So I better stop here. But there's a lot of potential for us to work together. It's very exciting. It's public-private partnership can be a very good testing ground in this area, driven by the government, providing the kind of framework, the InsurTech Connect, things that Insure Connect, and also with risk carriers, even reinsurers, providing the capacity, the technology, and people like us to really work together and to offer something exciting, cool for our customers.
And thanks for that. That's actually expiring 2 new questions that are bubbling up in my mind. One is maybe that's more for Lei or for others as well. So yeah, definitely, I think there is a lot of opportunity in GBA. I mean, people do talk about these headlines, many people, GDP. But at the same time, I look, for example, for insurance, that there is a relatively low insurance penetration rate. I don't know, it's hovering around like 5%. GBA and Hong Kong is probably, correct me if I'm wrong, it's probably more than 20. And maybe Lei, from a CEO perspective for North Asia, we could even put it broader than GBA. What do you think insurers or the ecosystem could do to increase that insurance penetration rate? Maybe specifically, what could an insurer do to help mature the market in GBA? Is there any strategic point of view or recommendation from GBE or yourself?
Sure. I think like many panelists already said, GBA presents a great opportunity for anyone and wants to do business, and it's a great market. I think from our perspective, we're looking at the GBA, and not only just from a pure sales perspective, we're also looking at the GBA as an area can potentially offer us more innovative products and the solutions and the service concepts to our existing customers as well, and using the digital technology which is coming out from GBA. I think one of the things I do wanted to share with all probably your audience has lots of InsurTech and startup companies at FinTech. And I think one of the greatest value as a startup company can bring to a traditional insurance company like us is innovation. It is product design, because traditionally we are looking at innovation is more from a product angle, and we don't necessarily look from a customer angle and from a customer journey and from whether it's an individual customer or it's a corporate. So when I looking at this and the GBA for GBA, the reason it's a great opportunity for us is we don't have a license in China, and we don't sell traditional insurance products. So we actually don't have any legacy issues. So we will be more looking at what are the new products and new services, new models, and the new digital solutions we can provide to that group of people in GBA. Because we can't just use our traditional insurance, traditional concept to think about that this is a product I want to sell to the customer. And we want to turn it around and to say, for that geography, that probably 70 billion people, what do they need with the new economy in this new digital age? Then we want to work with the technology, with the startup companies, FinTech, InsurTech, to co-create something for those groups. So to us, that's the biggest opportunity we see.
Then I'd like to say that would be opportunity for health services, because the GBA is really, that's an important part of it. It's also the concerns of the general public, the government. We have the rising middle class. They're looking for something better, medical services. At the same time, aging population, and also people more concerned about not just when you're sick, you go to hospital. They're also concerned about wellness, right? Lifestyle. That's the thing that technology really can work with risk carriers to provide something extra than just protection. Is what we call that's even something that really helps to provide some improvement to some behavior. There's something that's also that people are looking for. So that's in their even lifestyle, they had also make insurance part of their important part of the daily life. That's also something that I hope that with that kind of mindsets, we really can not just talk about providing products, we're providing something really to understand what they're looking for, and then at the same time meet them at that online. Where we do meet our customers, we meet them online now. Of course, I also understand that even for, I'm not talking about we are trying to sort of do away with the intermediaries. They are very important, critically important is to say even advice. But with that, we can also be online, help them to do their work even in a much more efficient way.
Got it. That sounds good. I mean, definitely, I think there are a lot of mega trends that we could look at. I mean, definitely before we can capture the opportunity, there are many things that need to happen from my view, from policymakers, from regulators. But at the same time, there are these mega trends that I'm seeing, as you said, aging, for protection, life, medical insurance, the wealth management part. Maybe I want to spend a little bit more time now with Saurabh, as in, can you share in practice, how do you work with these? Do you have any specific use cases in mind, how you work with them in, or, well, it's somewhat related to GBA?
Right. So, I mean, coming back to GBA, right? So let me just say how we support as in AWS. So in fact, we have made some strategic investments and we have a long-term commitment in China. Right? So we opened our first AWS China region. So regions, as we call, is the cluster of data centers, which we call in our terminology, we call them regions, right? So we opened our AWS regions back in 2016 and 2017, which is fully compliant with the China regulations. We then opened our Hong Kong region back in 2019. We also have an AI lab in Shanghai, and the very next, we opened that in 2018. And the very next year, we opened an IoT lab in Shenzhen. So these investments, to support GBA and the overall greater China region provides a very globally consistent customer experience, and customers can then innovate at an extremely fast pace as they would in other geographies using AWS. The developers can deploy cloud-based solutions in China using the same APIs, protocol service, same platform, operational practice used by our customers in other parts of the world. So this commonality has been particularly attractive to multinational companies that can take advantage of their existing AWS experience, the IPs that they have built, the technology that they are using when they expand into mainland China. So AWS have also worked with, in collaboration with the Hong Kong Productivity Council, as well as universities in both China and Hong Kong, to build those skill sets ranging from native cloud solutions to AI, ML, to IoT. We have held bootcamp sessions with universities preparing for hackathons and skill changes. So what we observed recently is there are a lot of universities initiatives as well as the government initiatives to upskill and reskill the future, the workforce of tomorrow, right? In all these upcoming technologies, AI, ML, data and analytics, machine learning, IoT. So that is on our long-term commitment and the investments that we are making to support this entire GBA community, right? So coming back to the use cases, I think our use cases range from sales and servicing to claims to policy admin. We have multiple insurtech working in various segments to support these kind of use cases. I think so all I can say is across the insurance value chain, we have like multiple use cases which are being supported by insurtechs. And then we also see like the traditional insurance players are also collaborating with insurtechs for those niche skills or for those niche solutions that those insurtechs are building.
Got it. No, thanks for sharing it. So I think we're probably have another 5 minutes in, and I like what I'm hearing about, on the one hand, from the big tech cloud service provider, how you invest in GBA and helping out insurtechs. Good to hear from Peter about his broader big picture view and what CoverGo is doing, and from Lei to hear also about that insurtech can bring the innovation, the product design, and the customer experience journey support, helping out the traditional insurers. Maybe is there any call for action from any of you? I mean, everyone is, frankly, we have many of these panels before around GBA. Yes, there's a great opportunity, but it's always the question, when is it, and how can you prepare yourself to capture that opportunity as best as you can, irrespective of whether you're a firm like AWS, big tech firm, cloud provider, whether you're an insurtech or traditional insurer. I mean, the question is, of course, now we know there is a big size of the prize there. How do you capture that size of the prize? What would be your advice to what party or call to action to unlock that opportunity? Maybe I'll start with Lei.
Okay, I think if there's any advice I want to give to InsurTech would be don't think you just need to develop a business model to help to acquire customers, you know, for big companies to do that, because we are looking at for GBA, really looking at so many different kind of services you can offer. So if it's a fintech company or if it's a startup company, if you can really offer something very unique to the customer journey, and I think that is something that will be very, very helpful for a traditional company like us. So I have a lot of startup company approach us and to say, oh, you know, I can help you to increase your sales. And I think that that's great. But I also have companies, you know, coming and they say, you know, Lei, I can help you to probably help your customer to, or maybe help you to understand a risk better. And something like that, and it's also very, very interesting. And and that could be based on the GBA model, because we are looking, even for GBA, we're looking at a lot of customers currently maybe in Hong Kong, and because GBA is opening, so they are going cross-border and they want to do something in China as well. So you shouldn't be just looking at the targeting the China, the population in China, targeting the population in Hong Kong. We can also look at across the border. And to do something probably adding value to their experience for their day-to-day, you know, whether it's related to insurance or maybe it's not related to insurance.
I agree very much. We talk about the cross-boundary collaboration. The call for action is I would talk about even the role of the Insurance Authority and also the Hong Kong Federation of Insurers. I think that they are the kind of platform that can bring the people together. But back to the topic today, that's I represent CalVigo. We are voted as the InsurTech of the year by the Asia Insurance Review last year. So I'm talking about here is although we started in Hong Kong, we already have presence in many other markets in Asia, in North America, in the Middle East. The thing is that technology is borderless, which meaning that if we can also bring insights from other regions back to this part of the world in order to fertilize, also add more sort of new ideas to how we deliver insurance together with the cloud sort of infrastructure. That's very exciting, because we should always bear in mind that if more sort of interaction of ideas, that can really create something even more beautiful. When you talk about parametric insurance and bad insurance, that's the kind of thing that we can learn from other markets. We're doing work in other places like even Middle East, even in Thailand, in Canada. So this is something very exciting, that Hong Kong is really an international city. We should tell a better story about Hong Kong, and that we can really do something together by bringing like AWS, international company like QBE, and also InsurTech from all over the world coming here to show the world that insurance is a force for good, and using this kind of collaboration. Thank you so much.
Thank you. Saurabh, what about yourself?
So
before I close?
Call for action. I'd like to echo what Peter earlier mentioned, right? So keep customer at the heart of every decision that you make, because GBA and all the policies that are getting created to support the community there are basically, GBA is the policies and the guidelines is basically to support the citizens and the population of China and Hong Kong and this part of the world, right? So if you're keep the customer, stay customer obsessed, focus on people and culture. Yes, technology. I represent a technology company, but we always emphasize on change in people and culture, right? So only then you can embrace innovative solutions quickly, rapidly, in order to help the end customer.
No, perfect. Thanks for that. I mean, I think we covered quite a lot in just a matter of 35 minutes. Yes, we haven't cracked the full code as in get the opportunity right now. But at the same time, I think probably Lei, you'll get a lot of additional calls from insurtechs about what they need to do. And insurtechs have a better understanding of what they need to do to be successful, like when they are, well, starting to be like a cover girl, like with Peter's group or working together with AWS. As a final note, I do agree that I think for Hong Kong, we need to have a positive narrative. And I do think that the insurance sector, with its strengths in risk management, with its strength in product innovation, can play a bigger role in GBA or across the border. So with that, I want to thank the panelists, Lei, Peter, and Saurabh. Good to see you. It was a good discussion. Hope that for the audience out there that tuned in during lunchtime, that you felt it was somewhat useful. And do call Lei, Peter, Saurabh, or myself if you've got any questions. Again, thanks Asim, the organization, and Mushir for inviting us. I think I enjoyed it, and I look forward to the future ones.
Thanks, Lapton.
Thank you.
Thank you for inviting us.
Thank you.
Thank you. Bye-bye.
Lapman, Peter, Lei, and Saurabh for the wonderful panel. I'd like to also thank our sponsor, AWS. Next, we have a 45-minute break, during which we'll be playing a recording from our previous event, GBA Wealth Connect, about private wealth and sustainability. Also, stay tuned. We'll be back with our next keynote session at 2:15 p.m. Thank you.
Hi, everyone. Good afternoon and good morning, good evening, in case you're joining us from other time zones. My great pleasure to be moderating this panel and learning together with everyone from our expert speakers. And let me ask them to introduce themselves in no particular order. Really looking forward to the session. Let us begin with perhaps Dr. Eva Law. Just a reminder to unmute yourself. Thank you. Still happens to us to me every time. Yeah.
Yes, sorry about that. Okay, let me introduce myself. Sorry, everybody. I'm Eva, the founder of Association of Family Office in Asia. We serve the family office and private investor in Asia, playing particular focus helping them to formulate their competitive advantages through sustainability strategies.
Thank you so much. Great to have you today, Eva. And let's move on to Marianne, who's joining us today from the States, all the way from the other side of the world.
Thank you very much, Victoria. Yes, currently I'm in the East Coast state, so time is a little bit awkward. But I am Marianne Zhang, and I have been an Asian Wall Street financial veteran and was a Managing Director, Head of ECM and Syndicate, and in the Equity Capital Markets Division, leading team across borders, offering financial solutions to issuers and investors. Everything I share today will be independent and holding my own personal opinions and views. In addition to being a financial market expert in the financial market expertise, I have been focusing tremendous value on community service and engagement, particularly with a focus on advocacy of sustainability and ESG.
Thank you so much, Marianne. And our last panelist today is Francesco, who is dialing in from Hong Kong.
Thanks, Victoria. Yeah, I'm Francesco. I'm based in Hong Kong. I have a background in private banking, but I've been in impact investing for the last 6 years now. First in Switzerland with an impact. And then here in Hong Kong with the Sustainable Finance Initiative, which is a network of family offices across Asia who are committed to deploying capital towards sustainable investing. In a nutshell, we help our members understand various impact thematics and products. We offer sustainable finance education to both individuals and corporates, and we also do consulting work in the impact space. Looking forward to the discussion.
Thank you so much. Yes, and with this, let's jump right into discussing how sustainability these days is featuring in private wealth. Is it changing? Is it not? What's going on? And let me start by saying that in my field, in the corporate world, we see this booming demand for ESG, for sustainability, for climate-related services, knowledge from the clients. Is it the same for your organization or members? Are you observing the same trend in the last perhaps 3 years? What changes are you seeing? And I'd like to ask this all participants to kind of open the floor. Let's open with Eva, and then please feel free to jump in at any point. Let's keep it interactive. Thank you.
Yeah, sure. I think the ESG is really receiving attention, and there are so many development and momentum in the market. And the message from COP26 ring loud and very clear for many corporations that paying attention to environmental, social, and governance issue is becoming increasingly critical for all companies across all industry. And now people and corporations are treating ESG much more seriously. Sustainability and SDG are no longer slogan shouting in AGM or press conference. People want leaders to drive real change and really bring positive impact. And over 80% of the family principal, the C-suite executive, and the investment professional in our AFO circle believe that ESG program will generate more shareholder value in 5 years' time than they do today. And I believe in big data. Many figures tell me that company with higher rating on ESG is actually receiving a lot of advantages. They enjoy the average operation margin 3.7 times higher than those lower ESG performer. An investor in these companies also receive higher annual total return, outplacing the poor ESG performer by 2.6 times. So it's a very sexy figure, right? And simply put, sustainability is really a business approach to create long-term value by taking into consideration how a given organization operate in the ecological, social, and economic environment. And sustainability is built on assumptions that developing such strategies foster the company longevity. As the expectation on the corporate social responsibility increase and also the transparency become more prevalent, companies are recognizing the need to act on sustainability, and professional communications and intention are no longer enough. I see a tremendous expectation from the public society where people demand leaders to really take real action. That's just I think the big change and what I have seen in the market.
Thank you. These are some very, very attractive numbers. And I love that there is demand for transparency.
I think and to quickly jump in just from a regulatory government guidance perspective in the last few years. I think that we've seen since 2019 with the global efforts by PBOC, Bank of England, and also leading central banks, detailed reports on a call for action on climate changes as a source of financial risks. It was the first comprehensive report on behalf of Network for Green the Financial System. It has been a significant efforts from the regulators, central governments to financial institutions, all have been taken to a very different level that we as a community must embrace and embed in our process as the market participants. And also further into 2019, we also saw the China's progress report on implementation of the 2030 Agenda for Sustainable Development. The report itself features of cases depicting efforts by Chinese governments at all levels, showing how the private sector and general public are contributing. We are seeing that China is pushing its sustainable development forward in the three key areas: eradicating extreme poverty, building an ecological civilization, and also contributing to global climate and sustainability in governance. So we see that one of the highest profile commitment that the Chinese government has made is to reach peak carbon in 2030 and achieve carbon neutrality by 2050. While recent energy challenges have resulted in temporary increasing reliance on oil and coal again, I believe this is a widely just a short-term necessity that it will not impact the bigger picture goals. I could go on and on with more support of government regulators focus on this. With the updated IPSF Common Ground Taxonomy on Climate Change Migration published just earlier this year in 2022, together with China and the European Union, further remind visible, renewable, and sustainable measures in industries, including energy, manufacturing, construction, transportation, and agricultural. All should have outlined more detailed financing availability and help with the categorization, refinement of green finance relating to financial activities internationally. So we have all seen a very high surging demand from investors, buy side in particular, including.
It seems we might have lost Marian for a second there. Let me ask Francesco while Marian is dialing back in. Yeah, what trends are you seeing?
Sure, I can just complement maybe what Dr. Ivalo and Marian were saying from an investor perspective. I think what we see with regards to our members, they really benefit from the ecosystem and network that we offer, the Sustainable Finance Initiative, and they've been learning from each other and from us as well. So I think the way they look at sustainability tends to evolve over time. Just to give you a couple of examples, I think over the past 3 years or so, we saw our members allocating a bigger portion of their investment portfolio to sustainability topics. Their approach to investing has gone from, let's say, more opportunistic before to more strategic now. So focusing on specific themes, using portfolio carve-outs, for example, or working with banks on discretionary mandates. Some of our members are actually embedding sustainability at the core of their businesses. So, for example, we have some members in product manufacturing, and they started to embrace, circularity, business models of production, reducing waste, etc. And then what was interesting to see during the COVID times, actually, was that the pandemic actually strengthened our members' conviction in sustainability. It's a good strategy for them. I think the challenge to find is really to find the right asset class to invest into, depending, on the situation. For example, with what is going now what's happening now in the markets, there is a need for more liquidity, shorter lockup periods, etc. So the challenge is a bit to find the right asset class. And then I think something that we saw from our members is actually the understanding of how they can be more additional by supporting, for example, first-time fund managers or companies that have difficulties to access financing or need flexible financing, for example, like concessionary returns or with what is going now what's happening now in the markets. There is a need for more liquidity, shorter lock-up period, etc. So the challenge is a bit to find the right asset class. And then I think something that we saw from our members is actually the understanding of how they can be more additional by supporting, for example, first-time fund managers or companies that have difficulties to access financing or need flexible financing, for example, like concessionary returns or longer tenors, etc. And then maybe the last point, it's more at an organizational level for Sustainable Finance Initiative. I think the variety of sustainability topics that we see in Asia has broadened over the past 3 years because of topics that are more popular in the US and Europe that have spilled over to this side of the world as well. So we started to look into thematics that are less mainstream, such as gender-lens investing, sustainable textiles, and like nature-based solutions, for example.
Thank you, Francesco. This is incredible. And building on this, as the field of sustainability is basically huge, right? There's so many topics and subtopics and industry sector-specific, things to keep abreast with. And with the growing interest for this topic, right? There are lots of people. I'm sure you're getting a huge amount of requests from someone who wants to start but has no idea how to approach this subject. What would be your recommendations? How would you recommend someone to jump in? Let's perhaps start with Francesco and then open the floor.
Sure. I'll try to be brief, but just feel free to cut me off. I think what we usually do is to advise or recommend private wealth owners and family offices to identify the values that drive them and then move towards aligning their portfolio to these values. There is a variety of approaches, across the sustainable finance spectrum that are available to investors. We believe that it's important to make an initial distinction that is between ESG and impact, ESG being more of a risk management tool and impact focusing more on generating hopefully positive outcomes by investing in companies that are driving change. So through our work, we identified 4 main approaches to get started in impact, which are not mutually exclusive, by the way. The first one being no harm, which means basically negative screening, removing holdings that are not aligned with your values, and this tends to be more of an ESG approach. Then there is the option to start small with some selected investments to basically dip your toes into the field and get acquainted with sustainability. And then the natural next steps from dipping your toes is basically to create a carve-out from your investment portfolio and dedicate that to impact 100%. So this is usually used to empower the next generation of a family, for example. And it's useful to start creating a track record in sustainability if that's what the family wants to do. And then I believe the last one is what we call all in, which boils down to systematically incorporate ESG and impact throughout the investment pool. This requires deep conviction in sustainability, and it's a bit more of a structured approach for families to gradually transition towards 100% sustainability. Last thing I would like to say is that sometimes it can be a bit overwhelming to move your first steps in the space. So organizations like Sustainable Finance Initiative, for example, can help provide the necessary network and knowledge. For example, we have launched an education platform recently, New Impact Society, which helps to get started in this field.
Thank you, Francesco. Would anybody else like to add to that?
Maybe let me share about my observation how the old and younger generation of the high net worth investor approaching sustainability. I would say the face of today's environmental and social curse is apparently wrinkle-free because young people have the most significant stake in the sustainable future. I'm not surprised they are more active than their parents in leading the change and driving sustainability on global and corporate agenda as well as in their daily life. And most of the young leaders in the family business are willing to or have already made very strong commitments to sustainability, in large part through upholding transparency and addressing material issues. Though 90% of these family principles in our circle find sustainability as important and imperative, but less than 50% of these principles have contemplated how to make sustainability be its strategic advantages, and merely 20% of them systematically incorporate sustainability into their business model or business strategies. From being reactive to proactive, I believe the young leaders are embarking on a more sustainable journey in recent years, while the old generation generally buy into ESG, but without very clear ideas to deploy sustainability strategies and action plans. So both generation and their family corporation really needs technical or maybe a consulting support.
Thank you, Dr. Eva. Mariam, would you like to add anything here to perhaps, on two topics now? How do you see, what difference do you see between how different generations approach sustainability, right? And also, where do you start? Where do you begin?
I think in terms of sustainability, I think I would like to highlight why would this be an important part of the investment plan for either family offices, individuals, household, or even within investment firms. Recently, if we look at from demand side or customer investor side, what I've witnessed is in the last few years is that many family offices currently, especially ones from US and Europe, and now spilling over to Asia as well, they are planning the wealth of their growth of their wealth in a much longer terms, including the next few generations. When particularly family offices deploy their capital, they are always asking the questions, how would this benefit my next few generations? And this ties very well with sustainability, including that of ESG. They now have mandates focusing on companies those can show much more visible and identifiable growth commitment, or marking leading for the next few decades to come, but also sustainable in a way of how the company structure itself, either board composition, how the company treat their workers, how is the company operation and manufacturing be sustainable, not producing any more greenhouse emission into the atmosphere, etc. Those are all questions that we've experienced as market participants that investors, including family offices, have been asking, as well as global leading loan-only funds. So, as Eva mentioned earlier, with family offices, those have excelled in their core business and now looking for next few generations. They are very highly focused on giving back and doing good with their wealth, and also have been keenly focused on deploying the capital in a way that I believe are making our world a much better place. Having said that, I think a few more, going back to Francesco's point earlier on, we are also seeing a few more available financial products in the marketplace coming from Asia, including Hong Kong, namely New World Development Property. They have recently issued a US dollar denominated social and green dual tranche offering in the public bond market. And also their competitor, Xinhouxin Shanghougai Property, signed 21 billion Hong Kong dollars worth of sustainably linked loan. And I think with this, in a way, more competitive landscape within the marketplace, within the vertical, to be more involved in sustainability as well as ESG related financing options should spur more demand side, more supply side versus demand side of the equation.
Thank you, Marian. Well, let me ask, and then sort of continuing on the subject. So how do you see private wealth managers in GBA specifically looking at integrating some of the ESG principles, or perhaps even looking into sustainable projects to drive impact in the portfolios? And what is the area of focus there?
I think right now a lot of the investment firms have already becoming deploying much more mindful and started from internal education on sustainability to be part of the investment plan. But on the other side of the equation, we're also seeing that companies and management of the boards also need to be well educated to understand how their decisions could impact shareholder values, returns on equity, and also consequently the return on their share prices on the public listed companies. Growing portion of the investment world will no longer give capital to companies that do not meet ESG standards, and I believe that this trend is established enough that we would expect it to accelerate. But going back, I would like to highlight one point while we both discussed earlier. Having highlighted everything we've shared, I think it's extremely mindful for the investment portfolio companies, for the listed companies, private companies, as well as investment communities, that it is very important also for our audience to understand of avoidance of greenwashing. We all need to be highly transparent, be diligent, communicate with our strategies and future steps to be taken, constantly educate our stakeholders, both internally and externally. I believe that this can be applied on both investment firms, investment banks, as well as corporates. Firms that attempt to get away with an ESG compliance without actually making real changes or truly caring about what they are doing with their business will be caught and punished, and this will be painfully backfired in the medium to long term. And so, really understand what what are we looking for within a regulatory framework in determining ESG as a sustainable mandate is crucial, important, as well as transparently communicate to our stakeholders.
Thank you, Marianne. Francesco, would you like to add to this? Let me just.
Sure. Yeah. Maybe on the question on like how are private wealth managers in GBA? I guess, like we look more at Hong Kong. I would say looking at integrating ESG into their portfolios. I think what we notice is that like mostly adopt like simple negative screening as a main strategy. So meaning they screen out companies that score poorly, right, on ESG aspects. And what we noticed as well from investors is that from investors here in the region is that I think they increasingly, as Marianne pointed out, increasingly expect managers, to target positive and measurable ESG outcomes along with positive financial returns. And I think this is all also supported by regulatory requirements, as mentioned before. So, we saw fund managers from a certain size up, now I don't remember exactly the number, will soon be required to take climate risk into consideration, right, and make appropriate disclosures in Hong Kong. Hong Kong-based organizations that will have to comply with TCFD by 2025. And, for example, China that has just published ESG disclosures, which are voluntary for now, but, I think this gives a clear idea where we're headed in terms of how wealth managers are going to behave in the region.
Thank you. Dr. Eva, what's your opinion about that? Yeah.
Okay. I think in the private wealth industry, it's a very standard practice for the private wealth managers to align the client's expectation and their very specific requirement in structuring the wealth solution. And how they integrate the ESG principle is very varied and very personalized. But in general, I would say the advisor would strive to combine the good financial performance with environmental and social objective, but at the same time observing the principle of good corporate governance in selecting the investment target, managing the portfolio, and the appropriate exit as well. It is the same phenomenon in both the primary and the secondary markets. And we also observe that there are certain claims that received attention and capital chasing these investments over the past year. Obviously, climate change is the leading one. And I believe it will remain very central to investor strategies over the coming years as well. This is indeed a very broad agenda that covered many aspects like green energy, energy efficiency, waste management, biodiversity, carbon emission, hydrogen, clean water, green bond, and so on. And other themes that currently receiving attention are the advanced technology that brings disruption and a better world. Also, the COVID and the high inflation are also drawing capital to agriculture, to food and health-related business. That's the recent observation and trend.
Thank you. I think it's touching on a very important point of innovation and technology. Let me ask here, do you see the technology changing the playing field? And what are perhaps some of the associated trends that you're observing?
Okay, I would say I believe robot will be our investment manager sooner and faster. Everyone is now using the apps and software in gathering and analyzing data, and also using these tools to construct and manage our self-directed investments. So we don't need investment manager in the future. And I believe it's a trend and also an end outcome to also lower the fees. And that's what, open opportunity to those underprivileged investor, making investment open, not just, the good opportunity rests in the hands of the ultra wealthy, but also to, the general public.
That's very interesting. It sounds like some jobs are at risk.
They need to find some ways to encrypt the knowledge. Maybe, they need to be the program manager instead of the investment manager.
Yes, or an ESG specialist.
Yes. Yeah.
Mary and Francesca, would you like to add to that? Is there anything you are seeing in terms of innovation and technology, how it's disrupting the playing field?
I think when you raise the question about technology in terms of a concept of framework of sustainability or ESG, because a lot of investors, or especially leading institutional investors, have been very diligent in terms of requiring their investors' portfolio companies to be able to transparently communicate and also report back of how they are doing in the concept or framework of sustainability methodologies. One technology I felt have been very powerful would be the blockchain technology. It helps the investors and portfolio companies to be able to track its entire supply chain management from upstream to downstream, and able to help with the life assessment cycle in terms of how the companies are producing, manufacturing, also recycling of its material. It helps
in the payments and blockchain field, Mr. Luther Madej, the head of FinTech Strategy and Innovation from MoneyGram International, and Jason Shalpala, the Chief Operating Officer of Stellar Development Foundation. Thank you so much for attending today and talking about this very interesting collaboration and partnership between your organizations. I'm going to ask each of you to just give a really brief intro on your background and your current role and how it touches this collaboration. So I'll take Jason first.
Hi, so really happy to be here. As Ada said, I'm Jason Chapala. I'm the COO here at SDF. And we're the foundation that shepherds the Stellar code base and tries to make it a success. And so in my role, I kind of touch all areas of the business, certainly all areas of operations, and was also pretty, was very involved in forming this partnership with MoneyGram and various other strategic partnerships. And it's been kind of a few years in the making, so it's been really exciting to kind of see it come to fruition now, and really excited to talk more about it today.
Thanks so much, Jason. Luther.
Yeah, Luther Madej here. I'm relatively new at MoneyGram, been here for about 2 months, but super excited. I'm the head of FinTech Strategy and Innovation here at MoneyGram, which means that I get to focus, and one of the remits that I have is focusing on this partnerships that we have with the Stellar Development Foundation, and then focusing on other key partnerships where we're growing, where we operate, and how we operate.
Excellent. So it sounds like both of your roles really touch this kind of intersection of fintech and blockchain. Let's get into the details of kind of how this collaboration works. I'll start with you, Luther. Can you tell us exactly what is MoneyGram Access and how does it fit into the suite of services offered by MoneyGram around the world?
Absolutely. In June of this year, so basically 2022, MoneyGram and Stellar Development Foundation launched really a first of its kind global on and off ramp service for digital wallets that created a bridge between cash and cryptocurrencies. And basically what that did is increase the utility of the digital assets that are in those wallets, right? And it's that service which is called MoneyGram Access. With MoneyGram Access, any Stellar enabled digital wallet can seamlessly integrate to MoneyGram and immediately have access to the 240,000 plus locations that MoneyGram has globally. And to kind of dive in a little deeper, what this basically does, it means is any customer who is using a digital wallet that's on the Stellar blockchain can now walk into a MoneyGram location, use their cash to buy crypto or cash out from crypto directly into cash without ever having to use their credit card, debit card, or bank account.
It's fantastic. It seems like very high utility and kind of an unexpected partnership. Jason, can you talk a little bit about how it came together? I think people generally think of blockchain and crypto as disruptive to a traditional cross-border payment system. How did the partnership with MoneyGram even take shape?
Yeah, absolutely. So as I mentioned, we've known a lot of the folks at MoneyGram for a few years and have been talking over that time. And I think the real breakthrough was flipping that sort of disruption paradigm to get to this use case. I think a lot of people in blockchain have been approaching projects like this from the perspective of, let's take something that a legacy player does and let's replace that with blockchain. So let's take something they do now and do it better. In some cases that can work, of course, but take a company like MoneyGram. They've spent I don't know the exact number of years, 70 plus years building out this amazing agent infrastructure, cash infrastructure. The idea that you can just replace one piece of that and all of a sudden it's better, that's not so likely. And so a lot of people were focusing on it from that perspective. They were thinking, there are these issues with cross-border payments. Let's just replace one piece of the infrastructure with other infrastructure. What we ended up realizing and doing is flipping that a little bit. It was no longer what can a blockchain do for MoneyGram. It was what can MoneyGram do for a blockchain. Again, they've spent all this time and quite frankly invested all this capital and effort into building out this infrastructure. Well, wouldn't it be great if that could benefit a blockchain? In this case, of course, Stellar. And so sort of flip that. And what you have now, like Luther was just explaining, is anyone using Stellar or any wallet on Stellar now has the benefit of this incredible infrastructure. And, cash isn't going anywhere. A lot of people, people have been predicting its demise for a long time. And maybe eventually cash will go away, but today, I think the latest statistics are something like 60% of adults globally are in the so-called informal economy, really cash-based. So it's not going anywhere. And if people in the blockchain industry really want to impact individuals' lives, we need to have that connection, or as Luther described it, that bridge between the two. And so that's what we were so excited about on the Stellar Development Foundation side, because we view as our mission increasing equitable access to the global financial system. And there's this huge piece of that system that crypto and blockchain really weren't touching yet, and MoneyGram is the way to connect those two things.
Yeah, it's really, and you kind of flowed right into the topic that I wanted to touch on, which is being a mission-driven organization that uses blockchain to further financial access and financial inclusion. It's easy to see how this could be transformational to people who don't have access to ordinary financial services that a lot of us take for granted. So that's really exciting. So turning back to MoneyGram International for a moment, Luther, I read recently, I think it was an FXC report analyzing second quarter results for the public company. And it seemed like, striking actually, the rise of the digital services and the growth that it's showing in that part of the business. What are some of the technologies contributing to that growth? And do you see this as part of a larger trend for MoneyGram International?
Yeah, that's a really good question, Ada. Let's first talk about like the digital growth aspect of it, right? So we've seen a great response from our consumers to our digital first strategy. And so all the investments that we've made thus far and the investments that we're continuing to make, there's been a great response. And the response is the numbers, right? So we're currently digitally enabled in 100 plus countries, over 100 plus countries. And if you look at our 100% of our transactions, almost 44% of those transactions are completed digitally, which basically means that they're done on the website or they're completed on the app, right? So then if we talk about like what's driving that, I would kind of break that down to like three things. One is the app that we talked about, which it's called MoneyGram Online. Fantastic app, has nearly 5-star ratings across all major app platforms. The second thing really is the way that people receive the assets, right? And by what I mean by that is usually when people think about MoneyGram, people think about just cash flowing in and out. Well, now people who are receiving can actually receive it in cash. They can receive it into their bank account. They can actually receive it into a local digital wallet, like if you think of like Paytm or something in India. And really, huge thanks to one of our partners, Visa Direct, for enabling a lot of this functionality for us. And then thirdly is our consumer base, right? We're constantly seeking new consumer bases, but we are very, very, blessed with a great existing consumer base with a high retention rate. That's really helped from that perspective.
And I'll just kind of piggyback. I think it's interesting, that answer is all, Luther's answer, it was all about expanding, all of these different methods and growing who has access to this. Again, I think sometimes in the blockchain industry, people have this view of, let's replace everything with blockchain. And so like, let almost consolidate it down to, in some cases, the most maximalist would say, one currency and one set of rails. And it doesn't have to be like that. Again, maybe eventually, I personally don't think that's going to happen, but maybe. But for now, it's more about expanding. And so, Luther just talked about all of these different rails that, MoneyGram Online already touches. And then, with the Stellar partnership, that's another set. And so it's another way that we're very much aligned. We're looking to expand. These are additional tools that people and businesses can use. They don't have to supplant anything. They can supplement and expand.
And Jason, as you think about the expansion of usage of the Stellar network and applications being built to interact with the MoneyGram capabilities, what do you see as some of the highest impact areas or companies?
Yeah, so two use cases come to mind right away. I mean, the first is sort of the simpler one, which is like we've talked about, just sort of connecting crypto and that cash economy. So people who, they've been hearing about all this crypto stuff, they have no way to get access to that. The ability to cash in, use a MoneyGram location, walk in with cash, walk out with a digital asset, and then if they want to then explore that world of digital assets, they can. So I think that's one. So like for exchanges, for example, that's very, very compelling to them. The other one that I personally think is really exciting is you can think of this as the gig economy or freelancers or digital nomads, whatever buzzy term you want to use for it. The idea that if you're a platform that wants to pay out to individuals like this, you can now just pay in USDC on Stellar and then know that any of those individuals, essentially wherever they are, they could cash out into fiat. And they might move, especially if we're talking about digital nomads, you as that platform, you can just focus on paying out in USDC and then let essentially the Stellar infrastructure and the MoneyGram infrastructure take care of the rest. So when it comes to the actual applications and companies, I think any sort of platform that is focused on freelancers or gig economy, and then on the other side, any wallet that would want to cater to those individuals, because that's where the payout would go to. They would receive it into that wallet. And like Luther said, what's nice about this partnership is it's any Stellar enabled wallet can do this. And so it doesn't need to be one wallet to kind of cover everyone. You could have a wallet that's very freelancer focused, or a wallet that's very, Uber driver or a similar sort of use case focus. So those are the two that come to mind, kind of connecting, crypto with the cash economy, and then gig workers or freelance workers and payouts to these individuals that right now it's kind of tough to reach them broadly, and a platform that wants to do that would need to do a lot of different integrations. With this, they can do essentially one integration and then cover globally.
Absolutely. Luther, can you talk a little bit about the importance of fiat pegged, tokenized digital assets, what we call stable coins? What is the role, do you think, of these sorts of, digital money in the ecosystem around MoneyGram?
Yeah, that's a great question, right? So, I mean, what we're talking about here, it's not a new concept. It's relatively new, but it's not brand new from that perspective, where people have looked at digital assets like Bitcoins, etc. But I think the biggest thing that you get from a fiat-backed stablecoin like USDC is the stability, right? Which is the biggest thing that comes with using an asset like that. Right, there's other stable coins, etc. But like when you look at USDC, the fact that it's backed by every USDC is backed by $1, it gives us, from a money transfer perspective, a great instrument that we can use that is stable. So when it comes to converting to different currencies, you have one. It's like a lighthouse, right? This is our lighthouse that we can set, that we can use as a stable part of that particular transaction. And that stability means a lot for us, because we operate in 190 plus countries. So having and to peg it back to typically $1 would be the best thing. But then this is really even better than that, to have USDC, which is backed by $1.
Definitely. And Jason, can you comment a little bit more about stablecoins, USDC, and others?
Yeah, I mean, so I of course agree with everything Luther just said. I think the promise here, or what is so exciting, is this idea of it can start to feel almost like a bank account without it needing to actually be a bank account. Or another way I like to think of this is, what's great about cash? Cash is simple. It's the simplicity and the finality. The downside is it doesn't have as much reach. You obviously are limited by kind of your literal physical reach. You can't send it. On the other side, you have digital money, which of course is nothing new. Anything in your bank is essentially digital money. That has, it's flipped. That has amazing reach. You can essentially send it anywhere all over the world, but it's more complicated. It's not as simple. Settlement isn't immediate. It's just harder to understand. Stable coins kind of combine the two. You get the simplicity and the finality of cash, but you get the reach of electronic payment means. So I think that's the promise, that people can walk around with this thing, kind of in their pocket on a device, and get the reach of an electronic form of money, but the simplicity of cash.
And Luther, as far as, technology products obviously have their roadmaps and periods of rollout and testing and all these things. Can you talk about what's available today in terms of the service? What should, folks who are watching this chat in the fintech world be looking to do with MoneyGram today as it relates to this product?
Yeah, given the fact that we went live in June, I'm happy to report that we are absolutely live, which basically means that we can offer cash out in 190 plus countries and cash in currently in 12 countries, but we're constantly adding a ton more countries, and every month we add new countries. So definitely, it depends on when you're asking us, but I think from a cash in perspective, it's an ever increasing list of countries.
Excellent, excellent. I will try to get a link to a country list as well. I know that we probably have watchers from all parts of the world, but particularly in Asia. So definitely will try to communicate that in the chat during this chat. And then finally, we're coming to the end of our session, but I would love to have just some concluding remarks from each of you. I'll start with Jason. Is there any advice that you would give to companies that are looking to build on top of this technology? Any surprises along the way, or anything you want to comment on in terms of standing up fintech solutions in emerging markets?
Yeah, I think two things. One is don't ignore cash. It matters. It still matters, and it will continue to. By the way, we talk a lot about the unbanked for obvious reasons, but this also has applications for people even with bank accounts. You only have to look at kind of younger generations and how much they use things like Venmo and Cash App. There's definitely a swath of people that we wouldn't normally think of as the unbanked, but are choosing fintech solutions that are less bank-like. So just as I said, cash isn't going anywhere. Banks aren't going anywhere either, and they will continue to play an incredibly important role. But just want to make that point that this isn't just sort of the traditional sector of the unbanked. But to your question, so I'd say, yeah, don't ignore cash. Even if you are a fintech, think about how can you get access to that key infrastructure, and how can you give people the benefit of cash in and cash out. And then the second point I would make is, you asked about what are applications and use cases we're excited about, and I talked about a few, but the point of this is sort of the stuff we haven't thought about yet. We're so excited to be working with MoneyGram because of the scale. Like Luther just talked about, the hundreds of countries that they're in. I think you guys have over 400,000 locations around the world. So the point of this is to get this truly global scale, and then have it work with any Stellar wallet, and then see the use cases that we haven't thought of, because there certainly will be those, and that's what's so exciting about this. So those would be my 2 points. Kind of don't ignore cash, and the point of this is the stuff we haven't thought of yet, not the exact use cases we're already doing and focused on.
Yeah, great to have that open attitude towards innovation. Absolutely. Luther, a few more comments?
Absolutely. Yeah, I think the strength of this partnership, and if you look at the opportunity that this unlocks, is quite immense, right? So where we get really excited, and I think where Stellar Foundation and Jason and I really get excited, is the fact that we're basically opening up this crypto economy to a whole swath of people that didn't really have an easy way to access it, right? This takes out that middle step and gives them a faster and easier way to kind of interact with that, which basically just increases the number of participants in the overall economy, in the global economy. And that excites us every day.
Absolutely. Thank you both so much for your commentary today. I learned a lot, and it was great to hear how this collaboration came together. I know that companies, people who are watching this chat, companies that are interested in building on the technology can reach out to all of us, and we look forward to seeing what people come up with next.
Hi, everyone. Good afternoon. Welcome to the panel Talent 4.0 Key Enablers for the Future of FinTech Talent in Asia. This panel is brought in association with the Global Impact FinTech Forum. I'm super excited to introduce our moderator, Douglas Arna, Carey Holdings Professor in Law at the University of Hong Kong. Douglas, over to you.
Many thanks, Asim. And just to begin, let me thank everyone for joining the event today. And as I think Mushir said at the beginning, apologies to all of those of you who had hoped to join us live in person at Hong Kong U. I think all of us were very much looking forward to having the combination of a live audience with the virtual event. But unfortunately, despite everything else, the weather of all things, not cooperative. And even though in the window behind me, I'm looking out at a beautiful day over Hong Kong Harbor, we had a typhoon signal 8 at the start of the day. And so it made sense to move the event entirely online, which of course, today is no difficult challenge to have an event entirely online. In fact, I think the greater challenge sometimes is to actually have the live face-to-face event as opposed to the online only event. So sad to lose that, but very glad to have you all with us and very glad to have a panel with me of good friends and experts on the topic that we're going to be speaking about today, which essentially is the future of technology and the role of talent development moving forward in Asia. And I'm joined by Tramon Nguyen, co-founder of CFTE, which is the Center for Finance, Technology, and Entrepreneurship. Malik Khan Kataria. Malik is co-founder and global board chair of GIFT, the Global Impact FinTech Forum, and Yashraj Tyagi. Yashraj is CBO and CTO of Cash-E. And what I wanted to start with is actually asking each of you, how did you get involved in your respective ventures? Because in each area, each of you are doing some very interesting things in this area. And I'd like to see, one, how you got there, and two, what it is that your firm or organization is actually focusing on yourselves in the context of talent development. So maybe I'll ask Tram first.
Yes, no, thanks a lot, Douglas. And first, thanks a lot for Musher and the team for the great Forum Summit. It's a great pleasure and delighted to be part. Hello, everyone. So I'm the co-founder of CFT. We're the Center for Finance, Technology, and Entrepreneurship. So as Douglas was saying, and thanks, Douglas, for your introduction. To tell you a little bit about me, so CFT is the center that I co-founded a couple of years ago. I'm also the board member of EDEC, the board member of the Association of Corporate Treasurer and Entrepreneurship Expert at Said Business School. And prior to CFT, my role was not in education at all. I'm coming from the traditional world of finance. I used to be on the trading floor in New York for Standard Chartered, moved to London. It was supposed to be for 1 year. I've been here for 21 years in London, and I joined UBS Wealth Management in London and then advising family office too. But a couple of years ago, 6 years ago, we've realized that there was a huge knowledge gap, huge knowledge gap in the world of finance, technology, innovation, and in fintech. And that's why we set it up CFT. So we are a high impact education platform, partnering today with governments, regulators, the largest financial institutions, and the startup to bridge the gap between finance, technology, innovation, and helping talent build skills through training programs online. At CFT, we are really privileged to have worked with amazing organizations and governments from all around the world to deliver what we call that upskilling, reskilling at scale. More than 100,000 professionals from 100 countries have participated in CFT program to accelerate their careers in fintech and new finance. So, and in addition to London, CFT is also present in Singapore, Abu Dhabi, Malaysia, Hong Kong, Hungary, Luxembourg, and we just opened France. So I've been extremely vocal for many, many years already about the importance of upskilling, reskilling workforce. That's why we're working with them in this mission. And what I would say to contextualize of why we are doing this is that having created CFT a few years ago, what is really clear today is that we are witnessing a very quick transformation of the skills required in the financial services. And my question would be, what are those skills? Why are we talking about upskilling, reskilling? So I spend time with government, policymakers, industry experts, entrepreneurs, C-suite execs, and academia to find frameworks and initiatives and ways we can do it in a way we can create talent very quickly, also in Europe, but also in Asia. And Douglas and Malik, we've been working together for years. We know each other. So there's lots of discussion we can share about what we are seeing in the industry, and especially in Asia. It's about talent in the financial education for Finance 2.0. And I'm also the co-author of a book, which is called the FinTech Job Report, a report that analyzes the 40,000 new jobs that didn't even exist a couple of years ago, that comes and offered by the 225 FinTech largest companies in the world. And what are the jobs that most people don't know? And the findings are really interesting. So I'll be very happy to share more later. Thanks a lot.
Thanks, Tom. I actually just wanted to follow up on that because I know in the context of CFTE, you began with a fairly sort of, if you will, traditional focus on online education. And I just wanted to see from the standpoint of what CFTE is doing now, what sort of directions are you going in the standpoint of what you're actually doing from this idea of upscaling?
Yes, no, thanks, Douglas, for the question. You're totally right. At the beginning of CFT, it was how do you create a platform for educating people in finance like myself, not want to be left behind, not understanding at all what is blockchain, APIs, cloud computing, AI, etc. And that was our kind of target audience. Today is no longer the case. Today, it's about how do you create online platform to allow governments to upskill at scale, not only thousands, but the idea is very much making a huge impact on the workforce. So we are now building academies, building programs for governments to upskill citizens, to create a new type of workforce, not only targeting finance professionals, but today we are upskilling pretty much everyone. Everyone coming from diverse industry, so people in technology, people that are entrepreneurs, marketers. We have very, very unique diversity in terms of people we are training so that they can join very quickly, efficiently, this new world of finance and the fintech startups. So we have very changed now our way of doing education online, really with the idea of how do you do it efficiently and at scale, delivering programs with the industry, by the industry, and for the industry, only taught by them. And I can say that it's not an easy job because educating adults is not educating like children. So we need to find a lot of different ways today to make sure that lifelong learning, continuous education are key for acknowledged by the government, but also incentivize adults to finish the program. So we have learned a lot over the past 5 years. And finally, perhaps something that I'm really, that is core to my work is to bring much more diversity to the face of finance, but women as well. And I have to be vocal about this because out of the 100,000 professionals upskilled at CFT or who have been learning through our online programs, 48% are women. So we are starting to see a change in terms of let's say, gender, and in terms of the need, and the women are now really interested to take part of this new world of fintech, which is really, really encouraging.
Thanks for that, Traman. I think we may come back to that point a little bit later. I wanted to turn to Malik, and in some ways, Malik, your background is not dissimilar to Tram's, and there's some overlaps between the organizations as well, but differences too, and plus you have your role in the university context. So maybe, Malik, tell us a little bit about what you're doing in this area and how you got there.
Sure. Thank you, Douglas. And firstly, hello to all our friends here who have logged in from all over the world, and to our viewers from mainland China and Hong Kong, ni hao. Thank you, Mushir, for giving me this opportunity to not only speak on a topic which is very close to my heart, but to share it with two other very dear friends, fellow travelers who are equally passionate and who are doing work in this space, and with Yashoraj as well. So Doug, you're absolutely right. When Traman was speaking, I was smiling because our backgrounds are fairly similar. I too come from 20 plus years of mainstream banking, although I was not a trader like her. So I was lucky that I was always in digital banking, digital finance, partly by design, partly by destiny from the very early days. So early 2000s, when there was no term called fintech and nobody really cared about digital banking. You were really in one corner of the bank, and the bank didn't really believe in putting too much money in you, to now where it's right at the center of plate. I have seen that journey, not only seen that, I have been a part of this in various roles in various geographies. So I've been lucky to work with Citibank in different countries, both global, regional, and local roles, but the entire spectrum of digital finance. So digital transformation, digital product, digital engagement, digital marketing, all of that. And then as part of my role, Doug, I was already engaged with the startup ecosystem, fintech ecosystem, which was flourishing by 2014-15, or not flourishing, but certainly coming up quite quickly in Singapore and parts of Southeast Asia. So that was part of my role as well, and that was where my interest always was because of my work and job at Citi. So I got quite deep into that space, and that's how I started getting into the, if you may say, the upskilling or the knowledge sharing space. I won't say upskilling because that's too big a word. Let it be reserved for governments, but knowledge sharing. So starting with mentoring fintechs and startups who, as we understand, probably have very strong tech teams, but don't really understand business models and don't know how to work with banks. So I would help them, mentor them to be a bridge between banks and their organizations. And then, like you, Doug, I started speaking regularly at conferences. I started getting invites, and I started enjoying that because I felt it was an opportunity again to share my perspectives and whatever knowledge I was gathering along the way, meeting experts like you and Traman and others at scale. So I'm fortunate at this point, I have spoken at more than 200 plus conferences in 25 countries all over the world, probably addressed 100,000 professionals and experts across the entire spectrum of fintech. And that also allows you to see how this space has evolved. So when I started speaking in 2015-16, it was still about digital transformation, things like big data, etc. And then, the whole crypto hype cycles and winters, and I've seen how that has evolved. So always trying to keep people focused on the fundamentals rather than the hype and the speculative part of it. So that was the other way I got involved in the knowledge sharing aspect. And it was through one of these conferences that GIFT was born as a concept in 2018, in trying to bring together fellow experts, fellow travelers, fellow passionate advocates of this space to ensure global knowledge sharing. So in a way, again, very similar to what CFT is doing, and you will be glad to know, I guess you are already in the know, but to our viewers, that we recently signed a collaboration MOU with CFT for strategic partnership in really, because our missions are so similar about trying to deliver world-class fintech education and knowledge sharing, research, etc. at scale. So we felt that by joining forces, we would be able to go beyond the established centers of Singapore and Abu Dhabi and London and Paris and all of that, to more emerging markets as well. And that's where GIFT is really focused on. You've been with us since the very beginning. Mushir has been with us. So you've seen how we've evolved. We are now in 70 countries in every continent of the world. And again, our primary mission really is to support, enable, and plug in emerging fintech, blockchain, startup, digital ecosystems all over the world. So, trying to not only enable intra-regional collaboration like we do with ASEAN or with perhaps East Asia, but inter-regional collaboration as well. So we've developed quite a growing and deep footprint in Africa, in LATAM. We're growing in Eastern and Southern Europe as well. So that is one platform through which we are trying to really share this kind of a knowledge. Because again, for the 3 or 4 of us on this panel, it seems quite BAU, but I've been chatting with Shraman. For many folks in markets in Nigeria or Uganda or Zambia or Bolivia or Argentina or Chile or Colombia or even Bangladesh and Nepal, etc. These are areas where they're really hungry for support, for knowledge, for really coming up, if not at par with the other leading centers. They don't want to be left behind, and it seems nobody really, even the MOUs, bilateral MOUs, which are signed are between a Singapore and a London or a London and Australia. So how do you bring these kinds of emerging ecosystems up the curve? And that is really one of our key missions at GIFT. And we are really committed for knowledge sharing. And finally, like you, Doug, I also wear the hat of a professor of fintech at the Asian Institute of Management and a couple of other universities. So, and this time, unlike Shraman, this also has enabled me to teach MBA students. So, it's like a whole spectrum of reskilling, upskilling the workforce, my former colleagues from Citi, etc., who are in their 40s and 50s, but also these young talents who are going to enter the workforce and be the fintech leaders of tomorrow. So that is also gratifying in its own way. And I believe a great imperative for this ecosystem, because where are going to be the fintech leaders of tomorrow if you are only going to produce MBA finance and MBA marketing and MBA IT? So that also is something which I do as a matter of passion in this space. Thank you.
I think a lot of challenges to the standpoint of my world of sort of traditional higher education. I think 2 things that came out of there for me, Malik. One was this idea of trying to educate and support entrepreneurs, which I know Tram has found as a challenge as well, and something that I've been involved in, as well as Mushir and many others. The second, and this actually overlaps with some of the work that I know that CFTE is doing, and that is this idea of working with governments and organizations to basically come up with strategies for human capital transformation. And I think that from the standpoint of GIFT is one of the more exciting directions, and probably a real opportunity from the standpoint of the 2. But let me turn at this stage to Yashraj. And Yashraj, if you could, tell us a bit about how you got to be where you are, and also your perspective, which is coming from a somewhat different place on the curve than Tram and Malik.
Thanks a lot. Thanks a lot for that question, and great to be on the panel. It was great listening to Tram and Malik about their journeys, and absolutely fascinating to know about their stories and what they've been doing with the organization. I would love to be in connect with all of you and keep chatting because this is something very close to what we do as well. But just to obviously give a perspective of what we Kashi are trying to do. So essentially, what we realized that the problem that India has always faced as a market, which is similar to what a lot of emerging markets face as well, as Malik was alluding to, is the fact that is the seriously heavy under penetration of credit, right? And when you talk about emerging economies, fast developing markets grow on the back of debt and credit, right? You need credit for people to set up businesses. You need for people to set up MSMEs, for businesses to then grow. All of that is essentially a lot of times growth capital that is debt funded. But even if you want to empower the masses in any country to sort of take the next step and like advance in life, they would need credit for that. And credit has serious underpenetration in India. Just give statistics on that. 10% of India actually has a credit score to start off with, right? And out of 10%, and only 10% of Indians who actually have a credit score have a score that is good enough for money to be for them to be lent money by a bank, right? So essentially what we're talking about is like the formal financial ecosystem is probably serving like 2% to 1% of the overall population, while that number has like now been making significant strides because of a lot of initiatives around financial inclusion, a lot of banking happening at the grassroots level, a serious amount of initiatives taken up by the regulator and the government in terms of opening up bank accounts, getting people into the formal economy, but there's still a long way to go. So this is where we came in. We said that, hey, look, we want to like solve that problem to a certain extent. We want to go ahead and make a dent in the financial inclusion story in India, and make people who were traditionally unbanked and underbanked get into the fold of formal credit, and basically use that as a credit-led financial inclusion story. But how do you solve that? Because you do not have a credit profile on those customers. You're trying to create a completely digital journey. You're not going to take any kind of mortgage securities. You sort of have to evaluate these customers in a completely digital journey. Probably not, and you can't use financial data on them because there exists no financial data on them, right? Because they've never had financial histories. So what do you do then in that case? So we said that, okay, we are going to borrow a leaf out of behavioral finance, which is something I personally am very close to. This is something we said that we will actively focus on. We'll see that can we look at a certain amount of alternative data on customers, which comes from a range of different channels. There's general spending behavior, buying behavior, the lifestyle patterns, who they are on a daily basis, and say that, okay, if they have access to behavioral data of customers at scale, I hope I'm audible. How can this data be used to find customers, right? And that we'll use big finance-powered AI models at scale that will allow us not just I happen to be a personal fan of Daniel Kahneman, but happen to be working at this lab in Berkeley back then, where we did a bunch of stuff on behavioral finance, and that's what I got hooked to. And that's been like what has been the cornerstone of whatever we have developed over the last 6 to 7 years. That we said that, hey, look, we're going to sort of use this alternative financial data, and we are now going to score a whole bunch of Indian salaried millennials in tier 2, tier 3 cities, and credit score them, essentially lend them on our own balance sheet. Like, we are putting our money where our mouth is. And that's been the kind of the success story that we have had. But more so, I think that what has come out as a result, and something that is very, very pertinent to the discussion of this group, is the fact that we've seen that, okay, there is a tremendous amount of success we have been able to get, obviously over time. It was not an overnight thing. It was not even a 1 year thing. It took us 3 to 4 years to perfect that. But now we have a fairly well-developed transfer learning alternative credit scoring system in place, which we want to put out there as a SaaS in geographies that are similar to India in terms of in terms of being similar kind of emerging markets, similar kind of emerging economies, fast growth markets. We have done a bunch of deployments in Bangladesh. We have had a bunch of conversations in Latin America, where we are actively looking to sort of deploy and partner with organizations that are also equally bullish on financial inclusion and alternative credit. And I believe that would be the next stage of financial inclusion that we get to see, because these markets have very similar patterns in terms of not just how people behave to credit, but mostly in terms of how this economies themselves are shaping up, in terms of how the stance the regulator is taking in terms of alternative credit, and in terms of how you see even basic things like mobile smartphone penetration and internet penetration shaping up, right? So it's the right step for these kind of economies to actually access these technologies and be at the cusp of their own financial revolutions. So that's what I'd probably add from my side.
Thanks for that. And I think it's something that I know for Tram and Malik, as well as myself, these are areas that we spend a lot of our time thinking about and working on. And I think there are a couple of really interesting things in there. The first is this idea of the role of data in providing financial services. And it's something that, if you think about individual or SME lending in particular, this has been a long-term challenge over time. We've tried a lot of different things, but the one thing that has really worked is the sort of big data aggregation of data approaches pioneered really by Ant and Amazon to lend money to hundreds of millions of people on the basis of large volumes of data that they've collected through other business models. In some ways, though, the challenge is how do you go about building a system that doesn't involve an Amazon or an Ant owning all of the data that is necessary in order to make that work. And China, in recent years, India with the new data aggregator strategy, I think we're seeing numbers of countries that are approaching this differently. And I think the other thing that is really interesting that's embedded in there that we may pick up a little bit later is in the context of actually providing financial services. How can you actually enhance the digital and financial literacy of your customers, which enables you to do better business, but also enables them to take better advantages of those services? And it's something that we're certainly seeing across Africa, but also in South Asia, and an increasing range of businesses that are basically helping individuals and SMEs to digitize in order to get access to the information that they then need to actually do financial services business with those people. And I think that this is one of those really interesting ideas. How do we actually partner digital and financial literacy with offering financial services? And I wanted to kind of skip a little bit in terms of where we were planning on going and skip to this idea that you've all highlighted, which is this area of inclusion in the last mile. And how can we do this? Tramong, you mentioned women and the fact that you have almost an equal gender balance in your courses, which is amazing and not easy to do. Malik, you talked about entrepreneurs. And if we think about how do we get digital and financial literacy to entrepreneurs? And Yashraj, you talked about individuals, but also I think implicitly SMEs. How do we improve the digital and financial literacy of SMEs? So maybe if we actually go back in the same order, Tram, Malik, and Yashraj, this last mile question that we've all already highlighted. So Tram, over to you.
Yes, no, thanks a lot, Douglas. Yes, it's about how to go about building a big strategy about bringing new talents in fintech. So that's the main problem we're facing today. My view is that we're going to be in the next, it's coming now, it's going to be a big recession mode. What does it mean? It means that it's going to be really, really tough for most of the people, not only in Asia, but everywhere around the world. Is going to be very global. And what I care about is not about the technology, it's about the people. How do you make sure to upskill and reskill and putting a strategy in place, which is today much more clearer? We have lots of tons of case studies that we have worked closely with governments and organizations to make sure that today, the fintech industry is a growing industry. We have seen $300 billion invested in the past 10 years. Last year, only $100 billion in fintech. What does it mean? Fintech will keep growing. Whatever recession mode we are, fintech companies are looking for talent. The problem we're facing is that there's a mismatch about employers looking for talent and how do you create those talents. So it's about putting some plans in place, a strategy about making sure that we can create talent for higher paid salary, because fintech and blockchain industry they are looking for talents and they are paying very well. the problem we're facing, that there's a mismatch about the demand and who are the talent and who could be the one who can benefit the most from those jobs, high paying. And I think that couldn't be a pressing need today as we speak. We need to prepare now. So we have put a lot of focus on making sure that we know how to do that, a competencies mapping strategy about what are the jobs in demand in the fintech industry and in finance in general, what are the skills and the competencies needed. 40,000 new jobs in fintech is not something we can, not knowing. So we are spending a lot of time with regulators and government to make sure that the mapping is doing a taxonomy of the job are doing. What are the framework to make sure that everyone today are benefiting from this research. But what we are doing today is that we're putting some initiative in place. And you're saying about diversity, which is something that I care a lot, making sure that today people from totally different background, different industry can join the fintech industry, because the fintech industry in needs of data scientists, fintech product manager, entrepreneurs. How do you make sure that those people are being able to do this type of jobs? So it's critical today that governments, regulators, organizations, and ecosystem play a critical role in upskilling, reskilling those people. And we have had some initiative that we have put in place. And you're talking about the women. Yes, I'm just telling you, first, I'm, as an educational platform, always looking for industry experts. So we have 400 industry experts around the world teaching. Those are fintech founders or the doers in fintech, but it's really difficult for me, and I'm trying to push boundaries. So today, we're putting a lot of effort is women to teach. So if you are a woman and you want to show your expertise, we're always looking for women. We are putting some focus in putting program led by governments, regulators. I don't know if I can mention some name, but I would mention the program that we have just launched in, for example, Abu Dhabi, a scholarship to provide women and people that are unemployed, people that are in need of upskilling, coming from totally different background, to be upskilled and reskilled in fintech. And after a 9 months program, they will be able to find jobs. Those are the programs that we have been doing in different countries, in different shape and in different ways for professionals, as also they are looking for job. They can apply very immediately. They're learning to finding a job. So we work closely also with the startups, so that startups around the world, be in Africa, in Asia, everywhere, can provide case studies. And that helps a lot, so that people have their line in the CV saying that I have actually learned about fintech, but worked on a case study of a fintech. So I can apply if I were to be looking for a job in a specific role in certain countries. So this is the type of things, an initiative to help creating talents in fintech in Asia, but also in developing countries.
Thanks for that, Tram. A lot there. Malik, from the standpoint of entrepreneurs, what can we do?
Sure. Thanks, Doug. And I'll take a couple of steps back, if you're okay, just to zoom out a bit and I'll come to entrepreneurs, but I'll maybe share a couple of notes based on the bigger picture, in line with some of it, in line with what Traman also mentioned. So I think coming from 2 decades plus of banking, I do want to share a little bit of those perspectives as well. As Traman said, and I think as we've been discussing a lot in GIFT as well, the economic situation, in different parts of the world, especially in Europe and US, is such that we are staring at a recession. And even if you keep aside some of these cyclical aspects and record high inflations, etc., the fact is, at a structural level, banks are in a long-term consolidation and efficiency mode. So, there isn't going to be too much of new opportunities in the traditional finance sector. Even if there's going to be growth, it's going to be largely jobless growth, because banks are really in that protect your turf mode. So what will happen to all the new talent? I think that's a key question for all of us. The other is, as Traman also mentioned, and when I talk to so many of my former colleagues in banking, whether you spend 10 years, 15 years, 20 years in a, in an organization or in functions becoming a specialist, the fact is they are getting anxious. Almost 90% of whom I talk to, or my colleagues, they are anxious that they're going to get redundated in 3, 4, 5 years. And that's the first question they ask me, especially when they hear that I'm also teaching fintech, on where do I even start with fintech. So I think we've all been talking about upskilling and last mile, but upskilling is no longer just a good to do, it's a need to do. And it's not just a need to do at an individual or even organizational level, as Traman repeatedly mentioned, it's a need to do at a societal level as well. Governments are really taking it up and they have to take it very seriously. The third thing really is that there continues to be a significant demand-supply mismatch. And this again is something that governments and regulators are coming in. I was fortunate a couple of years back to co-author a paper for the Indonesian regulator, OJK, along with the World Bank, where we actually focused and deep dived into how there could be a national talent development policy and a framework on how can we really produce, on the one hand, a country like Indonesia is producing so many unicorns, and on the other hand, there really isn't talent, right? Bankers are not used to being digital talent, and you don't have too many universities who are actively doing that. So how do you produce tens of thousands of this new talent? That is going to be a bigger and bigger question. And finally, from my perspective as an educator, I am seeing even MBAs now from the top business schools in different countries and regions. They are much more open to either opportunities in smaller, more nimble startups, or getting into startups themselves. And a few of my student groups have actually, decided not to take the traditional path, but the road less traveled, and set up their own startups. And me and a couple of other faculty are also mentors. So with that segue about entrepreneurship, I think there is no one size fits all. Doug, you probably understand this better than I do. But in my view, there will be three forces at play. It's the top down, the bottom up, and technology. And I think these three forces, there will be an interplay. And I like to call them the 4 Ps, in which I combine the top down, bottom up, and tech. So the first is, of course, platforms and offerings. And many fintechs or tech founders and entrepreneurs, as I mentioned in my opening as well, they come from a very strong tech background, but they don't really understand how to make money. They don't understand business models. They don't understand customer experience. They don't understand how to reach out to customers. So, what platforms to develop, what offerings to develop. For example, something as simple as Rosca, which is basically, revolving savings, etc. In many parts of the emerging world, that's a model which people in local communities are much more used to, or much more comfortable with. So rather than trying to make it very daunting, can you go with models that people really understand? So that's the first part. The second, of course, is policies. We've spoken about it, and I won't go into details because of time, but things like enabling inclusion through eKYC, etc., and making it easier for entrepreneurs to service them rather than doing face-to-face KYC as we've always done as traditional bankers. The third is, of course, people. And this is what I keep telling my students and anybody who cares to listen as well. Be very clear about why you are getting into entrepreneurship and why you want to solve for financial inclusion. Yes, it's a novel thing. Yes, it sounds exciting, but be very clear about the why, because that is what will hold you in good stead in those dark nights when you will be wondering, when you see your colleagues making fat salaries, and here you are burning the midnight oil for no money. And I think finally, the fourth P is PPP, public-private partnerships, or any kind of partnerships, whether it is with local governments, last mile, like in the Philippines, we call them the barangays, which are really the smallest level of governance. That is where the trust factor is. That is where the real last mile outreach is. And I see quite a few entrepreneurs and fintechs smartly partnering with local governments. So once, I think, not that everybody has to follow these 4 Ps, but if you use this as a broad framework, then as an entrepreneur, you can at least have a reasonable shot at success.
Thanks for that, Malik. And I think a very good framework there. And I just want to pass over to Yashraj to wrap us up from his standpoint on today's panel. Yashraj.
So very interesting to hear about Traman in terms of. I hope I'm audible. Hello. So very interesting to know, and I'll financial go ahead as you mentioned. Financial literacy is a must, and financial literacy really how deliver financial literacy, as you said, like really matters in terms of who is the one you're delivering that knowledge and experience to. So we spoke about individuals, we spoke about SMEs in India, but really, what does finance mean for everybody? And financial literacy has to be delivered through the experience of how they deal with finance. For an SME today in India, they might be dealing with sort of just having to make sure that the vendors are paid on time, they get regular payments from customers, the business keeps on growing, and potentially they have access to some amount of debt credit from a certain bank. Now, what the fintechs are trying to do is to kind of wrap up this entire experience and give it in one go to a particular SME, saying that, hey, look, I'll provide you this end-to-end experience in which you can manage your vendor relations, you can manage your customer relations, you can track your monthly sales volumes, you can also I'll also probably provide you with the relevant experience in terms of being able to access credit as well. Now, when all of this happens, it is, I think, the responsibility of that relevant financial organization in this context, being the fintech, being able to sort of make the SME understand, okay, hey, I'm giving this wow experience, but this is what it means. Like, this is what credit means for you, and it's very important because the SME in this context might not have ever dealt with formal credit before. They need to be aware of how what happens if repayments don't come in for the debt we have given to you. Where do you get reported? How does your credit score get impacted? All of that needs to come in, because and that's important, because what people don't realize is that by taking a very short-term view, saying that, okay, I'm going to onboard X number of customers, give them this product, and my job is done, that's not it. If they actually make those customers financially literate, they might just keep coming back, because then they'll see the value add between what this particular fintech is offering to them vis-a-vis what they had earlier. It's not just about customer experience. It's about a lot more. It's about knowing that this is probably what I was missing earlier. I'm getting access to a formal way of doing finance, which I did not have before. And this is basically what I'm getting much over and above the good experience that I have to do things digitally. So I think, and same goes for individuals as well. Today, if you look as individuals who are not accessing formal credit, formal banking, once you give them access to that, it's also very important for anybody to educate them about how this works. What are the implications of that? How does regulation work over here? What happens when you do XYZ things? What happens when you don't do XYZ things? It's fundamentally important to do that. Just to give an anecdotal example, millions of Indians today are locked out of the credit ecosystem because somebody at some point in time, they gave them a credit card and they did not know what a credit card is. They spent with that and they did not pay the bills on time because they did not know they had to do it. Something as basic as that. And now the credit scores got impacted and they never can access formal credit again because nobody will just give them credit knowing that their bad credit score. So this is what happens when you don't educate customers about what is it that they're getting into. Right, and this holds true for everybody, right? From rural credit to doing sort of credit to millennials in tier 1, tier 2 cities, everybody, right? And last part is of the regulator, and I think in India, particularly, the regulator has done a fabulous job in terms of getting people on board onto the the formal financial ecosystem by creating those bank accounts at scale, giving them services digitally, and I think that their ecosystem partners need to come up in which they need to kind of join in forces and make sure that they are sort of bringing in the relevant amount of financial literacy so that people not only have access to these services, but they use it more frequently and also understand the implications and the riders that come with using that. So that's what I would add over there.
I think that's a wonderful point and a great one to wrap up our panel on as well. And a huge thanks to all three of you for a great discussion and to the VFF team for organizing a great event. I'm just going to leave on one last point, and that was I was sharing a similar panel of regulators and central bankers over the summer, and the topic, the focus of everyone was this idea of digital and financial literacy and how can we make it happen, because it's core to financial inclusion, it's core to development, it's core to avoiding crises and people getting financial problems. But as I think we've also all pointed out, it's actually also good business. Thanks, everyone. Look forward to talking again soon.
Thanks, Douglas. Bye-bye.
Good afternoon, everyone. Welcome to the panel, Women in FinTech, Path to Creating FinTech Unicorns Catering to Women. This panel is brought in association with Financial Alliance for Women. And I'm excited to introduce the moderator, Syed Mushir Ahmed, founder and managing director of FinStep Asia. Over to you, Mushir.
Thank you so much, Asim. And I'm delighted to have Ines, Rachel, and Camilla with us. We seem to be having a little technical issue with Zoom today. So we'll just see if Rachel and Camilla, can you speak, please?
Yeah. Hi, I'm hoping we come up.
Camilla came up, so maybe Rachel just switch off and switch back that video.
That's just what I did. Turn the video on and off.
And then on again, please.
There we go.
There we go. Voila, we all made it. Zoom has allowed us that flexibility now. So once again, welcome to all three of you. To kickstart, this has been a subject that's dear to all of your hearts. We with FinStep as well, we work closely with the Alliance on research regarding how fintechs are catering to women and how we can increase that focus globally, including with the hackathons that the Alliance is conducting. What I would like to start off with is brief introductions. So I'll hand it over to each of you to introduce yourselves and your organizations, and then we'll dive into the panel itself. So starting off with Ines, please go ahead.
Hi, everyone. My name is Ines Murray. I'm the CEO of the Financial Alliance for Women, which is a trade association of commercial financial services providers who all target the women's markets with viable commercial value props that include financial and non-financial services.
And I'm Camilla Bullock. I'm the CEO of the Emerging Payments Association Asia. So we're a branch organization for participants in the payments industry. So anybody who moves money in APAC. I'll also add I'm the CEO and co-founder of Sweet2Go, which is a boutique consultancy for fintechs in the APAC region, as well as the founder of Meet Her, She Knows Payments, which is a project within the Emerging Payments Association Asia, but is all focusing on diversity for innovation.
Thank you. Rachel?
Yeah, hi, my name is Rachel Freeman, and I lead growth at Time. Time is a multi-country digital banking group. Time Bank in South Africa is our flagship project, and we have about 5.3 million customers. And recently, Time has become the founding shareholder of Tribe FinTech, which was started by founder Mo Harvey. And Tribe is providing a kind of an ecosystem in a box. So for small and micro businesses, Tribe provides all of the tools in terms of business tools, educational tools, and a community platform that can create a number of different walled gardens, all within an overall walled garden. This is a B2B platform for banks, and we are now live. Tribe is live as Time Tribe in South Africa.
Perfect. So I'm going to kickstart this conversation with you, Ines. We've been, as you mentioned, looking at this sector in terms of how can fintech cater more to women, right? As the Alliance has been championing how financial services and banks should be catering to women, why should fintechs cater to women more actively and directly, right? Rather than just as another customer. May seem like an obvious answer, but it still needs to be addressed, and we'd love to get your views and thoughts on this, please.
Sure, thank you, Mushir. Well, the first point to make is that women are more than 50% of the population, but they're also controlling $216 trillion in wealth globally, and that trend of increased wealth for women is driven by a lot of very positive demographic trends, as you know, in terms of increased education levels, starting businesses at greater rates than men, et cetera, et cetera. So all the demographics are super positive in the direction of the female economy, as we call it. And at the same time, what you find with women is that they are the most dissatisfied with banking of all consumer services. So you see this gap between, let's say, the actual spending power of women and the kind of services that they're receiving from the financial services community. So they're either underserved or they're unserved. So we also have a lot of women who actually don't have any access at all yet. So this is what we call the gender gap, right? The difference between the amount of or percentage of men that have access and the percentage of women. And when we look at fintechs, we find that that gender gap is 3 times larger than it is in terms of access to a basic bank account. And so that gender gap, it means that for every 100 men that are using fintechs, just 72 women are using fintechs. So that's the gap we need to close. And so what I think is it's very easy to see this as really almost personifying what's gone wrong with the incumbent banking sector in terms of not serving women well by looking at the fintechs and making basically the same mistakes. So what they're doing is they're really ignoring the women's market. They don't believe that it's different to men. They're not designing and providing solutions for women. They're not making it easy to get involved and participate in fintechs. They're basically fixing, if they're doing anything, a minor piece of the marketing mix in order to get women. And that's the kind of mistake that we've seen in the incumbent. So what we've done in 2020 with you, and then in 2021 also, is done some research into fintechs. In 2020, it was a quantitative survey that ended up with 178 fintechs answering the full questionnaire. And that found that the majority of fintechs that do track performance indicators by sex found that the business case is very compelling for targeting women. 64% of them found that female customers have a similar or higher usage rate than men, and likewise that lifetime value is similar or higher for women. And in 2021, we did a follow-up piece of quantitative research that looked at the sales funnel and quantified the money that was left on the table by not having conversion rates equal for men and women through each stage of that funnel. And what we found, and I can get into details later, is that if the conversion rate was the same for female as it was for men, that fintechs could add up to 70% to their revenues if they just had that kind of equal representation.
Thanks, Rachel. Sorry, Ines. Rachel, coming to you, you've been looking at that market prior to being with Time, and now with Tribe as well. In your opinion, have things changed? Have they improved in the last 2-3 years? Are we seeing more focus on women customers by fintechs? And if so, how deep is this focus that you feel like Time has that focus, but generally in the market, what are you seeing?
I think that there is growing recognition that there needs to be a segmentation and that women is a very strong segment. And at Time, we have proven this. We are now at around 60% of customers at Time are women in South Africa. But there still are major gaps. And actually, Tribe was founded on the basis of reading the material from the Financial Alliance for Women and other institutions that said that women entrepreneurs are looking for more than just financing from banks. They're looking for non-financial services. And as Time was going into business banking and segmenting both social sellers as well as tradespeople, there are a lot of women entrepreneurs there who are looking for those non-financial services, which is why we were attracted to Tribe, because Tribe provides that. And it makes it easy for us because instead of integrating one by one to all those different non-financial services, we could just integrate with Tribe, and then Tribe provides this. Now, when we look at women entrepreneurs, there's less of a network, there's less of kind of funding opportunities, there are less services. And so there is a little bit more that banks are being asked to do for women. And we see that as we've heard to provide these services like Time Tribe in South Africa, that there's growing interest among women SMEs for our products. So we launched about all of our business banking products about 6 weeks ago, and we're starting to see a lot of intake on all of the different products.
Right. I think even from otherwise, like some of the things that we are seeing from our side in FinStep Asia when engaging with some of the customers, but beyond that, I'll give an example of where we see a little more increase is in India. We are seeing more women-focused fintechs come up, also get funding, either supported through major organizations. I've also seen a marked difference in how digital currency and digital asset firms are trying to market, showcasing a lot more women users, rather than focusing only on male users. That is one of the indications of unintended bias maybe, or not thorough targeting, and that I feel is moving in the right direction, and we hope the work that the Alliance is doing and all of you are doing can be very useful for that, right? A heads up to the Alliance hackathon, which is taking place in the coming month. In the sense, applications are open till September 15th, inviting fintechs from across the world to participate. This is supported by global institutions, including IFC and the MAS, and banks such as HSBC and Citibank. So do sign up, and the details will be on our website and otherwise. Now, coming to you, Camilla, both in your current role and otherwise as well, how can, in your opinion, how can non-women-only focused fintechs improve their services, products, design, marketing to cater to women customers? Like, what do they need to do? And we've spoken about the why, we've spoken about what's happening now, but what do they really need to do to not move the needle, but actually make a change and see the impact and increase their bottom line, essentially? Camilla, you're on mute.
So I think there is three areas, and I always get quite fired up when I sort of prepare for a panel on this topic, when I go away and I check some research and I go like, can't be true, or like, is it really like this? But it's first segmentation, to look at the demand and the underserved in your customer group or potential market, to see what is the actual need. And there is a homogeneous group out there that feel that they are underserved, as looking at Ines' research. But what is the need that we haven't fulfilled with products? Then go away and create those products. And I don't see the need in labeling all those products as products for women, because there might be also other groups that has this need. And you have this risk when labeling a product for women that you limit the usage of it, and it doesn't go as far as probably several people have heard when I'm talking about that the suitcases with wheels didn't come to the market before 1972 because it was seen as a female product and they didn't think it would be a demand for it. So to really don't get stuck in that pigeonholing products as for women, but be aware of which segments that has needs that aren't fulfilled. So number one. Number two is diverse team and innovation. Like, the innovation is going to go as far as the thoughts are diverse when you're creating products. And then probably something I know Rachel also is passionate about is the funding. Make sure that the people that has the money to invest into those fintechs and products are not missing the good ideas because they don't understand the need or are not listening in the same way. I think it's super important that already from the beginning, the funding teams are also as diverse as the needs in the market. So I guess it is for the fintechs to be aware about those three things. So segmentations, diverse team and innovation, and diverse funding teams.
Thanks. And Ines, the research has that indicated quite a few of the points that Camilla has also mentioned. In your viewpoints, what are the things that you think needs to be top priority for these fintechs who are not specializing only on women?
Yeah, I think just building on Camilla's segmentation point, basically if you just look at your data and ask the right questions, so it's important to understand the performance of the women's segment and sub-segments within it at each stage of the funnel. But of course, it starts with at the beginning when you're designing your fintech, and is to quantify the market, the women's market as well as the men's market, and look at that total addressable market and serviceable obtainable market disaggregated by sex. And then once the traffic starts hitting the platform, sex disaggregating the conversion rates at each step in the funnel, to identify the friction points and barriers and figure out how to unblock those. And in the report that we have, which is, you can get it on the website, our website, financialallianceforwomen.org, in the library section, just search for fintechs in there. You will see a lot of case examples. So what we did was we looked at that funnel, and we looked at specific fintechs that had overcome barriers at each stage of that funnel. So for instance, in the credit and lending fintechs, what you do see is there is some bias in the algorithms, in the credit algorithms. This is well known now at this point, but putting in structural, or should I say, indicators in there that have structural bias within them. So that would be education levels, income levels, education levels in some countries, that automatically, if you like, penalizes women, as opposed to looking at things like repayment rates, which actually are positive for women, because women do pay back the loan so faster or better than men do. And so debiasing those algorithms, we have a case of a credit and lending fintech in Mexico would add 20% to their revenues just by getting more women in and lending them more money. So it's not a difficult thing to do, because most of the fintechs actually do have the sex disaggregated data. It's just, and frankly, that they haven't even thought about it yet. So as competition increases in the fintech sector, if you're looking at the neobanks, for instance, there's basically very little differentiation. You know, it's going to end up, I think, like the commercial banking sector, where nobody cares who they bank with. Really, it's just about a convenient having a service. If you really want to capture the market and do this well, you have to look at, how do I cultivate female customers? How do I build that trust? Why aren't more coming into my platform? How about word of mouth? I mean, Time, which Rachel can share some insights for you, has really looked at cultivating this customer base, being based in the community, having those sales agent, combination of technology and touch. There's a lot of things that can be done to get those women into the fintech and then through the funnel. So basically, look at the data, understand what it's saying, sit down with your hopefully diverse team and unpack that and try to remove those barriers.
Thanks. Rachel, do you want to just add to that?
Yeah, I mean, we follow very closely what the Financial Alliance for Women is saying, and we believe in what their reports say, and we track that. You know, we started off with sex disaggregated data, like all fintechs from the beginning, and tracked closely. We've done similar studies then that showed that we are truly serving low-income people. And based on this, we thought, how do we serve more, or how do we look at more? And so we did a lot of research on how to work with social grant recipients, and realized that some of our processes had to change. Once we changed that, we've onboarded almost 1 million social grant recipients with Time. And so now we're serving them profitably and actually helping them become digital, learn about financial, become more financial literate through our ambassadors that are going into social grant offices. So there's a lot that we can, and once you start actually looking at the data and thinking what makes sense, we're now taking that right to business banking. And so what we see is that the data that we'll be able to get from working with Tribe FinTech enables us to even think how better to serve these new kind of owner managed businesses. So we're working with mainly not the larger SMEs, but owner managed businesses on the ground. A lot of those are selling on Instagram and Facebook Messenger. And how you do that is think about what types of products and services they need, what can we provide them and manufacture ourselves, but what can we provide them in terms of tools and services, and what's the easiest way to do that, which is why we combine forces with Tribe FinTech, which is open to, a number of people say, is it just for women SMEs? But it's not, it's open to all SMEs. It's looking at what are the real needs of micro and small businesses and how do we solve those? But it happens to have looked at both male-owned businesses, women, and think what is the total need in the market for these types of businesses. So using a lot of the tools that were developed by Financial Alliance for Women.
Understood. I'm going to come back to you, Rachel, on the next question, where when we're looking at investment landscape for women-focused fintech, right? How deep is that? And as an extension, women-founded fintech. So in terms of the landscape, what are we seeing from ease of raising investment to size of investment checks? Your views first, and then I would love to get Kamala and Ines' inputs as well. Yeah.
So I've talked a lot about this in different webinars for the last couple of years and with different groups. However, it was more, I would say, kind of based on my IFC experience, when I talk to people, but not hands-on. However, as the Time board representative on Tribe, I joined a number of meetings about fundraising for Tribe FinTech in its angel round. Now, angel is more like friends and family, but and it really turned into that because Tribe was able to raise funds, particularly in Ireland, where the founder is from. However, it is a very challenging, I mean, it is shocking to sit in meetings with angel investors, with VCs, and have them talk about all of the different investments that they've done. And then you say, have you ever funded a female founder? And the answer is 0. And it was over and over again. And it really hit home for me that it is much more challenging. The questions are much more detailed. The interest in funders to take risk on female founders is very different. Like, we will be in meetings where someone will say, oh yeah, I raised $12 million based on, I didn't even do a deck. Okay, that's not what the experience of women founders are experiencing there. It's, what is the actual kind of business, all the different pieces of it, data rooms, a lot of information, lots of questioning. Are you sure you have many, many clients? I mean, this is after Time had already committed to being a client and committed the investment that was put in. So it's a very different experience, and it made me feel even more passionate. And I already felt very passionate about this issue because it just seemed like the kind of the barriers or the challenges for female founders are so much larger than male founders. And we even at different times had to have conversations like, should we have a male co-founder and try FinTech just to be able to raise money? And that is just a terrible statement. But in the end, Tribe was been able to raise, its full seed round and is now really moving forward and demonstrating that you can actually raise money. It just takes a lot longer and it's a lot harder to do.
Thanks. Kamala, your views on this?
Yeah, I'm laughing and I'm nodding because it's so Stone Age still on this topic. And first, I'm Swedish, and I think Sweden is known for being very equal. But if you come to VC money, it's the same story in Sweden as elsewhere. So you can't even point fingers to the workforce, or sometimes we go back and say like all the maternity leaves and all those things in social build-up would be part of it. In Sweden, still 1% of VC money goes to tech female funders. So it's something really deep-rooted in here. And I think we need to start to compare policies across the world to see who is tracking better, because I know actually in Africa, I think the track records for VC money is better than in the Nordic countries. But then also looking to this with, I read the research actually now before this panel, because I was just going to go back and see what's found, and it was an article in Forbes, from June this year, and where it said they'd done a research with MBA students where they put the pitch deck in front of them. So it was for Series A, so seed had already been done. And in some of the pitch deck was the same pitch deck for all MBA students looking at it. But if it was a female VC behind the seed round, they were less likely to get Series A. So it was seen as not being beneficial to have female investments. So we've always gone and said, females should drag up other females, go and invest and promote. But actually then that was seen as something negative in those pitch decks, which I was like flabbergasted by. So I think it needs to go back to look at diversity also in those VC committees, so that we can hear the good ideas, so they don't go by, because we need it for the whole economy, that those ideas and investments are coming forward. So I'm very, very passionate about this. And I don't think we should need to go and get the male name in the funding team. I don't think that this was a different but high level conversation and negotiation. I took somebody else because the person I was going to negotiate with wasn't female and youngish. I shouldn't say young, but I needed somebody with white hair and male. And the negotiation went much better when I sent this other person because they spoke the same language. And sometimes that is acceptable, but not when we go across funding in the whole globe. We need to learn, listen out for good ideas, not who's actually telling you those good ideas.
Okay. Ines, any views on this? I know we did a bit of it on the investment side. We were doing the research and this has been followed up. Any thoughts in what you've seen?
I mean, I think what we found, Mashir, was that because of Black Lives Matter in the States, the kind of VC community out of Silicon Valley were looking a little bit at diversity in the teams, starting to, and not at all, by the way, at the female economy, but not at all at the customer base, but really a little bit at the diversity. But I think, experiencing what Rachel has shared, her recent walk around with the various early stage investors, that's real. That bias is completely real. It's basically a boys' club. And, how do you unpack that and make it more, how do you de-bias that system? And what are, and I think one of the important things is to give new VCs or young VCs with less of a track record. It's very hard for females to get into it. It's not, the system is kind of basically stacked against you. So how do you create a fund of funds, for instance, that would enable young, not necessarily young, but female VCs to start out, so that there's, they're looking at that in the European Union, for instance, is a way of actually kind of seeding young investors, VCs. So we've got to look at this from a systemic perspective. I don't think waiting for the VCs themselves to embrace diversity, I just think that's going to take a long time.
Okay. I hope that changes. The numbers have, as we have said, it's a bit staggering that there's a percentage that's in, not even in, high teens or whatever. We're talking about low single digits here, right? And with the last year being a boom for fintech funding, we should have seen more movement, but we do hope there can be more things that change, because a lot of approach needs to change in sense of there are VCs who fund women founders maybe, but there are some VCs who fund, companies targeting millennials, companies targeting, Gen Z or whoever there is that you're looking at. And that's, I think, one of the approaches that needs to change is to target women as a segment, not look at the gender lens necessarily, but just looking at the value that the women segment can bring, as highlighted by Ines at the top, right? With the multi-trillion-dollar market that it is and the wealth change, especially in developed economies that we are expecting. As we come towards the end of the panel, one of the things that I wanted to bring up is this metrics that quite often we try to bring in the startup evaluation game, right? The unicorn story. Right? I remember a few years back, 6-7 years back, when I was in the initial parts of being, setting up the FinTech Association of Hong Kong and interacting with people, I used to throw this question to others who were established in Hong Kong, saying, when will we see our first unicorn, right? And it was that mythical creature, as it were. But where do we see this coming from a purely women-focused fintech? Currently, I feel, from my knowledge, we don't yet have any women-focused fintech which reached a unicorn status. There are a couple who may be in a few $100 million valuation, but what do you feel needs to, how can we lead to that? We're talking about over 1,000 unicorns globally. How can we get that one to kickstart and maybe push through? Or am I looking at the wrong metrics? Is this evaluation metrics completely wrong, given what's happened over the last year? Why don't we start with you, Rachel?
Well, I don't think the metric's wrong, because I think that as a fintech, we think, oh, when will Time become a unicorn, and when will we hit billion valuation? So we actually use this ourselves. So I actually think while it may not be a perfect metric, it's definitely a use metric. So that's the first thing. And in terms of when we get a female-founded fintech there, it will be very, very exciting, and we'll all celebrate. But I can't think of any that are. I think the one that might be close would be One Connect with Binru. You know, I mean, it's part of Ping An, but they've been doing really well. So I'm always kind of proud to see how they're doing. But we're going to keep working to make sure that we get those. But you need to, like, to create a unicorn, you need to have many foals, right? To those foals to grow up into unicorns. And right now, I think we need to create many of the full unicorns in order to create unicorns. And we're struggling right now in creating those baby unicorns. But there's also another thing. I remember reading a lot at one point about zebras, like instead of saying unicorns, say zebra, which are kind of more resilient, long-term growth valuation companies, and that women-owned founders tend to grow zebras rather than unicorns. So I actually thought that was an interesting kind of metric to think about. And also zebras are real, right? Even if we would like to think that unicorns are real too, that zebras are real and they run on the ground and they do, achieve great things too. So I actually think we need to broaden the definition, though as a fintech, we do use this metric all the time.
Thanks. Camilla, your thoughts on this? Zebras, unicorns, kangaroos? Which we are going to
First, I have to say that not to forget Tessa Vijaha from Sendit. She's the co-founder and they are a unicorn. So often speaking about the rare female unicorn from Indonesia. I don't know what animal to choose. I thought it was funny that I was sitting at a dinner and I spoke about this. And they didn't even know what a unicorn was to start off with because they weren't fintech people, not at all. And then I started to talk about female unicorns and they like, you're being very specific, Camilla. But I believe a lot in thought leadership. I think that's what I'm speaking about over and over again. We have to see more female thought leaders because that inspires everybody underneath. It inspires innovation and it also will make attract VC capital. And that's all it's going. You need somewhere to start. You need somewhere to grow from, and to be seen and be heard is so important.
Okay, thank you. Inez, last word to you on this.
Well, I mean, obviously we have Starling Bank as a unicorn, founded by Anne Bowden. We have New Bank, which is co-founded by a female. So it's not beyond reach here. But I do like that. I never heard this term zebra before in this context, and I really like that concept because I'm not somebody who's going to go around and say, you have to be 100% female focused. I think what we're looking for is essentially gender intelligent businesses that reach a fair representation of the human population as their customer base. So if it's 50%, that's fine. It doesn't have to be 75%. If it's 40, 60, that's fine too. It's just about getting an equal crack at the whip here, an equal opportunity. So there's a lot of thought going into STEM and getting more women and so on into the entire system, and that certainly has to be done. But I would like to see perhaps not just new unicorns, obviously, that are female founded, but the bigger techs and existing unicorns really take on the women's market, because that's how we're going to achieve sustainable growth, inclusive growth. Everybody's talking now about climate, like all of that. That's only going to happen if women are included. And so long-term business success means inclusion. And so I think there's a huge business logic here, and it's not about affirmative action or that kind of stuff. It's just there is a strong business case, and you'll find that the money is going to go into those tech companies, fintech companies that really have this bigger vision going forward.
Great. I'm gonna, I think we've got a lot of great insights, and this is not just for the audience, but as we replay for everyone to consider in terms of how you can take an action item. As Ines mentioned, it's not about affirmative action. It's actually a lot of business sense. There's an opportunity and money on the table that companies are leaving that they can really leverage. And one of the good things I feel with the churn on investments that's happened is VCs and investors now focusing back again on revenue, right? And on real value that the customers can generate. So with women having proven to have better lifetime value and slightly higher CAC, but CAC to LTV ratios being much better for women over the lifetime, this is an opportunity for fintechs to actually cater to them and improve their metrics overall. So as we end, I'll leave the last word to Ines to just quickly introduce the hackathon to our audience, and for the audience both watching on our live stream and other platforms, we'll be sharing the link to the hackathon in your chats. So Ines, final word on the hackathon.
Yeah,
to you.
thanks so much, Mashir. So we run a hackathon every year. Time Bank won it a couple of years ago. It's a $25,000 cash prize plus a lot of additional value addition in terms of exposure, global exposure. We've got an incredible group of judges from large commercial banks that are looking for fintechs that are going to help them to target the women's market. You can find out about the hack on our website, financialallianceforwomen.org, and you can register for it. It's on the Apex platform. What is it called? Hackoloseum platform on Apex. So it's a really great opportunity to learn more about the women's market, to get coached and mentored by the leading thinkers in the field, and then ultimately to get this global exposure and to win the prize. Maybe over to Rachel to share the impact of what winning the hack was on time, quickly.
So the impact is both externally and internally. So externally, like winning the hackathon really put us on the map. We were still quite small and really unknown in Asia, or just we were known in South Africa, but not known outside of South Africa. And so winning the hackathon really put us on the map and a lot of attention from that. And then internally, actually, this really got people excited about thinking about the women's market. And we had done a lot of the research, and then we shared that throughout all of time, and everybody really bought into this. One of the things that we presented was our partnership that we wanted to do with a company called Jumper. That product is now in South Africa and is called Sell on Social, Time Sell on Social. And that is how we started to learn, and we got into the whole market of social sellers, which is about a $500 million industry kind of segment in South Africa. But we would have never thought about this if we hadn't actually thought about the women's market. How do we do this? And then partnered with Jumper.
Great. So that's an opportunity that many other fintechs can leverage, not just in terms of the money, but the exposure they get and the connections that they make with great mentors and organizations. So on that note, I know we've overrun a little bit, so our apologies to the RegTech panel, and I'm sure they'll understand our request for them to have held on. So once again, Ines, Camilla, and Rachel, it's been a pleasure and delight moderating this panel. A lot for me to learn and a lot of insights for our audience. So thank you once again, and we look forward to having you join us for our future events. Have a nice day. Thank you.
Thank you. Thank you.
Thank you.
Thank you.
Good afternoon, everyone. Welcome to the panel, Key Enablers for Digital Assets Industry to Building a Greener Ecosystem. I'm delighted to introduce our moderator, Anastasia Nizagorod-Seva, Customer Success Content Manager at Extras. Anastasia, over to you.
Thanks, Asim. Everyone, welcome to today's panel. My name is Anastasia. I work for Trust, which is a leading digital asset custodian. I'm based in Hong Kong, and the company is actually global, and we have offices in Hong Kong, Singapore, Dubai, and opening up in Europe as well. With me today on the panel, I have three gentlemen that are quite well known in the digital asset space. So first of all, I would like to introduce Charles Dossi, who is the Asia Managing Director at Consensus. As you might have heard, Consensus is probably the largest blockchain ecosystem builder built around Ethereum. It's a leading blockchain engineering company. If you are based in Hong Kong, you might know Charles from his past experiences as being head of fintech at Invest Hong Kong, or as being the author of the book Block Kong. Then the next person I would like to introduce is John Ho, who provides legal advisory for financial markets business under Standard Chartered Bank. And he's supporting and leading the bank's adoption of new innovative technologies, such as blockchain and tokenization of assets. And then also we have Scott Thiel, who is the founder of Toko. Toko is based in Hong Kong as well, and is an enterprise-grade tokenization engine and digital asset management firm. And some of you might know that Toko successfully structured the first debt tokenization project in Asia. To kick off the discussion, I would like to first of all thank the Virtual FinTech Forum for picking this topic. In my opinion, making the digital assets ecosystem greener and trying to help it boost its sustainability is a key element in digital asset adoption in general. The first question that I would like to ask from the panelists is actually addressed to Charles. What are some of the projects that Consensus is helping build to enable a greener ecosystem for digital assets? Please, Charles. You're muted, sorry, Charles.
Thank you so much, Anastasia. Great to be here with familiar faces. At Consensus, we are providing tooling for developers and the world of enterprises in general to build the smart contract economy, and many of them are building a digital asset, should it be for regulated entities such as banks, central banks, or exchanges. We have a few projects, some of them are public, some of them are not yet, related to carbon credit trading. So really helping the ecosystem in general of carbon credit to get much more space as well as global reach. In terms of purely infrastructure, one way we are helping the ecosystem of digital asset to get greener is essentially accelerating the migration of projects and enterprises from private networks to public network. So instead of running computers by themselves and having essentially some intranets built one after another, we are building enterprise-grade tools to help all these companies to essentially sit on the global public network that is Ethereum. Ethereum in a few weeks' time will be migrating to a new consensus system, which is called proof of stake. So we are migrating from proof of work to proof of stake. This event is called the merge. So I'm sure you're going to hear in the press all over more about the merge, and maybe we can touch on the merge later on. But really helping everyone to kind of upgrade their infrastructure, and moving to public infrastructure is having actually a massive impact in terms of sustainability of all these different initiatives of digital assets, sharing infrastructure rather than building your own network. So that's really where we are, helping connectivity to public network, should it be the mainnet or layer 2s. Think of Optimism, Arbitrum, Polygon. All these networks are essentially running on much more efficient computer systems and has a much less strong carbon footprint. So that's essentially where we are focusing, helping the use case with carbon credit and some others, but helping the infrastructure so that everyone can benefit from an upgraded infrastructure and reduce carbon footprint of this digital society we are building.
Thank you, Charles. I think a very interesting point that you touched upon is the consensus mechanism, and especially proof of work migrating to proof of stake, and the energy efficiency of the blockchain that is being used. So my next question is actually to Scott, and it is about choosing and evaluating different criteria when you have sustainability in mind and you are about to pick a blockchain to partner with. As I know, Toko had partnered with Hedera Hashgraph network, and part of the reasons, I believe, is because of its energy efficiency. So Scott, if you could provide more details on that. Thank you.
Sure. Thanks, Anastasia. And it's a great question because it's a complex one, and it's one we've been actually thinking about for a few years with the architecture of what we've built with Toko. And I guess we're obviously focused on the ESG credentials here, but I think it's important to note that when choosing an appropriate blockchain or DLT protocol to build on, there are a number of considerations. There is the kind of speed, scalability type issues. Are you going to be able to scale the dApps and what you're doing, and is the underlying protocol going to be able to support that? There are questions around the consensus algorithm from a security and reliability point of view. There are issues around speed and finality of transactions, and the fair ordering of transactions. So there are a number of different components to really that question of what protocol to build on, and all of those did form an important part of our selection. But to the specific issue of ESG, it's obviously critical as well, and it's something that it's interesting to hear. It's an important part of the narrative, but it's something that we've been thinking about for 4 years from the outset, and in a way I've been somewhat surprised that the narrative around ESG is finally only getting going, perhaps in the last 12 months, and maybe people like Elon Musk can be thanked for starting that conversation. But the issue of proof of work versus proof of stake is essential, and Hedera, like many other protocols, is indeed a proof of stake protocol. About how Ethereum is now migrating to a proof of stake consensus algorithm again. But I think it's also important to then think about, well, sure, that's like comparing, kind of first generation DLT consensus from an ESG perspective with the second generation. But as we now move into that second generation, there's another layer of specificity and attention to detail around the carbon footprint that's also required. And I will cite the University College of London report on where they did an analysis of the relative consumption of energy for the different proof of stake protocols, because there is this huge delta between proof of work and proof of stake. But once you move beyond that and then you start looking at the different proof of stake protocols, again, there's a vast differential in terms of the level of consumption there. And again, at that level, what they determined was that, this is the UCL research paper, was that Hedera was the greenest proof of stake protocol available as well. So it's, again, we're sort of getting down to a level of specificity around this. So that was certainly a really important part of what we're doing in terms of our network selection and what we wanted to build on. But the other point, and again, I think Charles alluded to this, is actually picking protocols that are thinking not just from an energy consumption, in terms of using their protocol, but how are they actually supporting the development of, sort of industry-wide or society-changing use cases. They're going to tackle some of the bigger issues. I mean, it's one thing to talk about, is my blockchain layer more energy, intensive or not? But actually, which blockchain layer is going to support fundamental, changes in the way society is doing things? And again, that was an area where we found Hedera was really focused. They've built the Guardian project, which is it's effectively enables you at that protocol level to create ESG assets, which from one perspective is good. And it's helpful, but what's really important to what Hedera have done is that with Guardian is they're allowing you to build in discoverability and traceability. And as we move into kind of ESG and science-based targets regulation coming out of Europe and other things around the world, it's going to be important that you're able to prove, yes, this is a green bond or a green this or an ESG compliant that, but how do you actually prove it? And it's that kind of trust layer in terms of being able to say, well, okay, this is now coming from trusted data Oracle sources, so I can actually test and get visibility of the underlying green credentials, for example, of the assets I'm creating here. And that to me is actually going to be a bigger piece than just the energy footprint of the underlying protocol as well. So there's some of the things we certainly looked at when we made our decisions around partnering closely with Hedera.
Thank you, Scott, for such an extensive explanation. I think both you and Charles have touched upon a lot of infrastructural changes. And I guess everybody would agree that some of the biggest infrastructures that we've had built until today were actually managed by banks. And my next question is to John about Standard Chartered as one of the leading banks in the digital asset space, knowing that you guys have worked with custody solutions, having launched Zodiac Custody, also having partnered with the Hong Kong-based BC Group on building an exchange platform. What are the key initiatives, John, traditional finance and banks are taking today to utilize tokenization and digital assets capabilities from your experience?
Thank you. Thanks, Anastasia. Just building on what Scott and Charles mentioned, tokenization is the use of a set of technologies to create a secure and functional representation of an asset. And it does allow for a number of benefits that currently doesn't exist in the sort of current format. For example, benefits such as automation, lower the barriers of investment, fractional ownership, transparency, and potentially increase liquidity for relatively liquid assets, so long as you have a sort of you can envision match buyer and seller, and also moving on to a more efficient system, overcoming some of the legacy system that banks have. Now, coming to the theme of sustainability, the question is what about users of blockchain or DLT? What does it do in terms of enabler of green finance? First of all, it does eliminate paper-based processes. That on the back, it's something that we know. Second, the use of new technologies, not just blockchain, but the combination of let's say IoT, AI, thus potentially able to sort of new technologies are now using less energy consumptive sort of carbon footprint. I think that's key. Third is the visibility of climate action, because if you want to capture some of the climate data, for example, scope 1, scope 2, scope 3, you need to make sure that the sort of ecosystem participants are able to track and monitor data in terms of the carbon footprint in a sort of a real time, and also able to verify those data. That's key. Third is obviously emission identifier and certification. More importantly is that the world is moving towards what we call green finance. If you talk to a number of financial institutions, there will be a price paid for companies that do not transition to green or do not have a plan towards transitioning to a low carbon sort of activities, because there will be a distinction made at some point that the cost of financing will be higher for companies that do not have any net zero or a low carbon transition planning. Third is, more importantly, is the technology, especially like blockchain, acts as a digital enabler to capture data across the supply chain, as I mentioned. I just want to give one sort of live example, which obviously Standard Chartered is proud to work with the BIS in Hong Kong last year under what we call Project Genesis. That is the BIS Innovation Hub first green finance project done in Hong Kong in execution with the Hong Kong Monetary Authority. What it does is to explore the art of combining blockchain, smart contracts, Internet of Things, and digital assets to sort of promote digital finance. And how do we do that? So sustainability can be achieved by integrating the blockchain and other technology into the processes, as I mentioned, by bringing financial products to market. In the example that we participated, Project Liberty, which is a subset of Project Genesis, there was an opportunity for us to address greenwashing products to make sure it's reduced, and ensuring the technology that we build gives visibility to the consumer in terms of what those products mean. So in terms of the aims of the Project Genesis, we managed to sort of optimize the bond creation and issuance via the blockchain. With the ability of an app, we also be able to sort of track the green impact. We also simplify the onboarding of clients via the mobile application, and also streamlining the sort of ecosystem, the trade cycle ecosystem of bonds, and also potentially improve liquidity in the secondary market. The benefits as shown in the Project Genesis report released by the BIS and HKMA shows that when technology are properly deployed and designed, you are able to sort of automate some of the processes, use better energy efficient technology, and also provide visibility to investor that the product you have are not just green in name. And to avoid greenwashing claims, there are proper trackabilities and transparency being brought to bear into this. I think this project potentially could augur well in terms of the HKMA in larger Hong Kong vision to create an environmentally friendly and sustainable growth, but not just in Hong Kong, but greater part of Asia.
Thank you, John. And I'll definitely would like to come back to the question of how distributed ledger technology and blockchain can help traditional institutions. Before we jump into that question, I would like to still take an opportunity to ask Charles about the merge. I'm pretty sure you've been asked this question many times this month, and it's probably one of the hottest topics in the market. My question to you is, why is it important to transition to proof of stake? And what the merge means for the Ethereum ecosystem, and like more broadly, to what does it mean for their sustainability goals?
Sure. What is important to capture first is why it's so important and why so many people are talking about the merge is because the Ethereum ecosystem is the world's largest smart contract blockchain ecosystem. So it brings together hundreds of thousands of developers, millions of users. It's one of the most active ecosystems. So when you've got such an upgrade of software, its impact and benefit a lot of people. That's why it's in many people's mind. Essentially, moving from proof of work to proof of stake means for the ecosystem executing on a roadmap which will keep upgrading the base layer of this distributed system that is the Ethereum blockchain, so that it can keep essentially scaling and supporting new and more features to enable all the different projects and the ecosystem being built on the top of Ethereum. So the merge essentially will, if I get a little bit technical, today you've got the proof of work runs on a consensus layer which is running with different clients. And with the merge, we will essentially separate the consensus layer to the execution layer. We will not need thousands and millions of computers anymore to compute and ensure the security of the network. It will essentially be done by way smaller computers, which will essentially bond a part of 32 ETH, so some token, a native token from the ecosystem, in order for them to guarantee that they will be behaving properly within the network. So we are replacing computers which are doing calculation in a very straightforward way to very light computers which essentially are making a deposit, will ensure the security of the network, and if they misbehave, their deposit can possibly be slashed and disappeared. So that's really why the merge is important. It's also building the foundations for future upgrade, such as sharding. So sharding will be a technology which will enable the Ethereum ecosystem to essentially starting to shard databases and to make them even more decentralized. So the move to proof of stake will reduce by 99+% the carbon footprint of the largest blockchain ecosystem today in the world. And it's very encouraging, and that's why it has been taking a little bit of time. Today the merge is planned for middle of September. So there has been multiple testnets which has been made to make sure that everything is going properly. It involves no changes for the developers and the dApps. It's just suddenly the carbon footprint of the biggest network globally will be cut by an order of magnitude, and essentially get prepared for the next upgrade in the future.
Thank you, Charles. I think it's very interesting that even there is a fact that within the blockchain space, we're witnessing the transitions from something that was more energy consuming to something that becomes more energy efficient. And for many years, we've had the traditional financial system that obviously needs a lot of help to transition to a more sustainable system, and building it together with decentralized ledger technology providers is really the key in making it more sustainable. So my next question to the panel is, how does decentralized ledger technology, distributed ledger technology, and blockchain help TradFi, traditional finance, achieve its sustainability goals? And I'd like to start with John.
Yeah, thanks. I think on building on what Charles mentioned, one of the sort of core sort of enabler towards the sort of net zero at the moment is to make sure that you have what we call climate mitigation strategies. And one of the tools is using carbon to mitigate for those sort of enterprises that do not generate carbons. So I think the key to that in terms of the DLT technology, we have seen it happening right now, is to address some of the pain points in the current carbon market, which are very manual, cumbersome, and at the moment they are not interoperable. So everyone is doing everything else. There's no global standards. So I think to address and support TradeFi in the sustainability goals, we need to address, to me, my mind, three fundamental issues that we address today. One is on digital monitoring, reporting, and verification. We need to develop sort of standards and methodology for developers to incorporate digital requirements to improve the data quality and assurance. This would increase efficiency, utility, and coherence of emission accounting, particularly with respect to emission reduction credit. And this also, with the ability of DLT, is the ability to digitize this quantification methodology and improve the data quality and remove barriers to market entry and lower transactional costs by delivering climate impact on the ground. Now, the second pillar to this is digital assets for climate impact. What do you mean by that? Is to leverage digital ledger in DLT and also avoid the perverse incentive of double counting. As we know, one of the issues we have with carbon is, how do I know the carbon is really used to offset and retire as opposed to being counted twice? And I think the ability of a well-designed DLT can enable the sort of reduction or mitigation of double counting. The third point is on the digital infrastructure and open APIs. As enterprises build new technologies, it's important to connect the ecosystem of market participants, also promoting trust, transparency, as I mentioned, interoperability and access. In order to do that, market participants need to have a framework, digital trust, transparency, and interoperability built in the infrastructure, not to create walled gardens such that you only operate within a very limited ecosystem. This will enable global standards, wider adoption, and promote access to carbon credit across a wide spectrum of participants. Yeah.
Thank you, John. And then also, Scott, would you like to answer this question as well?
Yeah, sure. And I think it probably feeds off from what John was saying, but I think the focus of where we are with the TOCO project, it really picks up on that sort of financial inclusion, financial participation point, because I absolutely agree with the principles of the need to knock down those walled garden environments that perhaps TradFi have very much built, whether through regulatory barriers to entry or other. Kind of just the way the market's evolved over time. And so what we've really been working on with a lot of the projects and our ambition around TOCO is to get more market participation, lower barriers to entry, and really to allow a much broader part of society to participate in initiatives around what we mean by green, what we mean by green finance, what we mean by projects that are actually going to improve the quality of the world, reduce the world's overall carbon footprint. And if we leave this to I think what we can see is if we leave it to nation states, governments, and perhaps just the traditional financial players, we're missing a huge part of the ecosystem. If we look at technology evolution that's occurred in other places, the inclusion and mass participation, whether that's from open source initiatives or Web 2.0, where everyone became capable of becoming read-write their own broadcasters, these kind of technology innovations that have allowed mass participation have driven a lot of innovation, and that's what we're trying to enable with the TOCO project, is creating an environment in which more asset owners or issuers can create products, in which more investors can participate, and again leveraging the DLT or the blockchain's ability to provide that transparency and verification of the underlying green credentials to eliminate the need for, well, I trust that this is a green project because it's issued by, maybe a very large bank, for example. And of course, those things will and are an important part of the ecosystem. But another important part is to bring smaller players in so that they can also participate, and using this technology to bring that trust element and that verification of green credentials into those transactions without having to build huge, kind of infrastructure that's needed in TradFi today. So that's the vision we're seeing around this piece.
Thank you, Scott, and thanks everyone really for educating all of us and myself and everybody who's watching this about the benefits that blockchain can bring into the traditional finance space, and especially making the ecosystem greener and more sustainable from the environment perspective, also from the social perspective, is very important. And I hope this discussion will go on. And it's really, I'm really pleased that the virtual FinTech Forum brought up this topic to me. And also, I hope you guys keep this topic as an ongoing discussion in the industry and for the next forum that you're organizing, as it's really important. The next few minutes, I would like to spend on the quick fire round, which is a quick question that I'm going to address to every participant. Please respond with 1 or 2 words. It's a quick question, quick answer sort of game to make this forum a little bit more fun. I'm going to start with the first question that is, well, we're going to go in order of John, Scott, and then Charles. So the first question is, what is the main blocker for making the digital assets industry greener? John?
Quick one, regulatory treatment of carbon, and also the digital assets. What is it? Is it a commodity? Is it a security? Or is it a non-financial instrument? But I think that's important to sort of unravel.
Thank you. Scott?
Trusted Oracle data sources.
Charles?
I guess Scott and John have get it right. In my opinion, there is not much to block the digital asset industry to get greener. It's just an industry which has to grow faster and choose the right technologies.
All right, thank you. The next question is, what is the key driver for increasing sustainability practices adoption in digital finance?
Yeah, the first thing is important is in digital finance is to make sure that the price of decarbonization is set right. So one of the key pillars, enablers to this is to get the right price of carbon is important. Why is it important? So the carbon's price, if it's set right, is the social cost that it imposes on participants that do not transition to the environment. So I think one of the key enablers why we do a lot of tokenization is, if you get the carbon price right, this will be a main driver towards more sustainability efforts in using technology as one enabler.
Thank you, and Scott.
Yeah, I think it's like all things, it's carrot and stick. To me, the carrot is for those organisations that want to be able to promote themselves and be able to verify that they are doing the right thing. That's the carrot. The stick, which I think is probably beginning to get swung right now, is regulation, and perhaps Europe leading the world on that. So I think those are the 2 motivators, which are not exactly new, but they are going to be the key drivers.
Thank you, Charles. What do you think?
Same here. I think Scott and John got it right.
All right, I'm going to switch the order. Next question.
We should let Charles go first next time.
Yes, exactly. So the next question, Charles. What is the one regulatory action that is needed to help move the digital assets industry towards sustainability?
Just give some guidance and definitions of what are the expectations from the regulators, and have the regulators on board with that. Not only thinking, do I regulate a security or not, or do I regulate a certain flow in finance or a certain type of activity, but more thinking, how do we essentially align the sustainability target for a central banks? And that's a good question to ask to central banks. Do they have a sustainability target, and can the regulation essentially put everyone in the same motion and the same direction of travel?
All right, Scott, do you have an answer for this?
Yeah, to me, it's the regulatory mess that the world has created. This technology is driving a lot of confusion because traditional financial services regulation is very siloed, and digital assets are mixing and blending and merging across those boundaries in ways that means it's very uncertain for regulators, it's uncertain for issuers, it's uncertain for market participants. I'd like to do a call out to the team in Dubai, the Virtual Assets Regulatory Authority that's been formed this year in Dubai, and the work they're doing around building a new regulatory framework there that I think is going to be far simpler, far clearer, far more comprehensive, and it will regulate more, but in a manner that gives certainty. And I think that's the type of direction we need to drive all of these the industry.
Thanks, Scott. And a quick, maybe 20-second answer from John.
Yeah, I think one of the key regulatory action is to address greenwashing, having one global standards in terms of what taxonomy of green means, and also the reporting requirements. There are multiple initiatives. We need to come up to a baseline reporting requirements. Otherwise, it's very hard to sort of automate and put in smart contracts. Everyone is on a different wavelength with respect to what is reportable. So we need one global standards, baseline reporting requirements that is interoperable. That's key to the ecosystem.
Thank you very much. And thanks for everyone for dialing in and attending this forum today on this rainy day in Hong Kong. I hope you all stay in touch with the digital assets ecosystem and try to make it greener.
Thank you.
Thank you, everyone.
Thank you.
Hello, my name is Michael and I'm the co-founder and chief product officer at AngFin. AngFin is an investment super app for Vietnam's next generation of retail investors. Users can easily trade domestic stocks, ETFs, and options. In addition, users can earn interest on their deposits from a series of flexible and fixed-term saving products. Before AngFin started, we made 3 key observations. First, Vietnam is the economy accelerating itself to middle income status with optimal age demographics, high GDP per capita growth, and an insatiable desire for financial assets. Second, Vietnam's interest in financial assets was transitioning from savings and real estate to stocks and crypto. This is demonstrated from the explosion in new retail brokerage accounts, growing 25 times in only 2 years. Lastly, and for better or worse, the power of online investment communities in providing a platform for influential voices. This was displayed most clearly during the meme stock phenomenon early 2021. We established AngFin in June 2021 with 4 co-founders with diverse backgrounds, being founders, investment bankers, product managers, venture capitalists, and technical leads. We all bring unique perspectives and specializations to the table. In the past year, we've accomplished extraordinary measures. We were accepted into Y Combinator's Winter 22 batch and raised $7 million from global venture capital funds such as GFC and Goodwater Capital. For product, we dramatically lowered the cost of investing into stocks by allowing users to buy any number of shares rather than the required 100 share minimum set by the stock exchange. And we were able to do this with proprietary market-making system that provides liquidity to fractional shares for users so they can buy in any amount at any time in real time. As an app for young people, we stay active in engaging our audience. We've used a variety of social media platforms to inform, educate, and entertain our communities. This has been most evident by our active TikTok channel and our relationship with TikTok influencers. We also support continued education on our app through hundreds of pages of free education, which is currently being used by 1/3 of our app. As a result, growth has skyrocketed. In the past 8 months the app has been live, we've surpassed 130,000 funded accounts and over $5 million in monthly transaction value. Because of the way that we do fractional shares, users trade in amounts that would never be possible through the exchange or other brokers. But because of this, they also trade at high frequencies that have pushed our system to process over 15,000 trades per day. In year 1, AngFin has been able to accomplish all of these features. In year 2, AngFin will focus on adding more financial assets such as gold, commodities, and crypto, giving our users more choice in the way that they invest and the way that they build their portfolios. Furthermore, AngFin is developing an innovative community feature that will turn investing into a social experience with research, education, trade alerts, and of course memes, and fueled by the finfluencers of tomorrow. We will continue serving Vietnam's retail investors with an ecosystem of products that meet our core principles of financial access, financial literacy, and financial success. We are AngFin. Thank you very much.
Hello, my name is Josh Dry, and I'm the Business Development Director here at Kogo. At Kogo, we are a living wage employer, a B Corp certified organisation, and a Toitū Carbon Zero certified climate fintech. At Kogo, we're on a mission to empower hundreds of millions of individuals and businesses worldwide to measure, reduce, and offset their impact on the planet. We empower banking customers with their carbon footprints, providing insights and encouraging the commitment to climate actions that drive the adoption of green financial product offerings and reduce their emissions. We have more than 100 team members working globally that composed of data scientists, engineers, impact experts. My colleague Terry is based here in Hong Kong. We utilize categorized transactional data accessible from all bank and credit card accounts, such as spend on electricity and fuel, and assign a carbon emission to each transaction. In just a few clicks, users can measure their carbon footprint based on their spending. This integration also means that the users can get real-time and personalized suggestions on how they can reduce their carbon footprint. Kogo is on a mission to reduce national carbon emissions in any market we enter. We make use of market-specific carbon emissions data in each country or region we operate, so as to ensure the highest accuracy of our tools. We also incorporate a strong behavioral science model to empower the long-term engagement of the users and drive them towards meaningful, measurable climate action. Our banking partners also play an important role by providing relevant green financial products, services, and loans to these carbon-conscious customers. Our solutions can be deployed for both individuals and business customers, as we believe these are the two most important but underserved sectors in the low-carbon economy transition. With the climate action expertise provided by Kogo, banks will be able to lead this transition and at the same time grow revenues by supporting transition in this fast developing green economy. Kogo is trusted by leading banks around the globe. NatWest and Commonwealth Bank in Australia have launched our services last year, with over 500,000 of their customers combined now tracking their carbon footprint. Our latest partners include ING, Suncorp, TSB, Westpac Australia, Kiwi Bank. We're on track to reach 500 million plus end users by 2025. Early reports from working with NatWest Bank, the first bank globally to integrate a carbon footprint calculator, shows an average reduction of 11 kgs of carbon per month by committing to actions such as reducing their red meat consumption or changing to LED light bulbs. Over NatWest's 8 million customers, they are already forecast to save 1 billion kgs of carbon, the equivalent of planting 17 million trees per year. As we get our solutions to scale, we can start making significant emissions reductions in the countries we operate in. Kogo is striving to not only be the best in the world at what we do, but the best for the world. Let's go change the world together. Let's Kogo.
Hey everyone, I'm Kalina from Team Hyperlink. Hi, I'm Varsha from Team Hyperlink. Happy to be here. We are very excited to be a part of the VFF FinTech Forum 2022, and we are even more excited to be the tech partner, and we hope everybody got their NFT with the forum ticket. And to tell you a little bit about Hyperblade, Lakshan, you can go ahead.
Sure. So we're an NFT enabler service. So what that means is we do end-to-end consultation, we do project management, we have our marketplace, our product portfolios, and then we also do like events. And Alan, you want to talk about the academy?
Yes. So from that, we also want to educate people on NFTs. NFTs are so much more than art, and there's so much utility that you can get. And NFTs can revolutionize existing business models in a way that you can make it much more engaging for your audience. So that's where we come in. We want to educate our audience on NFTs, how to use them, how to sell, create. So we have an academy that provides the educational services as well. And apart from that, one of our main verticals is making sure that people in Web 2 can get to Web 3 using NFTs as well. We provide hand-holding services where we can help you throughout your NFT journey. We have consultation services, marketing, tech development, artwork, and metaverse services. So do check out hyperblade.com. All of those details will be there as well.
Yeah, great guys. Have fun. Looking forward to hearing from some of you guys. Hyperblade is all about NFTs. We're everything NFT. Thank you.
Thank you very much, and have a good day.
Good morning. I'm Peter, co-founder of Koha Digital. Koha provides easy and accessible digital legacy planning for individuals and helps them to protect and preserve their family financial future. 85% Malaysia without a wasiat or will. Mostly provided in this space are manual. Completing a wasiat or will are time-consuming. Lack of cost of transparency turns people off. 15% completed their wasiat or will did not update in every major stages in their life. Without wasiat will delay inheritance and family dispute where there are over 90 billion unclaimed assets and increasing yearly. Think about it, it's a huge sum of money that could have gone to loved ones and Malaysia economy. Not only wasiat, but they're also facing difficulty in identifying the gaps in their asset. Koha provides a holistic end-to-end legacy planning, becoming a wealth management aggregator through our partners to address the gaps of our customer inheritance needs. 3-step user experience. User upload their physical or digital asset in various formats such as documents, photos, voice or video instructions. All this will be stored in our secure digital vault. 30 minutes express mode immediately generate legal documents such as wasiat or will. Customer can make changes anytime and we can track the versioning in our database. Emergency situation, customer can share control access in the event of sudden death or incapacitated. Our financial dashboard or inheritance analysis give complete picture of have or have not to identify their protection gap, debts, estate administration. Most importantly, business owner will know what is their net. Good morning. I'm Peter, co-founder of Koha Digital. Koha provides easy and accessible digital legacy planning for individuals and helps them to protect and preserve their family financial future. 85% Malaysia without a wasiat or will. Mostly provided in this space are manual. Completing a wasiat or will are time-consuming. Lack of cost of transparency turns people off. 15% completed their wasiat or will did not update in every major stages in their life. Without wasiat will delay inheritance and family dispute where there are over 90 billion unclaimed assets and increasing yearly. Think about it, it's a huge sum of money that could have gone to loved ones and Malaysia economy. Not only wasiat, but they're also facing difficulty in identifying the gaps in their asset. Koha provides a holistic end-to-end legacy planning, becoming a wealth management aggregator through our partners to address the gaps of our customer inheritance needs. 3-step user experience. User upload their physical or digital asset in various formats such as documents, photos, voice or video instructions. All this will be stored in our secure digital vault. 30 minutes express mode immediately generate legal documents such as wasiat or will. Customer can make changes anytime and we can track the versioning in our database. Emergency situation, customer can share control access in the event of sudden death or incapacitated. Our financial dashboard or inheritance analysis give complete picture of have or have not to identify their protection gap, debts, estate administration. Most importantly, business owner will know what is their net worth. Our system have been tested, vetted, and revised by 3 law firms comprises of experienced and credible lawyers in legal field. In Malaysia, 4.25 million working adults without a wasiat or will. Our prime target customer persona, 30% working adult aged 30 to 45, and would like to capture 10%, that is 58 million. Our B2C model, we offer free for youth who just started their career, starter kit for individual begin to accumulate assets, and comprehensive for individual and business owner had more asset categories. B2B2C model, we work closely with law firms, financial institutions, and enterprise for bundle deals. Our main revenue generate from customer purchase, partners profit sharing. Our go-to-market strategies are partnership with HR, employee benefits, developers, law firms, and banks. Affiliates, we work with KOL or marketing companies and NGOs, such as single parents and NGO bodies. In our space, Koha currently is a front runner in digital legacy planning with wealth management aggregator ahead our competitors. As at 2022 this year, Koha have been selected as finalists for 3 accelerator programs. We have partnered comes to most of 30 entities. We appointed a law firm specialized in intellectual property to protect our brand identity. We make courtesy visit to Malacca Chief Minister to present our ideas in wealth distribution model, and currently working closely with State Economic Planning Agency and its subsidiary to develop this portal. We are shortlisting candidates for Koha Islamic Shareholders Directors and person in charge heading the Koha Islamic for Sharia compliance and certification. Koha Conventional Grand Launching and Koha Islamic Wasiat MVP will be on first quarter 2023. Our management team, 30 years was experience in legal, fin, rec, HR, and wealth management, and our advisors specialized in Sharia, business succession, corporate legal, and business owners and blockchain technology. Currently, 6 Malaysian talents join us full-time, and we are hiring more young talents. Why Koha? Why now? Large untapped market, rise of the digital technology leads to digital economy, a strategic partnership. Now, you plan your wealth to be distributed to your loved ones when you're no longer around. While you're around, qualified financial advisors, professionals from financial services institutions will help you manage and grow your wealth in regardless you are M40 or B40 categories. Sometimes in life, what counts cannot be counted. Putting family together is more important than who gets what. Diamonds are forever, so as your legacy planning. I would like to wish everyone live and give a good life. Thank you.
Do you want me to stay switched on now?
Yeah, you can switch on. We'll just wait.
Recording and live, live,
Yeah,
are we?
we'll just wait. I think we're live. We're just waiting for Ahmed to join.
Hey, Ankit.
Hi, Amit. Okay, so we are live now. Good evening, everyone. Good night to you, Deborah. So, welcome to the panel, Role of RegTech and Digital Identity in Financial Services in APAC and Beyond. I'm delighted to introduce our moderator, Brian Tang, Managing Director and Founding Executive Director, ACMI and Light Lab, Hong Kong University. Over to you, Brian.
Thanks so very much for the kind intro, Asim, and thank you very much to the organizers for inviting all of us to get together for the VFF FinTech Forum. Our session this afternoon, it relates to the role of RegTech and digital identity in financial services in APAC and beyond. And really, it's really part of the FinTech for ESG and sustainability segment, so we certainly will be touching upon that as well. RegTech is, I call RegTech FinTech secret sauce, and part of that is because RegTech allows for the inclusive finance, but also the combating of financial crime. But at its core is the issue of digital identity as FinTech expands and more of us have our lives online. So how does RegTech and digital identity have a role there as we expand into Web 3.0, metaverse, and across borders? I'm really pleased to have this really international group here today. We're joined from Australia, India, and myself. I'm in Hong Kong. So first and foremost, please put your virtual hands together to welcome Deborah Young, the CEO of RegTech Association. We have Ankit Ratan, who's a co-founder of SIGZI, who's based in India. And last but not least, Amit Goel, who's a founder himself, Medici, before he exited and sold to Prove, and is now a country head in India and VP at Prove. So please welcome all of you to this virtual meeting. With this great panel with old friends and new, I wanted to start with the state of play of RegTech and regulatory compliance as it applies to FinTech. Maybe let's start with you first, please, Deborah. Deborah, could you share a little bit as to what you're seeing right now? Again, we've been having this discussion for many years. What's the RegTech state of play right now as you see it in 2022? Thanks.
Thanks very much, Brian. I'm absolutely delighted to be here. Well, what we're seeing is that all indications are that the uptake of RegTech more generally remains very strong. We're about to do our next data collection, and we'll have some fresh insights there in a couple of weeks' time. But we're certainly seeing more of a trend towards buying rather than building, which is good news if you're a RegTech solution vendor. We are seeing more solutions being deployed faster by institutions than we have seen in previous years. And importantly, I think we are seeing more engaged institutions and regulators, not only in Australia, but elsewhere. And finally, I would say that digital identity really remains a strong stakeholder group within my association's membership. And it's growing its impact at the moment because of the real focus on RegTech right now, including from second-tier financial institutions. But there's also a range of new buying sectors emerging, which is making digital ID a really, really hot topic right now.
Great, thank you, Deborah. To expand on that a little bit, since you're based in Australia, so are you seeing the digital ID initiative coming more from the private sector, introducing new solutions, or how's the government and the Commonwealth reacting to that? Because at least historically, there's been some pushback. Australians have their own views in terms of the extent to which they are willing to share their data with the government and others.
Well, it's really interesting because I think the pandemic has driven bigger appetite around digital identity, and in particular from the public sector and government. So in actual fact, it seems, looking from the outside in, that government are actually leading some of this work. And that, it was so strongly evidenced by the early stages of the pandemic, when digital identity, or the lack of that digital way of being able to say that people are who they say they are, was really, really critical in getting services and relief to people. And in some cases, that digital ID was not in place. So I think the government recognised that pretty quickly and have pivoted. So what we're seeing is that the government and the public sector could in fact be leading the way on some of these initiatives right now.
Super, super. And I think in some circles, I see you talk a little bit less about RegTech, but more about GovTech. And I think that reflects the fact that it is the government that's really pushing some of this.
Yes, absolutely. And I think one of my predictions is that government will become the next greatest buyer of RegTech solutions next to financial services in the future.
Awesome, awesome. Now turning a little bit to the other side of the APAC region, Ankit, I would love to hear from you in terms of what you're seeing in relation to RegTech and regulatory compliance as it applies to fintechs in India.
No, I think the super interesting comments from Deborah, and thank you so much for also having me on the panel. And I think what she's predicting has already happened in India. So when she's saying that, I see government becoming a big RegTech player, actually in India, due to the Aadhaar stack, which is very famous, but there's also actually business RegTech stack. There are stacks on consent. So there are a lot of now RegTech stacks that exist in India. And of course, like the volumes are huge. You have 1 billion hits on Aadhaar ecosystem every month. So yeah, I mean, this reality has already happened in India. I think we are also at a stage where we are seeing the other side, which is that once you have a open public infra which allows for a very rapid growth of end consumer finance, you will also see risks, and you will also see things that have gone wrong. So there has been a regulatory change in mindset where they've understood that some of this has caused systemic risk, because now you have these really agile tech players using public infra and then suddenly reaching massive scale, unlike a bank which keep getting nodded on their hands every time they make a mistake and then slowly create a compliance culture. These companies scaled very quickly, and many of them also use banking rails, and of course have to use banking rails at the back end to deliver financial product, but they haven't scaled their compliance rails. And most of this compliance agreement just exists on paper, right? So the bank kind of puts the compliance burden on the RegTech, and the RegTech kind of accepts that compliance burden, but you really don't know if that fintech is actually doing it. So I think one of the changes that needs to happen and is happening underway is where the regulator is kind of laid out that the RegTech rails have to come outside from the bank. So the bank, while maybe giving financial product as a commodity, they have to kind of extend out the RegTech rails to these end financial fintech players. So the KYC, AML all have to be rails that the bank gives, which requires a technology shift at the bank side, where the bank has to become a little bit like a AWS, right? Where they have to kind of give out microservices to end parties, not just around payments, but also around RegTech.
Interesting. So India, of course, is renowned around the world for having introduced Aadhaar. So if we start the question on the identity side, and from an inclusion point of view, it really has a massive amount of adoption, which has been great. But there had been challenges too in relation to Aadhaar. So what lessons perhaps might other countries have? You've heard what Deborah is undergoing now in Australia. Might other countries have in relation to rolling out a more nationwide digital identity kind of regime, as we learn in terms of what Aadhaar has happened in India with Aadhaar?
Yeah, I think like Deborah also pointed that out, but I think fintechs would very quickly realize. So there was this instance in India where overnight billions of dollars funded companies, suddenly their business model was oof in a second. And the major issue that the regulator pointed out is that you are not following KYC AML guidelines, and the product that you're giving out to the end consumer is a product that you cannot call it a credit card, because you're actually giving a loan product, and then you're not doing the KYC AML for that product. So I think one of the new jokes going around in India is a fintech founder, he gets up in the morning and he opens the RBI website and there's no new notification, and he breathes a sigh of relief that, okay, today nothing new has come out. So I think if a guidance has to be taken, is that regulatory technology, I mean, whether we call it technology, whether we call it culture, whether we call it principles, totally get undermined when consumer tech minded founders take over innovation. And they of course learn it the hard way, but there's of course a non-hard way to learn it, is that you keep RegTech as a very, very important core part of you building a consumer finance outfit as a fintech or as a tech fin.
Okay, no, well, for those of us that come from a compliance kind of legal background, we like the sound of that. We like the sound of that. But linked to your earlier point also, it sounds like in India, they're tightening it out on the so-called outsourcing of these solutions, because again, a lot of regulators around the world do have limitations on what you can outsource and what you can't. It sounds like in India, a lot of the banks had effectively outsourced a lot of the onboarding and KYC aspects, but alas, that has not been that has led to some issues, shall we say? So does that mean, and what is your prediction then? If banks now and financial institutions now have to do it internally, will they end up building it more, or will they, as Deborah indicated, perhaps buy more, which is good for folk like you?
Yeah, I don't think banks ever build, right? I think those, if there were ever days, right? I don't remember a day when bank was building, but it is always buy. The only, I think, difference is that they had in some ways thought that, we have a license and we have a payment trail and everything else will happen outside us, which is no longer true. So along with the payment trail, they need to provide a RegTech rail. At least in India, what's happening is that the regulator is also saying that everything else also needs to be registered. So while there may be licensed entities, but there should be the other entities which are in the entire chain of a financial product should also be registered. You just can't one day open an app and suddenly use an open banking API and suddenly start giving out a loan or start giving out a financial product. So at least the regulator is taking a view, okay, fair enough, you should not have a license, but you should have a registration. And there should be some rules around that registration which are not as because one of the other things we have to realize is that these fintechs, at least in India, there are 3 different regulators for investment, banking, and insurance. And some of these fintech players actually are not clearly one of them. They are actually doing multiple things. In fact, there is then this question of things like crypto, right? You don't even know who's the regulator. So I think one of the things that the regulator is still not clear, where will they get registered, who is the umbrella regulator who will register them. But there's a clear need that the regulators have set of registering these fintechs or consumer techs if they are giving out any financial product, and which should solve some of this challenge.
Great, thank you. No, for better for worse, India is not the only one that doesn't have a universal regulator. A lot of us have that issue as well, in Australia, in Hong Kong. And so there is a regulatory, a lacuna in some cases, or even arbitrage. And I think the hope and intent is at least the regulators are better coordinated, so that people who genuinely want to comply know who to go to and who to get an answer for that. So thanks for that, Ankit. Now over to you, Amit. So Amit, you're based in India, of course. In your former shop, was very involved in the RegTech space and the like. But now you've been acquired by, I think, a RegTech and a US one as well. So I think your view is much broader again as well. Love to hear your take in terms of the state of play of RegTech in 2022.
Yeah, thanks for having me. And big shoes to fill in after Ankit and Deborah have spoken. I'll try. So I think across the RegTech landscape, which we used to lay out in the times of 20G, there is development happening from a product solutions perspective across the board, whether it be regulatory change management, regulatory reporting, or let's say market trade surveillance. There's lots of new stuff coming in, but again, I think the mind share is taken by one big segment, which is digital ID and customer onboarding. And for very obvious reasons that I think post-COVID, while digital transactions grew, the fraudsters became really, really smart, and the fraud vectors have grown quite a bit. And therefore, we have to be smarter, and there's always a catch-up game that we are playing. But in that, I think customer onboarding, authentication, KYC is kind of very pivotal, right, for this entire field, and therefore we see a lot of mind share, market share, and everything, and the dollars being flowed into this particular segment. And what is very interesting is that there is a lot of new solutions which are coming into the space as fraud vectors are growing. And while on the one hand we are trying to bring a lot of security, we also want to be very, provide convenience to the customer so that they can onboard very quickly and they can authenticate very quickly. So how do you find that balance, right? This is like the 60-year-old problem in the financial services or any other space. And so there are many new solutions which are coming in, which is very interesting. For example, the one that I'm a little biased towards is mobile-centric identity, because everybody is doing these transactions on the mobile phone. So for example, the approach that we have at Prove is that how can we bind the identity to the phone? And if we can actually prove the possession of the phone and especially the phone number, and we can basically prevent SIM swap fraud and account takeover fraud, and then also do the ownership piece of it in partnership with companies, like Scienzy and others, then can we actually provide this whole solution, which includes, everything from workflow orchestration to the entire KYC onboarding piece. I think that's helping us a lot because, you can onboard customers very quickly, but you're also taking care of all the fraud which goes into, and very conveniently without the customer having to do anything. So that's where I think we are going. And there are many developments in this space. We can talk about it during the discussion.
Okay, great. Well, no, thanks so much for that. I mean, I think that is a direction as increasingly we all live with our phones, it becomes more important than our wallet. My side story along those lines is in 2020, I was visiting family in Australia, and I was getting bills for accidental roaming charges from Hong Kong because I was stuck during COVID. And so I took out my Hong Kong SIM card, and then I lost it. But because I did that, I could not do my online banking. It was all linked to my SIM card, right? So that's this downside of everything being linked to your phone, and specifically your SIM card, right? So I think it'll be interesting to see how it'll soon be biometric. We can even talk about that being introduced into your put it in, surgically put in and the like. But maybe with that, I'll quickly flip over to you. Yeah,
I can tell you a solution for that, but then it will become like a whole sales pitch. So I'll leave it for today.
Well, it'll become what? I mean.
No, there is a solution for that today. We have it in, we offer it as a solution. But if I start talking about that, then it will become a sales pitch. So
a sales pitch. Sorry, right. No, well, we're very open here. We're very open. I thought you said we'll get into bionics, and we'll end up putting it into the body and the like. But I wanted to briefly spin over to Deborah. I mean, part of the story of RegTech is about financial inclusion, right? And that is, I think with Aadhaar, that was how it's actually sold in term and RegTech and digital identity, right? So maybe Deborah, you could speak a little bit about the financial inclusion aspects from an Australian point of view, and how much that is part of that narrative, shall we say, in terms of introducing RegTech in Australia.
Yeah, well, it's a really important part of financial inclusion, because we would say that all RegTech solutions are adding a layer of trust, and I think that that we are seeing, that there will be a greater reach of financial products and indeed fintech products that are now being protected by good RegTech solutions, and they will be aiding more inclusion across underserved communities, not just in Australia, but certainly elsewhere. And just picking up on a point that was made earlier, what is really interesting is, obviously the talk about RegTech is often about how we're, protecting people externally. But actually RegTech is now being used, and it's actually, scaling quite well. And there's at least one Australian unicorn actually in the area of employee workforce compliance. So this is about protecting your business from the people who actually work in your business, right? So not protecting it from external forces, but actually protecting it from the people who you are hiring that you have probably never met, and have not eyeballed in the same way that you would have in the old days. So how do you safely onboard people? How do you ensure that they are who they say they are, that their credentials are in fact real, that you have a safe place to keep their personal data and information, that they're getting the right training that they need throughout their life cycle. So this is this whole area of workforce management solutions. So protecting an organization from, you know, helping to give good, I guess, customer service to their internal employees so that they can in turn serve the external stakeholders and drive some more of that inclusion that you've just alluded to. So it's really interesting times for RegTech and what's actually packed into this RegTech family right now.
Fascinating. And I thought the direction you were going to go into was using, you know, because increasingly RegTech is also being used to address a conduct risk, right?
Yes.
So looking inwards, and then it raises the issue of surveillance. As we all now work from home, the camera watching us at home, so
Correct.
it increases lots of complexity around that.
Yes, absolutely. So where is your information being stored right now?
Yep, indeed.
And I'd suggest it's in places all over the world.
I think that's right. In various cloud systems in different based in at servers in different jurisdictions.
Yeah, absolutely.
Now, talking about all over the world and the next direction of fintech, the Web3 has become, you know, a big buzzword and is increasingly gaining traction, especially with the development of digital assets. And also linked to that then is the concept of digital identity on the Web3. Now, I wonder whether, you know, Amit, you can speak a little bit to that and how what digital identity solutions now being created that address both the opportunities as well as the challenges of that.
Sure. And, you know, obviously connecting it to Web2 will be very meaningful, you know, when we talk about Web3. So I think the thing is that in our traditional world, the regulator wanted, for all the good reasons, to have KYC, to know the customer really well. And the crypto bros would like to make us believe that, you know, let's just do it totally decentralized way. And the bad news for them is that the regulations are coming in that space. You know, with all the stuff which has happened in the last 12 months, I think it's very, very clear that regulators are actually sort of, you know, trying to construct how to sort of manage RegTech in that space. So what I feel and what I'm seeing a lot in the market, I was at Consensus and this was being discussed a lot, right? Identity was like the centerpiece of the discussion there as well. That maybe one of the approaches is that you do the customer onboarding and authentication and credentialing in Web2, so off chain, and then basically you pass the token on chain and then use it, you know, on chain in Web3. I think that kind of a Web2 meets Web3 solution is what you know, we are seeing a lot, and it makes a lot of sense because there's no cold start problem. You know, billions of people have already been ID'd and they are authenticating in the Web2 world. So, you know, if you can actually start passing these tokens on chain and then use them in Web3, that seems to be a very, very good approach overall.
I think that seems to make a lot of sense, especially the way that we understand the world kind of works, right? And the complexity. Once you go into Web3, you can do the tracing, but again, it depends on where they went on and when they went off. And we'll segment that shortly later on to Ankit when we go into the metaverse, where we don't need to go off anymore, right? Once you go on, you don't need to go off, right? But you know, with what you were saying, there are the crypto bros, as you say, but there are those that also believe that having centralized digital identity or just the entity in general creates hacking kind of risks, right? Because you have honeypots basically where all the data is actually being stored, right? And therefore there's suggestions being made as to decentralized or sovereign self-identity type solutions. So not necessarily DeFi per se, but at least decentralized solutions for self-verification of sovereign self-identity. So wondered what your thoughts on the current developments of that.
So basically, today, if you you know, if you have interacted or used one of these dApps or anything, basically you have let's say a MetaMask wallet, and any application you are going to, you are authenticating yourself with that wallet. But then you could create multiple wallets. There is lots of issues in that structure, even though the ownership control piece is there. But how do we know who is transacting and where is this money going, right? So there are checks and balances that will be brought. That's why I was saying, like, I think the approach is that in Web3 there will be protocols which will be created, which can actually receive the token while the credentialing is happening off chain, and then so you could still authenticate with a lot of confidence because the credentials have been authenticated, but then you don't have the PII data sitting on chain, right? So that's how it solves the problem of bringing the ownership control piece as well as the KYC.
Right, but I know I totally hear you there, but I guess part of it is we are still relying on certain kind of aspects of identification that are being centralized in certain sovereign states, and maybe at the end of the day, as much as anybody might like, that's where we'll end up being, right? Ankit, any thoughts in relation to some of the centralized, decentralized kind of argument there?
Yeah, I think we have to realize there are also engineering unsolved problems that are leading to this not getting resolved, right? Because I mean, first is the philosophical question of what is identity, right? So, and I mean, there are multiple factors there, but I think it is easy to understand that once I recognize Amit, let's say I know Amit, right? Whether I meet him in Hong Kong, in India, or US, I recognize him as Amit because of his physical presence, and physical presence is nothing but maybe your face, your eyes, your voice, your fingerprints. So I think one maybe commonality that exists in human civilization is that your physical biometrics is definitely identity, but there is an engineering problem in decentralization there, that unlike crypto transactions or other non-biometric transactions, which can be stored as hash and hence can be fully decentralized without revealing private information, biometrics cannot be stored as hashes. And so in some ways there is an engineering problem also underlying, which is that you'll always end up having a biometric centralized honeypot, right? In fact, like while I go to the metaverse patent, US patent, which is granted, we've actually also filed a patent for resolving biometrics as a hash, which is looking at a probabilistic solution, which is saying, okay, I'm 99% sure that you are the same, but because I've not exactly stored you, I'm not sure, and I've stored a hash. So then there needs to be an engineering solve. There is a lack of engineering solve in decentralized, and I know this got too technical, but there is an engineering problem to solve. But I think there's one good news in Web3. I think what Amit was saying is that there needs to be connection of Web3 to Web2. Like we have just got a patent for US patent for onboarding in metaverse, where we are exactly trying to do this. So what we're trying to say is that once you are inside a game and you are buying these Louis Vuitton bags for $75, there's of course commerce happening outside the physical world. And hence, if commerce is happening outside the physical world, there would be finance happening outside the physical world. And why should it just happen on cryptos? I may be a legitimate user holding a legitimate JP Morgan account, and I would maybe want to be a new user getting onboarded to a JP Morgan personal loan, JP Morgan account for crypto, etc., etc. And I should be able to do it completely inside the virtual world ever without having to, actually walk to a bank branch. But the good part is that that virtual JP Morgan account will also be linked to a physical account through the Signesy's entire journey and process, and make sure you are compliant with the KYC AML norms that would have applied in the physical world. So I think that's at least, I think something like we, and I think I'm sure other players are trying to bring some linkages to this virtual to physical world in metaverse at least.
So because of course with the metaverse we're all avatars, which of course I might not look like that. I have less gray hair, maybe no hair, lots more hair, and the like. But the idea then is ultimately, but in your mind, I think, and that's a good philosophical question as well, right? Which is like, who am I? What is the appropriate identity? And ultimately, it is, in your words, it's biometric. It's the sum of the parts. of the human, shall we say, or the human body, shall we say. So maybe that answers the cell phone question earlier on. It's now no longer the cell phone, it's my biometrics, right? So right now in terms of biometrics, which how many we have three-factor authentication right now with that. So what kind of authentication would you be looking at in terms of biometrics, Ankit?
Yeah, I think because of multiple, so there is again here a huge engineering issue. So what happened with the fingerprints and iris is that across the world devices have not agreed on standards. So like an iOS fingerprint store is different from an Android, I'm sure is different from Windows, and if Nokia is still doing phones, I'm sure it's different for Nokia. So that's the big issue. Okay, and that's the fundamental issue with like a iris and a fingerprint, that the storage standards are just all over the place. Versus in the face, the beauty is, like, whatever good or bad again, is that the standards that were created were actually very simple and very straightforward. They were not very mathematical expressions. They were simply saying, oh, I see your face, which is eye, nose, and mouth distance, and any and every algorithm stores that in maybe a slightly different form. So it can very easily get resolved, even if you're storing in different forms and vectors. So face, at least in our view, is the most scalable one. It's also the easiest to collect. Cameras are getting better and better. Most devices, your laptops, your mobile phones, everything has cameras. So we feel, and also from a financial inclusion point of view, even basic phones have cameras if they don't have fingerprint. So as a result, we feel face is a good ID. It also exists on your sovereign ID generally. Your sovereign identity in a country also has face. So face, we feel, is probably the biometric that will become the mainstay of a centralized / decentralized identity.
But so then how concerned might providers like you be with developments like GPT-3 and 4, which actually allow for the melding and the creation and of not my real face, shall we say, and there are lots of different examples of that on the web, where I can pretend to talk like I'm Donald Trump and the like.
Yeah, no, that's great. So I think that's a great question. So I think every technology will be bettered by a better fraud of that technology. So that's a battle that I think continuously needs to get fought. But I think what we should always realize, which people don't realize, is that this is 10x more in the physical world. So when you're in a physical world, people actually take your papers, go to a bank branch, have a relationship with the branch guy, and actually open an account on your behalf, even without you having ever visited. And so when people try and kind of point out the flaws in digital world, they forget that equivalent or even bigger frauds actually exist in the physical world. Here at least we know, right? We know it's GPT. We know you can predict, like, there will be some predictability around whether this is natural, whether this is, at least today, GPT is still predictable. You can predict the fraud. You can predict that this is being generated by AI library. So there is a more centralized technology, which of course fraudster can centralize attack and scale the fraud. But at the same time, in the true open source way, once a solution is found, it can also be kind of killed in a central manner. Unlike branches, you'll have rogue actors. How many branches will you really protect rogue actors?
No, that's fair. I spoke at an AML kind of panel, and what the regulator, who's a former policeman, said why he loves the space is because every time you think of something creative, that the bad guys are even more creative, right? And so you always will have to keep on your toes to actually catch up with the fighting the crime there. So now turning over to the international, sometimes when you talk about sovereign identity, right? So in terms of right now, each individual country has it, but and then you also talk about standards. So as we talk about digital identity, isn't one of the issues then how, even if, say, for example, India, Australia works out a fantastic digital identity, right, and it works through, isn't the problem is when I fly from Australia over to Hong Kong or India, if they don't recognize it, it still doesn't apply, and that's hence it's multiplied in places like metaverse, or we'll have different metaverses. Any thoughts on how we address that? Is it standards? Is it common bodies? I mean, FATF is one. I mean, fascinating body that actually has now led to standards that, in a certain way, but they're still trying to work through the actual practical aspects, right? So thoughts on the cross-border aspects. Maybe we start with you, Amit, on that.
Okay, I'm a little biased because I think we are already using the same method and same processes pretty much in about 4 or 5 countries now. We think that phone and phone-centric identity is a very global approach. It's the same exact principles and approach which applies everywhere. If you prove the possession of the phone, you take care of SIM swap, account takeover frauds, and you use ownership. I think you can do it in many countries. But you're absolutely right that the ownership piece of it is very complex. You can't easily export it to other countries, and therefore, I think Ankit, can actually shed more light on how ownership can actually transport beyond borders.
Ankit, he handed the ball over to you.
Yeah, I think once we are more digital, actually, it's not about digital. I think when people are more mobile, right, it's in some ways unfair to tag them to a sovereign identity in the first place. So, for example, like what happens, I'm sure it happens in other countries also, is that address proof is a very, very important proof in a loan, because people feel that, this person will live at this address. So if I have to go and collect money and there's some issue, I will go to this address. But what we have not realized that people have become extremely mobile. That physical address is no longer valid, right? There's no way you can hold them to that physical address. The same thing I think about ownership, right? The goal of FATF compliance in KYC is not truly to hold you to an ownership of a sovereign identity, is to be able to identify you if there is a fraud and then catch you. And if you think about it in a deeper sense, airports have now CCTVs, hotels have CCTVs, everything that you go through is CCTV. In fact, in Russia, actually, if you lose a wallet and you go to a police station, they'll tell you, okay, you were here, and this is where you lost your wallet. So in some ways, I believe this ownership question is a dated question when we didn't have enough technology and we were, linked to local police stations and all of that. I think today we have to go to the essence of KYC, which is being able to uniquely identify an individual and catch him, which I think, again, a physical biometric solves for, in my humble opinion. And I think as more and more countries start seeing, okay, Ankit means this biometric identity. If he does some fraud in Australia, I can, through data, kind of reach to him. I don't really need his passport number. I don't really need his X number, Y number. Today, the technology exists is to be able to identify me and catch me through my face.
Great, thank you. So Deborah, over to you again. In the RegTech Association, you see lots of different solutions, and a lot of Australian RegTechs are seeking to go abroad, and vice versa. So how do you think what do you think, if you had a wish list, how do we address this cross-border aspect of digital identity?
Yeah, well, it is a global. RegTech was kind of born to be global, right? And so
Yes.
Wherever RegTech companies are in the world, they need to be trying to solve what are global issues, and digital identity sits firmly in the middle of all of that, which we've just been hearing about. And so I would expect that there will be more cross-border activity that we are seeing as not only Australian RegTechs who have digital identity solutions are looking to scale and grow into global markets, but also likewise there will be digital identity solutions coming from outside of Australia into Australia as well. I think what I am foreshadowing is that there will be more sharing of information. And as I mentioned earlier, I think government are going to be absolutely critical. And in fact, they're probably driving some of this now. And so that is a little bit of a shift. That is a little bit of a shift from what we have been seeing. So I would think that our association has a global universe going at the moment. And the idea is that we're trying to get as many great solutions as we can out there into the hands of the people that need them as quickly as possible. And in order to do that, it has to be a global family. So I think that's what I'm predicting.
So
We're
we
going
all
to go
have to work
global.
more closely together on this, because even if
Yes.
you solve it in one country, it doesn't necessarily work, right?
Yeah,
You
that's
need others to
correct.
accept it.
That's absolutely correct. Yeah.
And we're down to our last couple of minutes. I wanted to end linked to the theme of this this segment, which is ESG. And maybe so briefly, maybe we'll start with you, Deborah, and then we go around the room. I know how are you seeing RegTech helping ESG? I personally have linked it for some time in terms of reporting obligations. So increasingly, there's reporting requirements now that are coming through with IFRS and like. And so as companies need more to ensure that they're reporting properly, I think RegTech is a way forward as well. But love to hear your thoughts, Deborah.
Yeah, I'll try and do this really quickly because it's a subject that I'm very passionate about. So like you, I think it has a very important role to play. So if we just say that we agree that RegTech can solve lots of problems for an institution that will have a major impact on an institution's ability to be able to measure its own ESG impact. So if we say that as a given, that the solutions are there to help, I think what makes it really interesting and why it's a great opportunity for RegTech right now is that this is not just an opportunity for a RegTech vendor to approach the normal people that they would normally speak to at a financial institution. This now opens up a whole world, because now they need to be speaking to the climate change people and the sustainability people. And so it's actually broadening out the universe within the customer base on the different style of conversations. And because the institutions have set targets and goals around achieving some of this stuff, this is great news for RegTech. What I think is also another opportunity for RegTech is actually this whole, I think RegTech will be on a learning journey about ESG for their own businesses. So what is their commitment? So that is their firm's commitment to ESG, and how are they answering some of those hard questions about their own environmental, social, and governance practices. And then last but not least, it's important that they address that, because they will not attract professional capital in if they haven't answered the questions around ESG for their own businesses. And then furthermore, if I can just finish on a point about people, in the future, it's going to be super important that organizations can answer hard questions around ESG, because the next generation of young people coming through will simply not work for a company that is not environmentally aware, does not have sustainable practices, and does not observe good governance. So I think from a people perspective, that's going to be really important going forward.
I'm sorry we've run out of time, but this has been such a fantastic discussion, and I think, Deborah, you ended it in such a great and positive way. Dare I say, I was there with the change of new government, and so I think Australia is now being more climate friendly, which is great for all of us and the planet. Amit, Ankit, thank you very much. We're talking about the planet. We're talking about the universes outside the planet, in the metaverse and beyond too. So really enjoyed the discussion. Look forward to seeing what 2023 will hold, and hopefully we catch up in the coming year. Thank you.
Thank you.
Thank you, Brian.
Thanks.
Thank you, everyone.
Bye.
Bye.
Good afternoon and good evening, everyone joining us today. Well, welcome to the panel, How FinTech is Revolutionizing Islamic Finance and Banking Models. I'm delighted to introduce our moderator for the panel today, Dr. Oriol Cordovilla, Board Director, Global Impact FinTech Forum. Over to you, Dr. Oriol.
Well, thank you very much, Asim, for the introduction, and thank you to the organizers as well for inviting us to participate in this fascinating event. So without further ado, I would like to start by asking each one of the panelists to please introduce yourselves. So maybe let's start with Dr. Dalal.
Thank you, Oriol. Good afternoon and good evening or good morning, everyone, depending on wherever you are. My name is Dalal Asuri. I'm an Islamic and Sustainable Finance faculty at Hamad bin Khalifa University in Qatar. I am also board member of the Global Impact FinTech Forum, focusing mainly on the MENA region to promote digital sustainable finance.
Thank you very much. Now over to Dima.
Assalamu alaikum, everyone. Just to introduce myself, my name is Dima. I'm the founder and CEO of Alami, the largest Islamic fintech lending platform turned digital bank in Southeast Asia, focusing on SME productive lending. Thank you very much.
Thank you very much. And well, now over to Kemal.
Hi, Dr. Daryl, everyone. And again, good morning or afternoon to the audience. My name is Kamal. Basically, I've worked over the last 30 years involved in both as a regulator and also investment banking, involved in Islamic finance, fintech, digital assets, and developing capital markets, both in the Asian and also in the Middle East region. I'm also involved as a member of the FinTech committee here in Oman of the CMA in actually looking in developing the FinTech market here in Oman. Thank you.
Well, thank you very much to all of you panelists for introducing yourselves. And now, well, we're going to start our discussion per se, our panel. And for the next half hour, we are going to be discussing some relevant topics in this area, in the area of Islamic finance and Islamic fintech. I'm going to start with a very general question, which I would like to all of you please respond individually, but if you feel like you need to debate as well, feel free to do it. And the idea is, how do you think fintech is revolutionizing Islamic finance and banking models? So over to any of you, whoever wants to start.
Yeah, I think I can take that up and happy to discuss with the rest of the panelists. I think the technology typically allowed a new business model. So it's the tech-enabled business model will create a differentiation, I think, compared to the traditional or Islamic banks or financial institutions or the incumbents. So I think it depends on the market, but for example, in Indonesia, there are certain Islamic structures or akads that is probably not that straightforward, just because I think from the operating perspective, it might not be easy to implement that akad fully, responding to the market demands and needs, etc. And this is allowed by the technology solution. So the technology component can potentially allow the financial services company to be, I would say, more affecting the akad or the structure in closer to the teachings, I would say. So I think that's one. And second is obviously on the education part, right? So I think Islamic finance would have a very low CAC, especially for Muslim or customer acquisition costs, if the awareness is high. And with the tech-enabled model touching on not only social media and digital marketing, but also the storytelling of such a company, that will create more familiarity and connectivity with the growing millennials or even the centennials. So that would also helps the tech-enabled business model to flourish as opposed to the incumbents. I think that's my 2 cents. Thank you.
And I think if I may add to that, I think Dr. Oriel, looking at the global level is actually, we noticed that fintech has generally disrupted the financial industry in various ways, and including the Islamic financial industry. And that is in various aspects, including the efficiency of transactions, the trustability, more solutions for data analysis, and then, of course, promoting financial inclusion, like we've seen in the case of Indonesia, and in general, also promoting innovation in fund mobilization. So I think from the latest Global Islamic FinTech report, the market size is about 79 billion, the Islamic FinTech market size, which is quite a large number, and that is projected to grow up to 179 billion by 2026. Which shows actually the significant development in the market, and also the variety of solutions across the various segments of the Islamic financial industry, that includes in payments, capital market solutions, insurance, social finance, deposits, etc. So, and I think that has also been accelerated during the pandemic. I think Dima mentioned education. We witnessed that personally in the academic sector, more solutions for EdTech, for example, to support also, developing leading courses, and also to support sustainable development goals achievement. Quality education is one of the key objectives. And also to support, as I mentioned, poverty eradication, and that is through financial inclusion. So that's broadly how fintech has been disrupting the industry. And of course, I'll leave the floor to other colleagues to add their opinion.
Okay. Well, I think both my 2 colleagues have covered a lot of areas, but I'd like to touch upon what Dr. Dalla has mentioned about financial inclusion. I think that's quite key, because improving financial inclusion is a key component of Islamic finance, and hence financial technology and digitalization actually plays an important role in driving this financial inclusion and reaching out to the society and ummah. And that's one of the key aspects, especially if you want to actually push Islamic finance and the banking sector, because it provides this easy access to financial markets for all sectors of society. I mean, to put it simply, I think both my colleagues have touched on that. Gone are the days where you actually need to physically go to a brick and mortar bank to do your banking transactions, right? You have all the smartphone applications. You have a robo-advisory for fund management. You have blockchain for secured contracts, both in takaful insurance. You have also blockchain-based tokens in order to actually issue real estate tokens or real estate tokenization. You have artificial intelligence for portfolio allocation. So all things we are seeing, it actually revolutionize Islamic finance. And last but not least, I think one of the things that we're also pushing here in Oman is crowdfunding fintech platforms. And we've seen how globally, how such crowdfunding fintech platforms have effectively directed Sharia-compliant financing or capital to socially impactful causes. And you can see this, for example, a good example in Indonesia, as Pak Dima has mentioned. You have Ethis there, which is also based here in Oman, providing Islamic crowdfunding for all segments of society, especially those sectors in the SMEs. We have also Bihai, for example, in Oman. We have also Blossom, I think, also in Indonesia, which provides P2P Islamic financing for SMEs through blockchain suku. So that is actually quite innovative, and thus this crowdfunding fintech requirements, which we also have established in Oman, is very attractive, for investors to come in, and that's one way to actually attract foreign direct investments into Oman and also into other countries also.
Well, thank you very much for sharing. All of you actually touched upon very interesting topics and areas regarding the current status of Islamic fintech. You mentioned financial inclusion as well, the technology. I wanted to ask you about the future of Islamic fintech. What do you think the future of this area, Islamic fintech, will look like? And this is a question for all of you. So, I don't know, let's start with Dr. Dalal, for example.
Yes, sorry. No, I think the future looks bright to start with. So I think I mentioned the projections for the industry. So I think 179 billion by 2026, that's a significant number. I think a good way to look at it is to look at what have we achieved today and what are the needs, and to identify the gaps, which I would say that these are also opportunities for development. And I think the recent pandemic demonstrated how new niches can be actually explored to achieve more impact. And we mentioned financial inclusion, but also sustainability impact. And today, if we look at the key segments in the Islamic financial industry, there are about 4 key segments. We have Islamic banking, the sukuk, which together represent more than 90% of the Islamic financial industry. And then about 5% would be, will comprise Islamic funds, and then the takaful, which are still underserved. At the same time, if we look at the innovations that we see today in terms of fintech, the majority of solutions are still focused on payments. And also, for example, crowdfunding. We've seen many platforms globally, but again, there are differences between the regions. But if you look at other segments like the capital markets, or even social finance, or even insurance and wealth management solutions, a lot of the markets are still underserved and still lacking innovations in this area. So there is a lot of potential in all of these segments to actually scale up the Islamic fintech in these regions, and that will depend, of course, on a number of factors. And the key, I would say, the key trends that would support this mobilization. Number one is the need to mobilize financing. Everyone is now talking about, for example, COP27 and the mobilization to mitigate climate change, and also the SDG agenda, which actually it's coming to an end in a couple of years, where we still have a lot of gaps in actually achieving the initial targets under the SDGs. So there is a lot of potential in leveraging on these 2 key drivers that impact equally, the global financial industry, and then any national strategies globally, to actually promote more fintech innovations in order to actually accelerate, impact.
Thank you very much. Over now to Kamal, for example.
Can I add, Dr.
Sure.
Sure,
please.
Okay. Very good points which Dr. Dalal has raised. I just like to look at simply, coming back to the question in terms of the future of Islamic fintech. Just look in terms of conventional finance vis-a-vis Islamic finance. Now, modern Islamic finance has just existed recently. I think it's more in 1980s. Conventional finance has actually existed all this while. Now, then when you look at the fintech space, there is, again, as what Dr. Dalal has mentioned, and I would echo that there is tremendous potential and exciting potential for this. There's a lot of catch-up that needs to be done, especially in the Islamic fintech space. You see the trend that we are actually moving towards, the trend towards digitalization in terms of the global landscape. And you see that there are a lot of applications which is actually being used, especially as mentioned earlier, in a way the hikmah behind the COVID-19 situation actually push more opportunities towards digitalization and financial technology, especially in reaching out to the masses while doing your business from home. And that you can actually see in a lot of the space which is actually happening. I think what needs to be done is just to ensure that we create a vibrant, interconnected ecosystem, which is attractive for both to develop Islamic finance products and at the same time Islamic fintech. Those are just my additional points.
Yeah, let me just quickly add to it. I think when we're talking about the future of Islamic fintech, I think we need to derive it from the future of fintech itself. So I think globally, we're seeing now a lot of the fintech initiative ultimately is heading towards the digital banking play. It can be through neobanking, sitting on top of a smaller bank, or even getting their own banking license, becoming a challenger bank, or playing the payment type of shadow banking kind of thing through their ecosystem. So ultimately, they're all going there because the economies of scale and revenue from the biggest revenue driver will be from the spread ultimately, because crowdfunding at the end of the day is the last mile financing platform. So looking at that kind of trend, and also another trend in the big market would be the B2C play on the banking side will come very quickly, and then all the big boys are coming in. So at the end of the day, now the theme is actually going to B2B banking, right? The SME banking and stuff, which is a more fragmented and more, I would say, vertically focused. So looking at that trend on the fintech industry itself now, how do we see it on the Islamic? So there's a gap between the adoption on the conventional fintech and Islamic fintech. What I see, the gap is actually getting shorter. So the expectation to catch up is actually there. So like, for example, for us in Indonesia, for the B2C play, we're launching our digital bank called Hijrah, hopefully by end of this year, inshallah. And the reason why we decided to go for B2C is because there's none serving the market, right? But then if there's like more competitors coming here, then we need to go push on our B2B side. So I think the Islamic fintech space going forward will more or less follow the fintech industry in general. Now, the only thing is the differentiation, right? So I think social finance is something that is close and ingrained within the model of Islamic finance itself. And this is something that is, I think, different than the conventional finance. So this would be something that could differentiate and eventually lead to a blue ocean for Islamic fintech players, and really distinct itself from the fellow conventional. Hence, the economic benefit when it comes to the business model will be there. So that's what I think. Unless the Web 3.0 will come, and that would probably change the whole thing. But from Web 2.0 perspective, I think that's going to be the trend.
Well, thank you very much for sharing all of you your thoughts. Now that we covered like the current status of Islamic fintech, what you think the future will look like, I think it's important as well to talk about each of your respective countries, because one of the most, I would say, interesting things about an event like this one is precisely the fact that each one of us either comes or is based in different countries. I mean, I'm currently based in Spain. Kemal is based in Oman, Dr. Dalal in Qatar, Dima in Indonesia. So I think this makes our debate much more interesting in this sense. And I wanted to talk about what current initiatives is your country, your respective country, working on right now in the area of Islamic finance and Islamic fintech. We all know, for example, that in Dubai, the IFC has been investing heavily into fintech to spur the growth of the Emirates Islamic finance industry. But what other initiatives each of your countries working on right now? Let's start with this time Dima, for example.
Yeah, I think for Indonesia, the Indonesian government over the last 2 years come up with the special committee to accelerate the growth of Islamic finance and halal economy called KNIKS. And I think the major breakthrough that we have in the market, for better or for worse, is the merger of the state-owned Islamic bank from 3 big banks into 1 bank. So the rationale behind that is that with better capitalization, then it can now serve like corporate clients, for example, which traditionally hasn't been really touched by Islamic finance. At the same time, solidifying the branding for like 1 mega Islamic bank in Indonesia. So that's one. And second is they're trying to come up with a halal industrial zone as well. I think that that's still in progress. And the decentralization after our reformation, it also helps towards this initiative. Like we have Aceh, the region on the north of Indonesia that implementing Islamic law within that province. So all of the banks that is non-Islamic needs to go out or convert into the Islamic banks in Aceh. Now the West Sumatra is also trying to convert the regional bank that they have into Islamic, followed by the 2 other provinces, Riau and West Nusa Tenggara. So we're seeing the the dual approach between the central government and regional government, or like the US States government, is really like helpful to really push the adoption and building the infrastructure for Islamic finance in Indonesia. On the technology side, there's more and more initiative. We have the Association of Islamic FinTech in Indonesia. There are more members coming in every year, and I think the alignment with the ministries are there as well. So like the central bank come up with the Islamic Indonesia Sharia economic festivals every year, supported by any other line ministries. So I think what's unique in Indonesia, I think my last point is that a lot of the initiative is actually not top down, but more bottom up. So I think traditionally in Indonesia is always like that. So we think it's healthy because it's really driven by the market demand rather than the government direction. But obviously, if the top-down approach works, I think that will be great and even accelerate things faster. Thank you.
Thank you. What about Oman, Kemal?
Hi. Okay. Interesting point from Dima. In terms of Islamic finance, now Oman was one of the last starters in the GCC. We only started Islamic finance in basically in 2013, developing it over the last 9 years. But I think even if you look at some of the international Islamic finance reports, I think Oman has actually made a lot of catch up and able to learn from some of the challenges which has been happening in the global landscape. And you would see that it actually started from bottom-up approach. So again, the demand for Islamic finance came from society wanting it. It was not done on a policy basis. So that started Islamic finance. But at the same time, looking at the fintech side, that's also a top-down approach whereby there are policies in place, and that's where we have the Oman Vision 2040 and also the Oman 2030 digital strategy, which is actually encouraging digitalization and innovation for the country. So those two are the key roadmaps in wanting to pursue this further. So while you have Islamic finance, which was actually came up from the demand from the people themselves, but at the same time, yes, some policies have been put in place. And in order to push that further in terms of the fintech side, that's where you have both the two roadmaps, Oman Vision 20 and Oman 2030 digital strategy. Now, where it comes in and it's relevant to, because at the end, I mean, Islamic finance, fintech, cannot actually operate, in silos. So you need to connect it back to the economy, and that's where it plays a major role in actually developing the economy and society. And you've seen as part of the diversification program in the GCC, for example, again, because there were the oil crisis when prices were down. So I think all GCC countries were looking at diversification. And one of the key aspects also was one of the strategies here in Oman. Certain sectors that we were trying to diversify away from oil, looking at manufacturing, tourism, logistics, fisheries, mining, and all that. So when you diversify the economy, that includes building up the large SME-based entrepreneurs here in Oman within those economic sectors, and then spreading the wealth to all segments of society, and hence promoting financial inclusion. So, and that's where Islamic finance, both conventional and Islamic finance, plays a major role in trying to provide that alternative financing platform for these businesses to flourish, especially the SMEs. And that's where we are trying to actually basically develop that base. So we've introduced, and one of the key aspects, and that's where I may differ with, I think, what Dima has mentioned, whereby, well, we have introduced one of the key things, which is crowdfunding and pushing towards Islamic crowdfunding. I would not say it's a last mile, because it's actually one of the ways in order to provide that alternative financing platforms for companies, especially small companies like SMEs, to raise the funding. Yes, you may have banks, digital banks, but then again, this provides an alternative financing platform for these companies to actually gain access directly to investors without having to go through a banking intermediary, whether it's conventional or digital banking. So those are the things that we've introduced in place, especially we were pushing towards crowdfunding. And in terms of rules, I would say, and because we've done our benchmarking when we actually introduced it, it's actually the first in the GCC to allow global cross-border fundraisings and investments within the GCC, where certain countries still do not allow that within the GCC. And through that, we are also looking at also regulating certain extent virtual and digital assets, because that could also be another way to provide an alternative financing platform. For example, real estate tokenization, which I've just mentioned, in order to raise funding for real estate development. And for social financing, that could be addressed through crowdfunding, whereby, I mean, for example, Ethis has a global Sadaqah platform, which actually relates to social financing also. So these are the things that we are currently doing here in Oman, Aurel.
Thank you, Kamal. And well, at last but not least, what about Qatar, Dr. Dalal?
Yes, actually, Islamic fintech is a strategic focus area in Qatar as well. And we've noticed that in the recent ranking, actually, of countries with more than $1 billion, dollars market size in terms of Islamic fintech, where actually Qatar ranks among the 11 top countries. And the drivers for that has been the mobilization, across 4 key, I would say, pillar areas. So number one is really to create that conducive environment for fintechs to develop their business and also to scale it up. And that includes the funding aspect, but also the mentoring aspect. So there are various incubation, acceleration programs to promote, the Islamic fintech's development, and also to support them in scaling up their activities. And among the incentives, for example, we have, for example, the Qatar FinTech Hub, which supports, the expansion of local and international fintechs. So for the first cohort of the Qatar FinTech Hub, for example, included 24 fintechs, with 11 in the incubator and 13 for the accelerator program. And for example, qualified fintech, let's say applying for a Qatar Financial Center business license, would be eligible for waiving both their application fees and also their first year renewal fees.
as well as a complementary access to there's a fintech circle at the Qatar Financial Center where basically fintechs can have the opportunity to benefit from a number of facilities to develop their activities. So there's a dedicated internal team that supports, for example, fintechs in terms of market and investor access under the Qatar FinTech Hub. And the second pillar would be actually access to talent. And, this is one of the key challenges globally, not only for the Islamic financial industry, but for the global fintech industry as well. And I think here the role of, for example, the private market organizations, but also academic institutions is very critical in this regard. And I think at HBKU, we've been pioneer in terms of revisiting, for example, our Islamic finance programs to integrate dedicated electives, modules to fintech, and also to integrate some of these considerations that we have been discussing, across the different courses, for example, at the programs, but also to expose students to latest developments, either in their research or also in terms of the interaction with the industry. In terms of the market awareness, as you know, we have recently established a GIFT chapter in Qatar, and that would be mainly focusing on the promoting digital sustainable finance in the region. But we have also launched a GIFT research working group, which will be kind of the research arm of GIFT. And the idea is that to also promote awareness and capacity building for both private market institutions, but also among policymakers to create more awareness in terms of Islamic finance development and also, to promote innovation. And the third pillar would be to actually, supporting that innovation awareness pillar is really to promote the development of an engaged customer base. And that is to ensure the sustainability of Islamic fintech startups, which will depend, of course, on enhancing, for example, security issues, user convenience, customer-centric innovations, etc. And finally, to promote more partnerships so that that is to support actually fintech scale up their businesses. And I think we do have the same trend as I think Dima mentioned, the consolidation of the Islamic banking segment. We witnessed that as well in the Qatar with two recent mergers between conventional Islamic banks. So that creates better capitalized institutions, and that would also support collaboration between financial institutions and also fintechs. And finally, I think also to promote partnerships, we have created an Islamic finance task force at the level of the Qatar Financial Center. And the idea is to bring together the key stakeholders in the country and then to promote innovation to further develop, for example, capital markets. One of the key issues in general in the GCC is the underdeveloped capital markets. So we're looking to use fintech as an enabler, for example, for the development of Islamic capital markets. I think I'll stop here. There are more things to share, but just for the sake of time.
Well, thank you very much for sharing. And given that we only have like 2 more minutes before finishing this panel, I would like to ask you one final question, which I don't think you are going to be able to, to solve like each one of you individually. So maybe just 1 or 2 panelists should focus on this one max. And I'm going to talk about technology. How do you think Islamic finance and banking can leverage the use of technologies like blockchain or artificial intelligence? So whoever wishes to reply, please in 1-2 minutes or max.
I don't know. Anyone taking this up? Okay, if not, I'll go ahead first. But perhaps Dima is working in the industry, and Dr. Dalal could actually add then further. Just coming to your question, Oriel, about sorry, was it how do you think Islamic finance and banking can leverage the use of technologies like blockchain? Well,
Yes.
On the capital market side, we've seen a lot of applications from players. Particularly on fund management, on the issuances of fixed income, coming in to actually introduce certain unique products. because at the same time we are going to introduce a form of a fintech sandbox here also in Oman. For example, some of players were actually coming into to actually using artificial intelligence to introduce a form of robo advisory when actually dealing with the clients in their fund management business, especially portfolio allocation. So it was quite interesting to see all this. As a regulator here in Oman, we regulate both capital market and also the insurance sector. You're looking at certain applications being used, especially for the takaful side, introducing smart and secured contracts automatically through applications for insurance and takaful, which is actually some of the things that the market players are looking at. At the same time, having blockchain to enable a secure transaction and also smart contracts for crowdfunding. That's one of the key areas that some of the players are also looking at. And also on the other side of it, which relates to payment system. So the question of CBDCs, central bank digital currencies being used as a form of payment. That's something that is being explored, especially for investment or payment to merchants. I think those are some of the things that we've been seeing within the industry here in Oman. And I believe that's also happening globally outside in some of the areas, both on Dr. Dalal or Dima's side. So I let them expand that further.
Well, thank you very much, Kemal, for sharing your thoughts. Unfortunately, we are running out of time. We are reaching the end of this panel. So
okay.
I would like to thank all of you for participating in this panel, Dr. Dalal, Dima, and Kemal. And also I would like to thank, of course, all the audience for listening to us. I hope you got to learn as much as I did by listening to our esteemed panelists. And well, if you have any further doubts, feel free to write them on the chat box or reach out to us afterwards. So, Angel,
Hi everyone, we are going to start very soon. My name is Mushir Ahmed. I'm the co-founder of the Virtual FinTech Forum, VFF Events, as it is known now, and also the founder and MD of FinStep Asia. One of our speakers, Terry, is just experiencing a little technical issue because of Zoom events being buggy today. Might be the storm in Hong Kong. Terry, may I ask you to just switch off your video and then switch it back on? That usually works for us.
Okay, let me try.
Voila, magic,
okay.
Right? The good old trick of switching off and switching on always works in most electronic items and softwares, so to keep in mind. So onwards into the panel. Firstly, to all of our audience who stayed through the day since 10 a.m. this morning, Hong Kong time, to now we're at close to 6:30. So thank you for staying through. We've had tremendous response due to the wonderful insights our thought leaders have been providing, over 1.3 million cumulative views. So I want to thank everybody who's done this, especially my team who has been working quite hard towards it. Our big shout out to our supporters and sponsors, Invest Hong Kong and Start Me Up HK Festival, along with Amazon Web Services, plus our supporting partners, Hong Kong U FinTech and SCF FinTech Academy and Hyperglade, who incidentally have helped us issue a sustainability-linked NFT, which is looking at the carbon footprint of each city. So all the delegates who registered will be getting a complimentary NFT post the event. So watch out in your mailboxes for that. Now, without further ado, I want to jump into the topic, right? Today, for the last panel, we'll be discussing on a very important key topic that has come up in the last 2 years, but something that has an impact on our existence, as it were, and more stark as we see climate impact increase. So the topic is on about sustainable finance and how fintech can enable green finance, right? Fintech for ESG and sustainability is a key theme of our event. So we will be having 4 industry leaders distinguished in their own spheres who will be taking us through different elements of how fintech can actually enable green finance and make that transformation possible for a sustainable planet for all of us to the maximum possible, right? So I would now request our panelists to kindly introduce themselves, starting with Shinshu, please.
Thank you, Mashir. Ahmed, I'm sorry. So I'm a managing director and partner based in Hong Kong with the Boston Consulting Group. So I have been working with financial services for more than 20 years. In particular, in recent years, I've been leading the technology and digital advantage practice area in Greater China with BCG. So we have a lot of hands-on experience with fintech as well, green financing. So very happy to be here, talk about all of these, I think, quite innovative questions.
Thank you. Ayaz?
Yes, thanks, Mushir, and hi, everyone. A pleasure to be here. My name is Ayaz. I've been in the fintech space for the past 20 years. I've been focusing more heavily on the nexus of fintech and sustainable development in the past 6 to 7 years. And I am currently with the United Nations, both UNDP and UNCDF, leading a global program on digital finance and fintech innovations and the SDGs. So we look at different ways in which fintech innovations can have accelerating effects and impacts on social, economic, and environmental SDGs. And I am strongly focusing on the environmental side, which is going to be very interesting to discuss today with you. So happy to be here. Thanks, Mushir.
Thank you very much. David, on to you.
Hi, Mushir. Thanks for having me. First, I hope that everybody stays safe. I heard that Hong Kong is under the typhoon, so important to be said. My name is David Pardo.
I'm based really quickly overnight, so
I know. I saw the recent announcement, so that's good news. My name is David Pardo. I'm based in Singapore. I've been also around 20 years, earlier stage, working in scale-ups, in product and operational role. I then moved into building my own startups of tech platforms, and I've been a sustainability consultant for the last 4 years. I've recently joined Moody's earlier this year to build a startup engagement program specifically focused on ESG and sustainability.
Thank you, David. And last but definitely not least, Terry.
Hi, everyone. I'm Terry, based in Hong Kong. I am with Kogo as a business development manager of Asia. And Kogo is on a mission to empower hundreds and millions of individuals and business worldwide to understand, reduce, and offset their impact on the planet through their banking partners. And our behavioral science-backed insights and nudging drive actions, which is the sole and very important pillar of Kogo. We deliver actions, not only encourage them to commit to climate actions, but also driving them to adopt sustainable finances, products, and also green services as well. I'm very glad to be here with a very strong panelists, and hoping that we will have some very useful and insightful sharing in the coming half an hour. Thank you.
Thank you so much, all of you, for that wonderful introduction. I'm going to dive into the theme, right? Green finance has been around for a while, nothing new, but we've seen this shift where not only sovereigns, but companies and large organizations are focusing on it. And we're now seeing regulators also looking at that space as well. So in your opinion and what you're seeing in your fields and across, if each of you could share your thoughts on why has this increase happened in the recent few years, what has been driving that? Yeah, that's probably where we can start off with. How about we start with Shin?
Absolutely. From what we can see in the industry, I think probably the primary driver for all of the the rise in green finance is regulator. So many of the companies that I've been working with, the first motivation is definitely the regulation. So the awareness, and everything, the new regulation that we need to be compliant with. But on top of that, I also noticed that in particular in the leadership, in particular in the current generation of the leadership in many of the large companies, the leaders started to be more and more conscious about the green concept as well as the ESG concept, in large sense. Therefore, I do see a lot of corporate leaders started to embed the green financing, green investment, as well as ESG in the day-to-day operation. So it goes beyond, for example, just the offset of carbon emission. It goes into how can we make the day-to-day operation, how can we make our work, our product more green. And also there are a lot of ideas coming up, from there. Little by little, I start also to see the rising consciousness in, I would say, in consumers. It's coming. It's probably not the biggest driver, but it is coming. So people, for example, in Hong Kong, in Singapore, in some of the large cities in mainland China, we do see, in particular, the younger generation becomes more aware about how important to preserve, the nature, and also to have a more greener life. Even, for example, in BCG, as of today, I guess many of the panelists have a life as consultant. Consultants have to travel a lot. So here we promote the green way of traveling, and that's the way for us to change the world from a macro perspective.
Thank you, Shin. I'll now ask Ayaz for his view on the same topic, please.
Yeah, thanks, Moshe. So I'll actually emphasize a couple of points that were mentioned by Chin. I think, first of all, there's, of course, the central importance of political processes. And obviously, the Paris Agreement is one clear manifestation of how important those political processes are globally to really drive that change and that transition towards greener finance, in a sense, and environmental outcomes. I guess the public engagement part and the raising awareness is, I think, something really, really important. I don't think sustainable finance and green finance can scale in the long term without substantial public engagement. And there's a raising awareness amongst people around the impact of nature, impact or the contribution of nature and the impact on nature of the buildings we live in, the digital gadgets that we use, how our pension funds are being invested and where they get invested, et cetera, et cetera. And so I think that awareness and that sort of really growing engagement of the wider public, particularly in relation to climate change and biodiversity, is something that's really pushing the needle and pushing the agenda in terms of how quickly we're going to be transitioning towards green finance, because policymakers are responding to this, a number of activist groups are responding to this, and of course corporates as a result are also starting to respond to this. So I think all this combination of different forces, from political forces to changing corporate sensitivity around the topic, and a major, I would say, awareness in the public domain and major public engagement processes are really driving the transition and accelerating this.
Thanks. We got two views of how things have evolved. Terry, coming to you, how do you see, like, leaving out Kogo, but from a personal experience as well, why has green finance picked up? What do you feel, having been in the field for a while?
Cannot agree with my panelists, fellow Fed panelists more. As we are seeing in Hong Kong, just the past 6 months, we have banks offering green loans, green mortgage, green credit cards, and also and even green incentive program, working with others commercial green retailers as well. So we are quite obvious that consumer, their daily spending are now taking into a very dominant pictures of a lot of banks and commercial entities as well. And the other observations we can see is SME. So Scope 3 is now getting more important in the reporting of corporations, and their SME suppliers are now getting into these sustainability reporting pictures as well. So a lot of SME is now looking for solutions that can automate and also record and monitor their own carbon performance in a way that they want to have a minimal investment, have a recognized and comparable result to present to their investors as well as their buyers as well. So consumer and SME is quite neglected in the past few years, but now coming into pictures in the sustainable economy. So we are hoping that now the corporate is dominant in taking all these reporting and also TCFD, but in the future we believe that these two upcoming sectors will contribute a lot in this landscape too.
Thanks, Terry. David, from your perspective, how have things evolved? What do you feel, in addition to what we've heard, anything else that stands out for the drive or prominence?
Yeah, I'd agree with my co-panelist as well. I think the one that I've seen also is COVID as an accelerator, I guess, more at the personal level, particularly in younger generation where there's a lot of soul searching going on, particularly when we work from home and are remote in our organizations. It's been an acceleration, at least in networks, of people try to basically move towards something that has a bit of a mission and purpose-led with their corporate life or with their work-life balance and stuff like that. And so I do think it has been, at least in Asia, a key accelerator in the last few years.
Thank you, David. Moving on to the next question. Now we've looked at green finance, and now the topic is about how technology and fintech can actually, increase that prominence. So looking at the key technologies that are being adopted in green finance lifecycle, as you have an experience in working with that, both at the UNDP and other UN organizations, but also over the last few years. So would you want to highlight some of the key technologies that are being adopted in the green finance lifecycle?
Sure. This is a very broad question, and we don't have so much time. But I guess a useful way of looking at it would be to say there's a huge demand out there for carbon offsets on one hand, and there's a huge surge of innovation in the nature space for nature-based solutions for carbon offsetting. And so technology is sort of a very helpful bridge between these two worlds in a sense. And so in that space, you see a lot of use of technology for creating innovative financial instruments for how to better invest in nature. We see that happening with a number of nature-backed security tokens or nature-backed digital assets. We see a lot of work around the tokenization and securitization of the value of ecosystem services delivered by nature. And so I would say there's a whole range of innovation in the DLT space in how do you actually provide investable financial instruments and securities to the financial community to invest in ecosystem services and funding those ecosystem services. So that would be sort of one area. There's of course a lot of innovation in the NFT space to be able to mobilize capital and deploy capital towards nature conservation efforts. And then of course, all of that, in addition to financial instruments, will require proper monitoring, reporting, and verification of impact. And so there's a whole range of innovation also happening in the digital MRV space, so to speak, in terms of using GPS devices to track specific species, in terms of using satellite imagery to track specific species and ecosystems, in terms of the use of IoT and connected devices, remote sensing technologies, of course, all sorts of sound scrapers and soil scanners. And by sound scrapers, I mean general acoustic technologies, all of that combined with the use of artificial intelligence to be able to properly monitor the impact of mitigation activities and be able to report them back, get third-party certification, and get some sort of equivalence in terms of carbon credits. I would say both in terms of innovative financial instruments, but also in terms of the monitoring, reporting, and verification, there's a whole range of technologies being used. Maybe the last thing that's sort of really interesting now, if I have a few more seconds, is that now we're starting to also see new developments in Web3 and in the metaverse. Because one of the things that the metaverse is actually starting to pick up on is how do you actually connect the physical world to the virtual world in many different ways. And one could imagine all sorts of things. One example is in the gaming space, where you have now new ventures at the nexus of gaming and nature that engage online communities of gamers to actually start solving nature-related problems and biodiversity conservation problems. And what they do online in the virtual world, in the metaverse, gets then translated into real-world action and changes into the real world through investments made from the profits generated from in-game transactions. So this is just sort of the beginning of the trend, but we see also the metaverse and Web3 in a way playing an increasingly important role potentially in the future. We need to obviously drive this, but these are sort of the range of technologies that we are starting to see being involved now at this point.
Thanks, Ayaz. Shin, in your perspective, what are the key technologies that you have seen and also dealing with in the space?
Mm-hmm. I would like to probably take a view from the application perspective. So when we try to tackle the issues around or the development around green financing and all the relevant investment infrastructure issues, we have seen a number of key problems which makes the industry not yet mature. So probably the very first thing you have probably seen that in many other spaces around how can you identify and how can you certify a green assets, like how can you prove that what you are doing is actually produce the offset of carbon emission. So that's very simple question and a very basic question, and that's probably the basics to create a assets, for further investment, for exchanges, etc., etc. So probably the very first question to solve is around identify and certify. And secondarily, when we get further into the investment space, a lot of, I would say, real issues or doubt are around. For example, if there is a forest counted as an offset of carbon emission, for example, in Malaysia, how can we ensure that it is not double counted for two investors around the world? How can we ensure that one single asset is only registered for once and only sold for once? So I guess that's one other issue we need to tackle in the whole value chain. And of course, each investor, for example, if they want to buy, quota to offset the carbon emission, usually they come from different purpose. Some are more from, for example, the real offset purpose they want to buy. It's the role of treasury. Some else rather play a role of probably PR, marketing. So how to make sure that for one particular asset, different buyers with different purpose will pay the same price, hence the transparency, to define the price of a single asset. So these are very pragmatic questions and scenarios that we have encountered when we help our client to build up infrastructure for green financing and green investment as well. So I think all the technology which can help us tackle this issue can be applied. So namely, for example, IoT, blockchain, big data, as well as AI. So all of the technology can actually help us when physical check, physical certification is required, but then technology can probably enable and facilitate that. So I think when we talk about the technology supporting all the green finance in broad sense, we probably need to think more from the application, the use case perspective.
Yeah, it's a good combination, right? As talked about the technologies and talking about the application, the BIS Innovation Hub for Hong Kong, where I'm a consultant handling the project on green finance. What we have done last year was to tokenize green bonds, but this year we're actually using smart contracts and blockchain with IoT to track green projects output, and then also use the smart contracts for issuance of carbon credits. Mitigation outcomes as they are known, right? So there is that they're doing POCs now, and hopefully there's going to be more mainstream applications in the coming years. And taking that forward, right? How are we seeing fintech play a role in this, right? Is it driven by startups, or are large corporates also deploying tech? Terry, your views on that? How's Kogo been handling that?
Sure. Yes. Kogo is definitely hoping to play a important role in contributing the green environment and also green economy, because we believe that as a climate tech or climate fintech, we want to facilitating and helping the corporates or financial institute to roadmapping their developments of green economy, and that will be our ultimate goal. And I believe that should be the ultimate goal of all the fintech players in the ecosystem. And we want to increase the carbon literacy to make sure people, top leaders, government officials understand what is about the carbon impact, what is that equalization means to them, what is the meaning of flying a trip to one city to another, and helping them to quantify this kind of impact and make them understand. And when I was also looking at the TCFD framework, I understand that it's also a highly important role of governance in the corporation, and of course that means the people in this organization, they need to understand that they need to be able to set appropriate policies, and this kind of understanding will be you will need times and also a lot of engagement, a lot of education, and I believe fintech will be able to play that in that role, because that fintech is always easy to approach, easy to understand, and also is accessing to everybody daily. So with that, I believe the governance and factors will be one of the key contributions of how fintech can help with the development of green finance, and of course about all the others technology that my fellow panelists mentioned. AI, machine learning, blockchain is already taking shape in these sectors. I believe that is also one of those important points that the technology is trying to helping the deliverables in the green finance ecosystem.
I was coming back to you, right, on top of what Terry's added and what Shin was mentioning as well. Any use cases that you've seen in the last few years? In our previous conversation, we've had a couple of use cases that I love, especially the elephant as we were looking at in terms of tokenization. But would love to hear some of those from you, please.
Yeah, of course. I mean, so you're asking a fintech person. So first of all, I'd be very biased in terms of the role that fintech plays, right? I mean, fintech is playing a significant role. And before getting into the elephant use case, if you just look at sort of how global card networks, for instance, are trying to engage their users with the carbon content of their transactions, with the plastic content of their transactions, with the water usage content of their transactions, they obviously rely on fintech partners to be able to deliver that. When you look at the way in which financial institutions are trying to now include nature-related risks and nature exposure of their investments into the financial decision-making processes, they're relying on fintech platforms to be able to actually do that for them. So in many ways, I would say fintech is playing a significant role, but of course, fintech needs a marketplace and they need the financial sector to start engaging with them to be able to direct and channel greener finance towards nature and towards climate. And so fintech is obviously a key component of the solution. There's a lot of other examples that are really more organically fintech. When you think of nature markets and how to build nature markets, and in particular, for instance, in the conservation space, if you're thinking about, as you were referring to, the conservation of, for instance, elephant herds in West Africa, one can think about ways in which you can measure the ecosystem services rendered by these elephants from, as a biomass themselves, but from the ways in which they actually fertilize the ground, from the way in which they maintain the savanna by eating the acacia trees and leaving space for larger trees to grow, and all sorts of other things that elephants do. There's ways in which you can start thinking about valuing this, tokenizing it and securitizing it on the blockchain so that you can start creating a market for corporates and financial institutions, but also individuals to buy into these tokens. And the proceeds of the tokens can then be reinvested into projects that really strengthen local communities, engage them, onboard them as agents of conservation, but also really pay for conservation efforts in conserving and restoring the elephant herd. So those kind of models are starting to emerge. And of course, they rely on a range of technologies, as I mentioned before, from blockchain to MRV systems, but they rely on fintech startups that are independent and that are able to build a solution for that market to start emerging. So there's a lot of, in the context of nature markets in a broad sense, with the supply side of money and the demand side of money, there will be a lot of fintech platforms in between actually building those solutions to really connect money to nature-based solutions, as I was saying before. And this is a space where fintechs will be playing a significant role in actually making this happen. So yes, definitely there's a centrality of the role of fintechs in that space, and in particular in creating those very complex markets in a sense.
Thanks, Faz. And look, I think blockchain keeps coming back as one of the key elements. Lastly, and I think I want to distinguish here in terms of speculative crypto or digital assets was the use of the underlying technology, which is what we're all talking about, right? Versus other applications, legit and otherwise, right? David,
Absolutely.
your views on the use of blockchain for carbon markets or in general, how has the carbon markets grown, including blockchain-based carbon markets like ACX, etc.? How can fintech support?
Thanks for the question, Moshe. So for me, it starts with the issues at hand, right? I think we're all kind of well versed into the debate that is going on around carbon markets specifically, and the polemical debate around that, right? So the first thing is trust. We're talking about, establishing systems of no fraud, make sure that the projects are real, make sure, to Tin's point earlier, that the double counting is essentially measured and managed. All those things are things that were So that's one of the issues. The second that I kind of foresee in the space is the supply and process specifically around carbon is too small to satisfy the ambitions that we'd have to have true carbon offsetting of the large majority of the large polluters. To a certain extent, I think technology can offer some solutions to those issues. So of course, double counting in global ledger that is transparent, that people can kind of refer to, that would be collaborative and essentially open by default, should help us essentially create the transparency and the reliability that the market itself requires for some of the double counting issues that we have seen. In my mind, that goes without saying that technology has to be going hand in hand with something else, which is the credibility of the players, the transparency and the trustworthiness of the players going into the market, both on buyer side, on management of the blockchain, on awareness, on validation, on the technology reliability. Specifically, we're looking at a lot of new methodology to come online to validate some of those carbon projects around real-time data and stuff like that. A lot of the debates that has been around wildfire, well, yes, what do we do if some of those projects that were bought in the first instance went literally into flame and smoke, right? And so we haven't considered for some of those use cases to essentially come online. We're now at the stage where the technology kind of approach not only blockchains, but generally the visibility that we should have on those projects and the assessments of the project themselves should help us understand and build a better future for the carbon markets exchange programs generally and the marketplaces so that we have real tangibility and real trustworthiness within the market. Otherwise, the risk is that this market is only going to be a representation of something fraudulent or hot air. And I'm worried about that.
Yeah, we don't need too much hot air in general, literally as well, right? Shin, coming back to you, we actually this conversation started with you talking about carbon markets and blockchain, but I want to hear from you, adding to what David has mentioned in particular about the carbon markets. We are seeing a lot of efforts to, let me use the term digitalize, right? Carbon markets, from even if you drop out blockchain, many of the exchanges are looking to use that. And there are other means of chasing the carbon markets. We just saw, European carbon credits crossing 100 euros for the first time recently. So we are seeing that moves in terms of value where people are trying to look at this carbon credits as a market, but in terms of the value of the market, I would love to know your thoughts on what is the key elements to be considered from a technology perspective for these carbon markets and what use cases do you see besides what you've discussed?
So our team have done a very interesting forecast about the carbon market. So we try to adopt different scenarios of 1.5 degree and 2 degree, and we try to forecast how much, for example, if we want to reach the target of 1.5, how much carbon offset is required given the current status and how much will be available as supply on the market. So the result in brief is that we do see a pretty important gap between the supply and demand, meaning there is less available carbon assets on the market to be sold to achieve that offset target. And so we started to think around that. Basically, one way to create supply and also to match with the demand is probably to create a market where we can make all the possible assets, transferable between different markets. And actually, blockchain is a very good tool to digitalize different assets in the, assets lifecycle management. I think as of today, people have consensus that by using blockchain, you can probably convert one of the assets from one exchanges or one place, and then place it on the other market where you can find the supply, the demand, sorry. So basically, blockchain would be one useful tool to help fill in the gap. And on the other side, I quite agree with David, all the things that he has mentioned around certification, around anti-fraud and everything. I mean, blockchain has significant use cases around that. But on the other side, I personally also admit that given the technology is of today, there are still limitations. So if the trading, for example, if we take carbon trading as an example, if the trading frequency and volume goes up very quickly, will the current technology be able to support that frequency? I guess that's still one open question. Yeah.
Thanks. Look, this has been so insightful. We're having different viewpoints. We're looking at how United Nations looks at it. We're looking at how each of you have experience in terms of the industry applications, as well as what startups are doing in it. And I think that's the most we could probably achieve in a 35 minutes to 40-minute panel. So what I'm going to do is I am going to throw the last question to all of you in terms of if we had to expect what fintech could do in the green finance space in the coming 5 years, what would be your major expectations? Maybe your top 2 expectations per speaker, and and then we can wrap up after that. David, let's start with you.
The top 2 is very difficult, Moshe. I had a long list, so apologies for that.
Okay, I'll give you 3. Let's go with 3 then. Yeah, one.
No, I'll try to stick with the brief. So I think the first one that I would say is specifically on connectivity. So in my mind is, look, we can't solve this problem by ourselves. I feel the supply chain itself, we're all oriented towards the same goal of having a very large collaboration mesh network of data sharing for ESG assessments generally, but have visibility on all of the supply chains. It's going to be dependent and demanded by some regulation. And in my mind, I think that's probably a foresight that we have to kind of prepare for, is to essentially have some way of monetizing this thing. But even if it's not fully monetized, it's going to be through collaborations of efforts of data connectivity to essentially make sure that we understand how our supply chain are connected. And not only that, but the players and or the products and transactions as part of that supply chain and how they contribute to have a better view of our world, right? Specifically around carbon and social impacts and stuff. That would be my first one. The second one is I have a big dream, I guess, on try to essentially offer I guess, substitutes to most of our products. I feel like at the moment it's a choice of weak solutions, in the sense that we always have to debate if it's a carbon price that needs to be included to essentially offer substitutes that are competitive. Is it going to be through carbon tax or something else? In my mind, is I would like to kind of see a space where we end up where we always have a choice between options that are fully sustainable, that are fully tracked, and some that are not, and ideally with a price parity. And then we'll see how fast we can accelerate our true transformation towards sustainability. So that would be most of my 2 biggest points, I guess.
I'm going to come. I want to ask one more thing from you, because we had planned it, and I'll take that minute extra, and hopefully all the other speakers are fine on time. Is if you could pick one major gap that we're seeing in green finance, like green fintech, when it comes to enabling that, right? What would you say?
I actually don't think it's a technical gap. I think it's probably more a collaboration gap. At the moment, we're trying to compete a lot on some of those things to try to find monetization path. My assumption is at the end of the day, we are going to have to, because nobody can address the supply chain question by themselves. And so in my mind is, why don't we accept that fact and start to actually accelerate more collaborations around data sharing generally? So that would be the main gap in my mind.
Thank you. Teddy, over to you. 2 things that you feel are the future of fintech in green finance, please.
Yeah, I believe the biggest enemy we have at this moment is inactions. So I hopefully in 5-year time, everybody will be carbon conscious or green conscious. So every decision they are making will be well informed with their carbon impact or climate impact in purchase, daily life, even commercial, of course, and that will be my dream. And collective action, just as David mentioned, is the key. No one can tackle this problem alone. We need everyone, big guys, small guys, individuals, government to work together. And I believe that with the regulations is now getting in place, and and technologically, we are also getting there as well. And hopefully, carbon literacy in the coming 5 years will improve as well. So by that time, I'm quite sure that we will see the light in the end of the tunnel.
Thanks, Terry. Shin, coming over to you. What are your 2 picks for future of green fintech?
I will probably come with just the one because the other panelists have already, said a lot of good things. I think the real efficiency. I mean, given the the development of fintech over the last few years, I have been observing the industry very closely. So I think one thing we need to address for the industry to be sustainable is probably create real value. And what I see is, for the whole green finance business, it is important to have the solutions address the real issue, different frictions over different markets to quantify impossible, unquantifiable things. So I guess a lot of issues is around creating pragmatic solutions and create value. And only by that we can build up a real market. So I guess that's my expected value creation for green, green fintech.
Thanks. As I'm going to give you the closing statement, as it were, what's your view on where green fintech lies?
That's a lot of responsibility. But listen, since my comments were essentially on nature, I'll give a slightly broader ESG perspective. I think one is there's a huge need for automating disclosures and ESG disclosures and reporting for MSMEs around the world. We know how important MSMEs are to our world economy, and we know how costly and expensive and cumbersome ESG disclosures and reporting are. And so I think fintechs focusing on automating those disclosures and the reporting will really go a long way in unlocking finance for MSMEs. That's one important area. I think the whole discoverability issue, discovering green investment opportunities and matchmaking between investors and opportunities is going to be a key area. And the last one is coming back to the elephant thing. I think every fintech has an opportunity to actually really sensitize their audiences and their customer base and build awareness by really bringing the real world and nature and biodiversity into their user experiences in ways that help their users connect with the real world and with nature in new ways, in a more personal way. And each one of these fintechs has an opportunity to actually really then drive actual real world action from that engagement. So I would say I would really invite all the fintechs to take this at heart and make those connections, build that awareness, and really drive real world impact from their businesses and how they can engage their online audiences.
Perfect. My view on this is the future of green is blue, in the sense that there is, we don't really talk about blue finance and blue fintech, but that is something that will play a big role. Water and the ocean is a major factor in regulating temperature, as we've heard, and we are seeing methods on how that could be possibly pushed. So thank you so much, all 4 of you. Very, very insightful. I learned a lot today, and I hope our audience also have gained some tremendous insights. So thank you, Shin, David, Terry, and Ayaz for this contribution to VFF 2022. And I take this opportunity, thank you. I take this opportunity to firstly thank our wonderful audience, not just in Hong Kong. We've had 60 plus countries, audiences joining us from 60 plus countries, including a tremendous response from mainland China, where we've reached almost 1.4 million cumulative views for the event today. So beyond our wildest dreams in terms of expectations, so very delighted. Of course, the event's big heart was the support we got from our main sponsors, platinum sponsors, which is Invest Hong Kong and Start Me Up HK Festival, and then our bronze sponsors, AWS Hong Kong, of course, with the support of Hong Kong U FinTech and Hong Kong U SCF FinTech Academy and Hyperglade, who are our NFT partners. I would also want to take the opportunity to thank all of our other media partners, our community partners, and most importantly for me personally is my co-founder, Sherry Shi from Nastria Media, who has been a pillar and been the main driving force for this event. Our team has been tremendous. Vineet, Angel, Asim, Natalie, Anastasia, Ruby, I may be missing a few names, Clarice, Mokshita, and everybody else has put in tremendous effort in putting us through, and I appreciate all they have done. But thanks once again, everyone. And we will be following up with more details on recorded sessions for everybody to view post the event, and look forward to you engaging with VFF events. So good night and take care. Signing off.